HDFC Bank, because Avni's top pick is also the heaviest weighted counter on the Nifty and the Bank Nifty. It's opening 42 rupees lower at 1600. This will improve for the better. What's doing well? It's TCS, 2% higher, 43.73. Let's look at Infosys, another index heavyweight, 9 rupees higher, 0.5% uptick, 18.17. And what about the big boy Reliance? Reliance for the moment is right there in front of you, 3012, 11.6 rupees higher. A very quick look at what's happening in the NSE 500 space, and then we'll head back to our guests. It's a really important day for markets today. Coforge came out with its earnings today. Initial reactions are negative. The counter is down 10% at 54.68, but this will improve for the better. Federal Bank takes it away, 5% higher, record high, 204. You have a green tick on Suzlon, 5% higher, 57.83. NMDC, Canfin Homes, Wipro, Natco Pharma, all up between 3.5%, 5%. We'll wait for pre-open to settle. It's a more important day for guests, and I believe Mr. Manish Dangi, CEO and founder for Mosaic Asset Management, is with us. A very good morning to you, Manish. And I went through that lovely 6-paging document that you sent us in terms of your thoughts and expectations from the budget. Let's start right at the top. Your expectations on the fiscal deficit number. Do you think the government has enough fiscal space to be both populist as well as prudent?
Hi, good morning. So, yeah, there is a bounty of about 0.5% of GDP, which is pretty significant. In numbers, it runs into 1.5 lakh crore. And that could be deployed in doing everything that you need. 1.5 lakh crore, though for a very large economy, is not that big, but still can do magic. So it can be populist, and it can certainly consolidate a little more than what was told to us in Feb budget. So both are possible.
Okay, so you are referring to the extra dividend that the Reserve Bank of India has given to the central government, plus buoyant GST, buoyant income tax numbers, as well as on the corporate tax part. What, according to you, are 2 or 3 pain points that the finance minister has on our radar, and she'd like to address them in the forthcoming budget?
I think, the biggest pain from a budgeting exercise is that Indian nominal GDP growth has actually slowed. Considerably. Now, see, for instance, understand that, let's say, even after GFC, which is 2008 crisis, India had a major fiscal response, but the public debt to GDP did not rise because the nominal GDP was in teens then, because inflation itself was in teens, actually. And therefore, what happened, of course, is that even after a very high fiscal deficit for a couple of years, we had high inflation, high nominal GDP, and therefore debt to GDP came down. Now in India, after the COVID, our response wasn't as big, and but it was in the form that inflation stayed relatively depressed. Therefore, GDP's rise in nominal terms was not as substantial.
Okay.
And debt to GDP actually has stayed high. So it was 72% before COVID, and now it's 82% and stagnated there. So I think from a major macroeconomic challenge, low nominal GDP growth and high public debt to GDP is the reason why, finance minister will not have a wiggle room at any point in time, let's say if there were to be another crisis, So that sort of would, if I were her, I would always be worried that, do I have space to actually re-stimulate it just in case of a need?
Okay. Ladies and gentlemen, this is the biggest day for the budget, and the best lineup of speakers is with us. It's a crisis of plenty. Welcoming Devin Choksi, Devin Bhai, MD at DR Choksi FinServ, and of course our very dear friend Manish Sonthalia, Chief Executive or Chief Investment Officer at MK Investment Managers. And within the studio, we also have Sakshi getting mic'd up. Devin Bhai, coming to you. What are you looking forward to in the budget? It's going to be a balancing act. Do you think populism will win, or will fiscal prudence and the way the budget has been done for the last 3 or 4 occasions will find more support amongst bureaucrats and politicians. What's your thought?
Yeah, good morning, Shail. Well, I believe that I think the name of the game here would be the consistency and the growth. This government has demonstrated incredibly high amount of will to basically pursue the path of growth, and that's what I think one is expecting out of this budget as well. Economic survey has given couple of statements I think which are very clear as far as the intent is
Sakshi, I'll
concerned.
come to you.
They want to bring the fiscal deficit back to 4.5% by FY26. So, which means that interim budget, which projected at 5.1%, is basically being brought down in 2 years' time to 4.5%. Does mean that I think they are significantly counting on higher amount of revenue on one side, and also they would probably be expanding larger amount of infrastructure projects I think which they have committed for. But in the most important statement along with that is I think they want to invite public-private partnership, which means that government is very mindful about I think stretching their financial resources. They do not want to unduly stretch the financial resources. At the same time, I think they want to invite the global capital, both in form of debt as well as in equity. And that is a reassuring statement as I see it currently. So in my viewpoint, I think the allocation of money as a priority would go towards infrastructure, where about I think 12 and a half like crore kind of a budget allocation would take place from interim budget of around 11.1 lakh crore. And at the same time, I think the PLI based manufacturing for
Yes.
Make in India program at the same time should be, I think, be given the larger preference with newer industrial segment, I think, getting included into PLI, including the chip manufacturing, among others. So I think to a greater extent, we believe that I think the spending on infrastructure, spending on manufacturing, and spending on agriculture largely to create high amount of I think dependency on the food security business. So there the
Right,
program is
sir.
likely to be on the agriculture side. So we are clear about I think the job creation also simultaneously due to all these three focus areas.
Okay, 60 points higher on the Nifty, and infra is in top shape. Ultratech up 1.5%, Tata Steel up 1.2, NTPC 1.2, BPCL adding about a percentage point. Sakshi is with us. Good morning.
Good morning, Shail. You know, I was there, and good morning to Devin Bhai and also Manish joining right in. Warm welcome to both of you yet again. I was at the India Today studio since 7 a.m. and you know, they had this tagline that they were flashing: Naukri, Nifty and Nation. That is what they expect the budget to really focus on. And I want to understand from you, Devin Bhai, Naukri, Nation, Nifty, क्या चलेगा इस बार के बजट के बाद?
तीनों तीन चलेंगे, उसके अंदर कोई चिंता करने का जरूरत नहीं है, क्योंकि जैसे अभी हम बात कर रहे थे कि the amount of job creation which is basically expected out of all the three programs which the government has possibly emphasized on, be it agriculture, be it infrastructure, be it manufacturing. In each of the three programs, I think the underlying assumption is that the government will end up creating the larger amount of jobs, which is also being emphasized in the survey yesterday. So I think from a perspective of I think looking at the budget as a balanced one, I believe that it will lay down the path for next 5 years easily, which would possibly be continuing on the program that they have already announced. But at the same time, they are expected to increase the PLI bandwidth to a greater extent, I think including some other sectors in allocation of money therein. So that is one area which I believe going to be taking the prominent move from the government side. As far as I think the Nifty is concerned, Nifty is a byproduct of I think the government's economic policy and the outcome out of that. So Nifty, even though there may be some sort of correction here and there, would probably show higher path going forward in next 3.5, 4 years time, wherein one could expect that in 5 years time, I think Nifty could be doubled from current level than what it is at this point of time. So certainly, I think we are expecting both the Naukri as well as the Nifty. I guess I think both of them are probably taken care of, I think, in the course of time by the government's policies.
Right. Manishji, let me bring you into the conversation as well. Tell me, what could be a make or break in this budget and in this budget speech for the markets, for the economy?
I don't think there is a space to do a lot of break now. at this stage. Of course, for equity markets, disappointment could come from in the form of capital gain tax. I think there will be disappointment. But for economy at large, and I think the macro is chugging along. You got one of the best macros since early 2000s.
Yes, correct.
Less than 1% CAD, run rate of core inflation at less than 3%. Fiscal deficit. We're arguing that the any shadow fiscal deficit is negligent. PSU entities are not borrowing, so there is a lot of space almost everywhere to actually raise money. So in a sense, budget typically is a revenue versus expense, and I guess there is enough revenue flowing in to spend. And
I'll interrupt you just for 30 seconds, Manish ji. That's the finance minister showing us the Bahi Khata, the tablet in the red cover, visuals coming in from North Block outside the finance ministry right here. She's also clad in white and red with that red cover of the tablet complementing her as well. Smiles all the way. The entire team that has been behind the construction of the budget this time around. You do see key finance ministry officials right here, right behind her. All smiles and confidence displayed on their faces. You have some important people right there. CEA V. Ananta Nageshwaran. You also have the Secretary Finance, Dr. T.V. Somanathan, Secretary DEA Ajay Seth, Secretary Revenue. You also have Sanjay Malhotra, Chairman CBDT, Ravi Agarwal, Chairman CBIC, Sanjay Kumar Agarwal, all of them behind Finance Minister Nirmala Sitharaman, and the wait is only going to be much shorter now for us to really see the budget speech at 11 a.m.
Right, ladies and gentlemen, and from here the Finance Minister proceeds to the Parliament, where she'll present a concise copy of the budget proposals to her cabinet members and of course to Prime Minister Narendra Modi, and then we'll see her proceeding to the main hall of the Parliament. But till then and now, we have Mr. Manish Sonthalia joining us. He is the Chief Investment Officer at MK Investment Managers and a very long-term watcher of the markets. Good morning, Manish. A very warm welcome on Market Today. A couple of sectors you think will be benefited from the budget speech about 1.5 hours from now?
So I think a fine balancing act is required between capital expenditure and revenue expenditure. I think some measures to have some money in the hands of consumers is the need of the hour, and there'll be a lot of proposals that would be watched at primarily from a taxation point of view, because that would imply leaving some money in the hands of consumers. So some increase in the exempted tax slab would be watched out for. In terms of housing, I am expecting some big announcements, because government has actually alluded to the fact that affordable housing, which is PMAI, would get a good boost. Apart from this, capital expenditure would include your flagship expenditures in, let's say, railways, defense, infrastructure, renewables, power. These would be par the course. I mean, it's very much expected that there will be an impetus given out. But key to watch out for would be some of these sectors, basically your industrials, would be your consumption, housing, infrastructure. These would be some of the sectors to watch out for.
Right. We'll also get into the conversation with Manish Tangi also right here. Manish ji, as the markets have settled, 1 minute to go for the markets to open, all the sectors into the green. So we are going into the budget speech with a high hope right there. 0.25% uptick on the Nifty and about a 0.4% uptick on the Nifty Bank. You tell us 3 key sectors that could benefit the most from the upcoming budget, and anywhere that you could actually see, an adverse effect coming in.
So I think from a theme standpoint, I agree with Manish that it's likely that incrementally an impulse for rural versus urban, and a proxy of that will be FMCG over discretionary. I think global cyclical slowdown outside of US has already played out significantly. I think global cyclicals such as IT would do better than local cyclicals. So my portfolios, would invariably somewhat different from say right now people who are actually thinking super India bull, because I'm watching as you said, Revex in India for last 2 years has been growing at only 4-5%, delivering very low core inflation. That typically historically has hurt margins. Now hasn't happened so far, but it is a harbinger of a possibility that eventually margins will cave in. So which is why, the places to hide in India are these, non-discretionary FMCG staples, global cyclicals and such likes, instead of sort of super local businesses like discretionary and industrials.
Okay. Sakshi, what we'll do is we'll just pay attention to the markets a bit. Remember, they're likely to be flat till the speed starts, and flat as flat can be. 58 points, a green tick on the Nifty, 24,564. Nifty Bank is up 100 points. The IT index in the green, as is the Nifty 500. Let's look at some stocks. HDFC Bank down about 4 rupees at 1638. Reliance at the moment is clicking 6 rupees higher, 3006.4. And what about Infosys in the green, about 2.6 rupees higher, 1814. It's a nice green tick. All 10 index heavyweights on the Nifty are right up there. Let's look at the ways how the most traded are tracking, and at the moment we'll try and pay attention to the PSU basket. You have RVNL clicking it up from the railway side, 1% higher, 629, 630 now. All of them are there. HAL, BHEL up about 1% each at 5,024 and 314 respectively. You have all the favorites, Sakshi. IRFC up 1.5%, Cochin Shipyard up 1%, Mazgaon up 2.6%, Railtel adding 538 at 2% higher. You have HUDCO as well, 0.5% higher. Again, ladies and gentlemen, it's going to be a PSU day, and apart from the 4 indices that we had mentioned, of the 19 we track, all 19 are in the green. Let's look at what the NSE 500 is doing. 23,000 right there in front of you, up about 0.2%. Advanced decline is fairly good. 1,400 shares in the green, 470 in the red. Coming to Manish Sonthalia. Manish, you've mentioned housing as one of your favorite sectors. Within the infrastructure space, a lot of expectations that the 11.11 lakh crore allocation that happened last year will see an augmentation. Any favorite stocks, sectors or themes that you'd like to play out on infra?
I think, it would come to power as a major theme in the infrastructure space, which will require a lot of boost. Because if we are growing at 6.5-7%, we need energy security, and given the data center proliferation, etc., we'll be guzzling a lot of power, and probably in terms of securing that power requirement, I think a lot of impetus will be on renewables and the power space as a whole. In terms of the others, which is basically your defense and railways, it would be a continuation of what has been alluded to in the past. Allocations would be watched out for, and obviously the allocation to capital expenditure will depend a lot on what the revenue expectations are for this budget, in terms of what the real GDP plus the inflation, in terms of what the multiplier, in terms of how many times or what percentage of GDP growth will translate into revenue growth by way of taxes. That is all the maths that needs to be watched out for, and obviously one needs to keep an eye on the fiscal deficit. 5.1 is what the markets would like. Anything more than that is not warranted and would not be liked. So all this fine balancing act would be keenly watched.
Right. Let's get in Devin sir into the conversation. Devin sir, do tell us, what is on your top expectation? You may be looking at a wide sector-wide expectation, overall economy-wide. We've been discussing capex, infra outlay, everything. But what is your one topmost expectation from the budget?
Well, I think undoubtedly within the infrastructure space, there is going to be, I think, emphasis coming up more on the front of the power generation, that too within the renewable power. The focus would be on green hydrogen because India promises to be the world capital of green hydrogen with its electrolyzer technology adoption, which I believe is going to play a key role in bringing down the cost of the power. So government's focus for 2029 is going to bring down systematically and structurally bringing down the cost of the power. So that's where I think the larger amount of allocation of money towards the green hydrogen program, which the government of India is basically wanting to carry out. And at the same time, I think the PSUs and particularly the oil PSUs are the ones who are likely to be allowed to set up their own companies or subsidiaries within them, for which I think this particular program will be carried out. So we are looking at, I think, the PLI allocation also on this particular front from the government. The second most important area where we see the distinct amount of possibility is inland waterways transport facilities, wherein I think the shipbuilding and inland water transportation is going to be given the extremely high amount of weightage. And that's where the allocation of money could increase along with, I think, the other areas which we have seen up till now. If in the previous cases, I think they had spent significant amount of time in creating the freight corridor, I think this time around it's going to be the turn for some of the inland transportation on the railways front. That's where I think the larger allocation of money could take place. So keep watching out for a couple of these announcements as they see, I think, happening in this budget for the infrastructure segment in particular.
Okay, let's get Mr. Dangi his thoughts on the markets. Manish, a huge amount of run-up has happened, and we'll show you sectoral performances. The worst performing sector is FMCG, and even that index on a half-year basis is up 7%. Forget the rallies that we've seen on PSUs, on realty, on oil and gas, all up between 35 and 42% over the last 6 months. Now, as a stock picker, because all of us have to make money at the end of the year, where is your focus so far? You've mentioned in your document that your research team is looking at specialty chemicals, but this is something that you don't understand on your own. Nevertheless, let's hear it out in terms of stock picks.
No, I would talk stocks, but in general, my view, and there is a conflict here because, people who watch technicals in my team, the ones who understand the micro dynamic of markets kind of see no reason to yet take a call that this is it. There is still very, very buoyancy that they can spot in the market in terms of volumes and the way vols are. And the way, though I have to admit, and they themselves say that, the breadth has been reducing underneath, there is a turmoil in the market. And in a sense, what you invariably get from all investing teams, including mine, is the rotation that, anything that hasn't done well in last few months would potentially do well. Primarily, this happens, Chief, when there is a flood of money coming in and you're literally, as a fund manager or analyst, looking for a next opportunity, which you actually don't get in absolute terms, but invariably find that, okay, something that hasn't done well will eventually catch up. And this is how the chemical business also is being spotted by my team. Of course, last few years, pretty much like some of these private banks, IT, not done well. And, likely that there could be a mean reversion in terms of performance because rest of the sectors, most of the market otherwise are sort of super overheated. So it's a mean reversion trade.
Yeah.
I personally, as I said, I like global cyclicals and I like defensives in India, and FMCG happens to be one of it, which will actually at least defend well in case there were to be an Indian cyclical slowdown over next 6 to 12 months.
Okay, so the mosaic of the market, ladies and gentlemen, is in a shade of deep green, and that's simply because the monthly FII numbers, the very strong inflows of SIPs, ultra HNIs, HNIs and retailers hunting on a minute-by-minute basis to punt on markets. Now, there is a crisis. We have two Manishas on the screen, so I'll stick to surnames. Coming to you, Mr. Sonthalia, you've been a stock picker. We've been speaking to each other for the last 3 decades or so. and you've created enough and more wealth for all your unit holders and PMS customers. Where is your sight and what is on your radar?
I think one space which is quite overlooked and I think is not yet priced in, is the housing space. It has gone through some correction, and I think this year, housing as a theme would be performing, and all aspects of housing, whether it be finance, housing finance, whether it be cement, whether it be tiles, plyboards, paints, etc. I mean, you can take your picks in each of these spaces, but I think this is one theme that needs quite a bit of watching. And the second is basically your BFSI. I think there will be some announcement when it comes to the problem of deposit mobilization, ATC deduction, etc., which was taken away, might come back because, the sector is grappling with shortage of deposit, and of course it's quite an undervalued sector, so to speak. If India has to grow at 6-7% for the next 5 years, you can't imagine that if there's not smooth flow of credit through banks, and if LDRs are a constant concern, then those targets would be quite difficult. So from that point of view, I think banking and housing, these would be the two themes that I would be watching out in the budget very, very closely. Rest of the sector, there will be allocations, but capital goods, defense, railway, they are priced to perfection for the next 5 years of earnings, I would believe.
Okay, I'm going to continue with my gentle coaxing to get both Manish's, Mr. Dangi and Mr. Sonthalia to come up with stock ideas. But meantime, we'll have Sakshi on the main screen. And ladies and gentlemen, there's going to be a plethora of data that Business Today Television has prepared for you before the budget comes online. And there she goes.
Absolutely, Shail. A whole host of numbers that we'll be watching out for in the budget speech. Of course, the first one will be on the growth figure, on the GDP factor. Already in the economic survey, a 6.5 to 7% expectation has been set. But if we look at the kind of figures that we are looking at on the GDP front, I will just show you on the budget dashboard that we prepared for all our viewers. You remember from the time of COVID-19 when the GDP had crashed, we've actually seen a stable economy emerging over the last few years. We are at a stable footing at 6.8%. Remember, we got that big, bonanza figure of 8.2% for FY24. Now the expectations are set for 6.5 to 7 odd percent. But the big question right now is that this growth in the economy, the big criticism that the government has been facing is that it is unequal. You do see a K-shaped recovery that's been happening, and that is one thing that the government really needs to address, whether this will be an inclusive growth that they will actually propel with the upcoming budget. The second important figure that we are going to be looking at is also from the inflationary aspect as well. Remember, inflation has been sticky. Food inflation is something that is worrying the government at this point in time. They really need to come out with the agri reforms, something that can improve the agri infrastructure, the warehouse facilities, the storage facilities, the way the climate change is impacting harvest season, unseasonal rainfalls. That is something the government will really have to take note of. And because you've been seeing that the inflation has been inching down, can it cool off further is something that we'll be watching out for. Again, the government is very, very comfortable as far as the tax figures are concerned. Both on the direct side, there has been a comfortable inching from last FY21 to almost FY25 estimated. Look at the 22 lakh crore rupees odd that is expected in the upcoming budget as well. We are already at 20 lakh crore rupees, both on the direct as well as the indirect side. These tax collections are pretty buoyant as of now. The tax to GDP ratio also shows a continued stability at around 11.7. The big question is, what will the government really do of this revenue collection, of this tax collection? Now, will they deploy it meaningfully back into the economy, get the ball rolling and get the economy back on the glide path as far as the growth is concerned, Shail?
That, ladies and gentlemen, was the pictorial representation of what you might just see discussed in the forthcoming budget speech. Let's head back to the market. Flat as flat can be. Nifty up just 16 points. 10 points up on the Nifty 500. The bank is doing 64 points higher, and I'd just like to mention 4 stocks that have hit record highs. Federal Bank, ladies and gentlemen, 2.8% higher, 198.3. Godrej Consumer Products, 1474, 0.5% higher. The general insurance space is lit up by ICICI GI, 1904, up 0.5%. And from the specialty chemical space, we have PI Industries, 3994, up about 0.3%. Mr. Dangi, coming to you. This wonderful article of faith that retailers have put into the government as also the stock market is this SIP number now touching 21,000 crore rupees a month. Do you see this accelerating, and do you at the same point of time see this as keeping valuations frothy and fund managers such as you on their toes to pick up outperforming stocks?
This is the inertia, this is the momentum that market has right now. Investors have figured out a place to make the decent amount of wealth, and therefore it will continue. The way to assess whether it will continue or not is whether policymakers would respond against it. So see, look, it has come to a point where RBI, SEBI, even FinMin officers, yesterday Anand made this points that, look, we need banking deposits also to grow because it's an important source of capital. Now, I do not agree with this that capital markets and banking actually compete, because principally all the money in the capital market still sort of go, spill back into the banking, and therefore the deposit creation or deposit growth has got nothing to do with high SIP numbers. But be that as it may, the reality is that today the entire policy ecosystem is telling you that there is something excessive happening right now and must be sort of tamed. Now it's likely going to happen in the form of doing something to break the FNO bubble, but all you know is that some other measures are also taken, because I think there is a bit of a discomfort here.
Right. Mr. Sontalia, let me come to you now. I want to really understand, there is an argument going on that whether the government, which has now more money in its hands thanks to the collections on the taxes front from forex reserves or from the RBI, how should the government be really using this? Should one really look at a complete reduction on the fiscal deficit part? Will that make the markets more happy? Or should this money be deployed to spur consumption that has been faltering as of now? Where do you think the markets will be happiest, and how the money is deployed on this front, sir?
Markets would definitely be happy if the fiscal deficit target for FY25 is kept at 5.1%. Obviously, government has to do a fine balancing act between revenue and capital expenditure. Markets won't be pleased if the numbers go beyond 6, and that was the last year's figure. But I don't think there is any requirement for that sort of fiscal deficit to be maintained. We are in good times, and I think the government should use that opportunity to bring down fiscal deficit targets in line with the FRBM Act. In that backdrop, I think some leeway in terms of relaxation of taxes for the middle class would definitely help and cheer the markets, because there'll be more spending that would happen. Consumption does require some boost. The rural folk, the middle class, the urban middle class are all reeling under the yoke of inflation as well as high taxes. So some leeway out there would be very, very helpful from a sentiment point of view. And at the same time, I think to propel capital formation, the momentum, as has been seen in the economic survey, capital formation at 9% incremental last year was very good, and I think that momentum needs to be maintained. How the government is going to balance disinvestment, because there have been some statements that we are not looking at disinvestment, no need to form targets because you really don't collect anything. So I think that is another space that would be needed to watch. Non-revenue receipts, which is basically a capital receipt. How the government is going to fund non-revenue receipts. So I think this is where the entire focus would be. And in this whole backdrop, some announcements on housing would also definitely help.
Right. We'll also get in Mr. Dangi into the conversation now. A big thing on everybody's mind right now is whether there could be any tinkering of taxes on capital gains front or on F&O, something that has been spelled out by the SEBI chairperson and yesterday in the economic survey as well. Do you expect to see some tinkering on that fact? And in case something of that sort comes, how will the markets react to it?
So I'll be surprised if nothing is there. It's just that, these two are conflicting choices, doing capital gain tax as well as FNO. So I guess if the primary function is to sort of tame the speculative activity, given the fact that near 90-95% of the people end up losing money in those trades, unskilled that they are in this craft, I guess something ought to be there. And then that does not sit really well with higher capital gain tax. So I guess if something will be there, more likely towards FNO. It may very well be handled by SEBI, and a general sort of a remark could be there from Finance Ministry as well as an instruction. But I would be very surprised over the next 3 months, significant measures of policies are not rolled out to tame the FNO activity in India.
At that point, Sakshi, at this point of time, we are the largest derivatives market in the world.
Yeah.
Even though the comparison between Indian stock markets and Wall Street is David versus Goliath, but that's the frenetic level of options activity that we are seeing in India. Staying with you, Mr. Dangi, one question that I have in mind is at the opposite ends of the spectrum. What are you not looking at in terms of creating value for your unit holders in the PMS scheme? And what are you looking at in terms of sectors where you are busy picking stocks?
Listen, as I said, at this stage, last time also we discussed, the most profitable trade in town is actually low inflation, low nominal GDP, and therefore low rates. And so it's very likely, in my view, that a long bond in India over the next 2 years would perform somewhat close or better than Nifty. That's my big picture view. Basically, a 10-year bond at 7% once bought, and if the rates head to 6% or below, which I think they will, in fact, they may head to 5.5%, you will end up earning 10-12%, and you're not going to earn more than that in Nifty. Second, I think that Indian balance sheet is a better place to bet on instead of Indian P&L. So corporate margins are at multi-year high. They will very likely sort of go down from here, and therefore there will be disappointment on that. But on the P&L side, but I think the balance sheets are so strong and they take a lot longer to decay. So a credit is a better way to play corporate balance sheets than balance sheets. So therefore, you can invest in credit portfolios. Sectors we've already discussed, so I won't repeat them.
Okay, that, Mr. Dangi, is enough fodder for the next interview that we'll be doing for you. Thank you so much for your time, and it's been an excellent 45 minutes understanding the best macro ever, and of course how to play it in the markets. We now welcome Mr. Mahesh Patil, Chief Investment Officer at Aditya Birla Sun Life Asset Management Company. Good morning to you, Mahesh, and a very warm welcome. Your first and two major expectations on the macro side as far as the forthcoming budget speech is concerned. How do you feel?
Good morning. I think today is the big day again, as the market expects. So I think in this budget, as what we saw in the interim budget, I think clearly, I think the path towards fiscal consolidation, I think that is clearly on the way. We don't see any deviation from that. Okay, I think that will continue. At the same time, I think we've seen the last 2-3 years, right, post the pandemic, the focus has been in terms of trying to stimulate the investment, trying to address, okay, the supply side, okay, of the market, because we had inflation also, okay, which was a big concern earlier. Now, inflation is thankfully under control. Okay, we're seeing macro stability. I think this is the time where the government could try to stimulate on the demand side. And we've seen that while the economic recovery has been good and the overall GDP growth, for last year was healthy, and this year also we expect around 6.5% kind of a GDP growth. There are a few pockets in the economy which are still yet to recover, and primarily on the consumption side, okay, which is still lagging probably the pre-COVID trend which was there, while investments has caught up with the pre-COVID trajectory. So we could see the government trying to stimulate one is the consumption, especially at the bottom of the pyramid, right? Okay, in terms of some kind of tax cuts, okay, which could be there. Also, the rural economy has been recovering slowly, but not to its full potential. And some support to that, okay, could be seen in this budget is what I think. So a bit of some social measures, I think some balance, I think, okay, to have stimulate the consumption at the demand side of the economy could also be seen in this budget is what one can expect.
Right. Mr. Patil, very good morning to you. I want to understand one thing. Why this budget has a different context is because this comes right after elections where the BJP has lost majority. It is an NDA-led government. There are coalition pressures that they are going to be facing, which something was absent over the last 10 years of their governance in the country, where they have largely stayed on the fiscally prudent path. Will that change with the current budget? Do you see a risk of tilting towards populism at this point in time, something that they may have to even listen to the allies and their demands, something that may not be as fiscally prudent this time around? Is that a risk?
I mean, looking at what the government, the intentions are, and also in the economics, so I don't think the government will really budge from its path, okay, what it had chosen in terms of trying to ensure there's macro stability. And they did a good job both on the monetary as well as on the fiscal side. And I think will continue. The good thing is that this time around, the government has got some fiscal room because of the large RBI dividend which has come in, okay, which is almost this time it is 0.6% of GDP higher than what it was earlier. So that gives us some room for the government to really utilize that proceeds, okay, for doing some social welfare measures, okay, to bring some, as I said, to stimulate the consumption side. But apart from that, I don't think this government is going to deviate from the earlier path what it has chosen. I think targeting inflation, okay, which RBI has also said that, okay, will remain their priority. And I don't see that that should, election outcome also, while we've seen that the government hasn't come with an absolute majority, but clearly I think they are still a dominant force, okay, in the coalition. And while they will have to take up, okay, I think this time probably we would see, the budget, while we talk about the central, but the states, how they spend their budget, I think is equally important, right? So probably the devolution on the states, okay, one can see some increase over there. But I don't see any major risk to the government's path, okay, what we've seen in the earlier budget. I think it will probably be a continuation of that.
Okay, let's take this discussion a little forward, and in a while, a very dear guest and friend will be miking up in the studios. We'll introduce to her shortly. Till the time the mics and the earpieces are in place. Mr. Patil, I have in front of me your best performing and largest fund at the AMC, which is Aditya Birla Sun Life Frontline Equity. About 24,000 crores is what is managed under the direct plan. I'm just looking at the portfolio, and I look at very strong weightages on private sector banking. The guest before you was talking about the strong Indian balance sheet that is in place, and of course credit might be the best place to make decent long-term capital appreciation. Would you want to comment on the private banking space at this point of time from the point of view of valuations?
Yeah, so the banking sector, if you look at, has had last year was a good year for the banking system. We had pretty strong credit growth. Credit costs, okay, which is also another important factor which impacts profitability, was also at an all-time low. Thanks to the corporate balance sheets are in a much healthy shape currently at this point in time. We've seen the big deleveraging has happened in the corporate balance sheet side, and also the retail credit has behaved still very well, though there are some pockets, okay, where some caution has been raised by the RBI, especially on the unsecured lending, which is being monitored very, very closely. But by and large, we think that the banking sector, which is a proxy to the economy is likely to grow at a healthy pace. You would see steady, good credit growth. However, the large uh, margin improvement, what we saw last year, because in an environment when interest rates went up, I think that is going to slightly moderate. But overall, we see that the banking sector should do reasonably well. The private banks, okay, especially within the whole banking space, have relatively underperformed, right? In the last one year, we've seen the PSU banks do much better because they've seen a re-rating on the back of good numbers. Okay, we've seen good profit growth on the back of low credit costs. But I think going forward, if I take a slightly medium to long-term view, then the private banks have a better chance of compounding their earnings from here on. Overall valuations also, if you look at the large private banks, they are compared to the broader market valuations, which are slightly higher than the long-term average. I think for the private banks, it will be somewhere closer to the long-term average. So valuations are not really expensive, and overall, we don't see any major stress. Okay, either on the corporate side, even on the retail side. I think most of the private banks have been prudent in terms of managing the lending. They haven't taken excessive risk. So I would say that banking can be a sector, especially private banks, which can provide stability and can potentially outperform the market over the medium term.
Right, Mr. Patil, we'll also welcome into the conversation Mrs. Punita Kumar Sinha, Managing Partner at Pacific Paradigm Advisors, now joining in here in the studios with us. Warm welcome to you, ma'am, and thank you so much for taking the time out and being with us here in our Noida studios as well. What a pleasure. We've been always discussing with you across geographies and on the Zoom links. It's so good to see you in person and on such an important day. You tell me, what is your top wish list from the Finance Minister today as an investor and as a stock market advisor?
Well, first of all, I think I'm quite pleased with the state of the Indian economy in general. It's very buoyant, it's in great shape in general compared to what I'm seeing in other economies. So I'm not really perturbed by anything really serious. The only thing I would say is that the rural sector continues to not do as well. So anything to make the growth more balanced, so that the income inequality that has developed gets a little bit less unequal. So to focus on the segments of the economy that have been on the weaker side would be what I would think would give a longer term sustainable, better future for India.
Which are the sectors that you feel are going to be benefiting the most after today's budget speech is presented?
Well, it's very difficult to know what they're going to announce, but I expect that there will be some initiatives that will help the overall agri sector, the youth, the employment, skilling. Some emphasis will be put on those. So I think companies, potentially FMCG, anything in the agri space, maybe some of the banking sector may also benefit as a ripple effect. So I think that sector is likely to be more positively impacted, assuming that they do announce some SOPs for those sectors.
So two market masters with us, ladies and gentlemen, Punita Kumar Sinha and Mahesh Patil, discussing what the forthcoming budget speech might hold. And as you may have noticed that both ladies have hit a purple patch.
And you're in the pink of health in between.
I know, it's all the same.
You know, health is a touchy topic, but I'll still take it. So, Punita, a stock picker on my left, and Mahesh, another stock picker across the screen in the capital city with us. It's been a fabulous rally so far. Absolutely no points of complaining. As I have been mentioning repeatedly, the worst performing index is the FMCG index, and that too is up 7% over the last 6 months. Punita, to you first. You've always been a person who's deployed money in dependable long-term balance sheets where you see a margin of safety and you see a huge moat in terms of earnings. Even now, you see the large cap space which has relatively underperformed the fantastic rally. in mid caps and small caps. How are you hunting for outperformers in markets today?
Well, first of all, I think it's important to be focused on value.
Yes.
Markets had become a bit frothy, and especially in the mid and small cap segment, SME segment, the crazy flows and the deals that were happening. I think it was showing some signs of risk. I think that now one will probably see some rotation into value. Depending on the budget, there may be some more of a last gasp rally in mid and small cap if there is something very growth focused. But in general, I would say that we've already started seeing, as you said, FMCG, rotation into IT, rotation into some of the laggards. I think those are the sectors that would be safer at the moment, given the valuation disparities.
Okay. And Mahesh, I was just going through your top performing fund as far as the portfolio is concerned. Of the top 20 stocks, I believe at least 17 are Nifty companies. There's just one small cap, Crompton Greaves, actually mid cap. Is there a concerted effort on your part and your team's part to look for value and relative undervaluation in this market, which is rocketing on a daily basis?
Yeah, so I think the fund which you're referring to is primarily a large cap focused fund. So you would see most of large cap. We have some mid caps, but few. But there are two things what we are looking at this point in time, right? In terms of the strategy, clearly I think there has been some pockets of exuberance in the market. We have seen sharp rally in a few sectors where the valuations have probably gone ahead of our expectations and discounting too much this into the future. We are trying to be cautious over there. Again, within the mid cap, large cap space, if you are small cap, clearly the large cap stocks, the mega caps, is where we find relative valuation comfort, okay, in terms of risk reward. So our bias would be slightly more tilted towards large caps in the portfolio. That doesn't mean that we don't like mid cap and small cap, but becomes very, very stock specific over there. At the same time, I think this is a time to also play some contra, right? There are a few sectors, okay, which are probably underperformed because of whatever short-term concerns. And to the sectors, okay, especially if there are good companies in those sectors, is what we are looking at and trying to see if we can see a turnaround over there and trying to build exposure over there. So I think we've seen a large momentum trade play out in the market in the last 1.5 years, right? I think somewhere down the line, I think we're seeing it slightly try to be cautious over there, focus back on fundamentals and valuations, and find out relatively, okay, where one is seeing. I don't think there is absolute value in the market at this point in time, but relative value is what we are looking at and trying to align the portfolio over there. At the same time, also trying to ensure that companies we're investing into or sectors where the earnings disappointment chances are lesser, because I think at these level of market and stocks, where you see earnings disappointment coming, I think you will see the markets punishing them also equally harder. So I think that is what one needs to be careful at this juncture.
Okay. Mr. Patil, one more question, and that would be regarding those two runaway sectors, defense and railways. 2 lakh crore rupee market cap has become 18 lakh crore rupee market cap for these two sectors. And again, you know, in the upcoming budget, there will be certain announcements that will be made for these two particular sectors in the way of higher allocation and some more announcements. Do you think the prices right now that we have will get incrementally higher after those announcements, or are you thinking that this space could be much more frothy after the budget, as a lot more is already priced in?
Yeah, I think so. I think in the budget, we see a focus on infra and a lot of some of these sectors like railways and defense being talked about, but we don't see any major change in the trajectory of what the government has been doing in terms of the allocation over there. So I don't see any reason to be excited in the budget, okay, which can further increase allocations over there. Having said that, I think some of these sectors which you talked about, right, we have seen there's been a lot of expectations, okay, which have been there. Obviously, the sector has seen a good growth. Okay, there are, I mean, the outlook there is definitely better, but clearly valuations of some of the stocks have run ahead. So I think we're slightly cautious, okay, as I said, in sectors where there's a huge run up and the valuations are say about 2 standard deviations above the long-term average, I think one would not want to really chase them. But so I think I would say that trying to really play, because we see in the budget, I think people tend to overreact, right, on certain narrative which is there without actually looking at the number, whether there is any meaningful change, okay, which can significantly alter the trajectory. I think one has to really look into rather than trying to just go on the narrative and try to ride some of these sectors.
Okay, getting Punita into this conversation, every day when a long-term investor wakes up, Punita, he or she feels very happy looking at prices. You know, you sleep over and you realize that the portfolio is up 0.5%. It's a great feeling, but it's also a feeling where you have to realize that profit and deploy that money elsewhere for it to make more money. Now, tell us which part of your portfolio over the last 1 month or so you've booked profit and where have you poured in that money?
As I said, I think IT, FMCG,
yes,
right after the elections, I think that's a space that we've definitely seen more allocation to. And that, I mean, through the year, earlier this year, I mean, there has been some shift going back into quality and into more value oriented sectors, because this is a year of a lot of elections globally, yes, right? We've obviously seen elections in India, and that has resulted in not as stable a government formation as one would had hoped before election. We are seeing a lot of rhetoric and uncertainty in the US elections with what's happening with the Democratic Party. So, and whether we like it or not, India's growth story is great, but flows and markets are correlated. So if there's uncertainty in the US markets, which there is right now, there'll be more volatility, and that will definitely flow to India as well. It cannot be completely uncorrelated with what's happening in global markets. So to that extent, I think there is a little bit more uncertainty in the global situation. Valuations are much higher than they have been in the past. So given this kind of a scenario, it's better to be a little bit more focused on long-term, right, good quality, healthy balance sheets, etc., and not be a day trader doing just FNO.
Sure, absolutely. Punita, one more point that I wanted to discuss, since you talked about global markets, global scenario, very well linked world. Everybody is now looking at what will happen in the US elections. Is Mr. Trump coming back, or is it going to be Kamala Harris? What do you think, and what will be better for India?
Well, I think it's a little too early to say what will happen with Kamala Harris. She's just been announced. I think there's still people absorbing that news. I mean, it appears that Trump is leading at the moment, but there is still another 4 months into the election, and so anything can happen. And whether they'll be good for India or not, I think in general, both every party in the US and India is strategically very important, and so they'll both be good to India in general. Whether one will be marginally better or not depends also on their priorities. Remember that Trump is also very focused on stimulating domestic manufacturing, yes, in the US, and that could hurt some of our exporters as it did. So the trade dynamics could change with Trump, right, and that necessarily may not be better. It depends on how it pans out.
All right. Well, many thanks, Punita, for being with us here in the India Today studios on Business Today Television. And thank you so much, Mr. Patil, for your time as well, helping us understand, which way the budget could be shaping going forward from here. The entire day, viewers, we will be continuing to get you the top voices that you should be listening to assess how important is this budget going to be for you, for your investments. Stay tuned. The action continues in just a bit, and we'll take a very short break right here.
Sense how much of coalition dharma is likely to impact the first budget of Modi 3.0?
Thanks, Siddharth, for having me here. Let me say at the outset that the coalition politics that you talked about will definitely have its imprint on the budget philosophy that is being being executed, will be executed next week. There is no doubt about it. But let us understand also these coalition partners' economic philosophy, which are not very different from the kind of philosophy that the Modi government has been following. So I think apart from some allocation to be made to the Andhra Pradesh government or special dispensation to be given to Bihar or special welfare schemes keeping Bihar and Andhra Pradesh in mind, maybe addressing Andhra Pradesh demand for some sort of a refinery to be set up, or even transfer of BPCL, a partial ownership to Andhra Pradesh. These are some of the things that will definitely will see reflected in the coming budget.
The important macroeconomic point is that there needs to be a very clear continuation of this policy where infra investments continue to pump prime the economy. And therefore, I am expecting that on the basis of the last full year budget, I'm not talking about the interim budget, which I think was just a holding operation. As the last full year budget had allocated 10 lakh crores total outlay for the infrastructure sector in the union budget. And based on those trends and based on the macroeconomic requirements, I am actually hoping that the finance minister allocates 13 lakh crores this year.
I would hope that the budget would think of certain structural mechanisms to address these concerns. I mean, I think we need much more oversight on safety. We need much more oversight on looking at the design, looking at the construction practices. So I think some or a significant part of the budget needs to focus on this.
This is going to be a very important budget because in the interim budget, the Honorable Finance Minister had made it clear that the budget that would be presented in the next term would really lay out the roadmap for Viksit Bharat, which the Honorable Prime Minister has set out as a goal for his government and for India so that we can have a developed country by 2047. The roadmap for this is going to be laid out in this budget.
I think the government is in a very, very comfortable position. You will be in a position where you can reduce the fiscal deficit by 1 lakh crores or even more, because 1 lakh crores is just what the excess which RBI has given. There will also be money coming from other public sector financial institutions. That's one. You could also be spending it on social welfare schemes. Third, you could also be giving income tax concessions, something which is required if you want to spur consumption and savings. It will not be a big amount, but something which is definitely required.
I think there's also an underpinning of the tax buoyancy which is coming through with the finance minister, which means that the government's tax collections over the last year have been quite robust. And therefore, a number of reforms that took place in the previous years are showing results which are enabling the fiscal space for the government to be able to be more considerate towards the taxpayer community.
What's your own sense? How much of coalition dharma is likely to impact the first budget of Modi 3.0?
Thanks, Siddharth, for having me here. Let me say at the outset that the coalition politics that you talked about will definitely have its imprint on the budget philosophy that is being executed, will be executed next week. There is no doubt about it. But let us understand also these coalition partners' economic philosophy, which are not very different from the kind of philosophy that the Modi government has been following. So I think apart from some allocation to be made to the Andhra Pradesh government or special dispensation to be given to Bihar or special welfare schemes keeping Bihar and Andhra Pradesh in mind, maybe addressing Andhra Pradesh demand for some sort of a refinery to be set up, or even transfer of BPCL, a partial ownership to Andhra Pradesh. These are some of the things that will definitely.
Warm welcome to Business Today Television. This budget day, I'm Siddharth Zarabi, and with me my colleague, the editor of Business Today, Sourav Majumdar. You're watching Modinomics 3.0. Just about an hour left for Finance Minister Nirmala Sitharaman to present her 7th Union Budget, a record, as well as the first budget of Prime Minister Narendra Modi's third term. Lots of expectations as far as this budget is concerned. What will it do for the implementation of the Viksit Bharat 2047 vision? How will it boost sectors of the economy that need support even as it maintains fiscal discipline? What about the demand for changes to income tax as far as individual income taxpayers are concerned? What about many other demands that have come up in the run-up, including the political demands from states like Andhra Pradesh and now even Odisha, in addition to Bihar? On today's budget special coverage, I am joined by several guests. Sajid Chinoy, the Managing Director and Chief India Economist at JP Morgan. Very warm welcome to you, Sajid. Thank you for making the time. Abhik Barua, Chief Economist at HDFC Bank. Always a pleasure to have you with us. And Shankar Iyer, Political Economy Analyst, author and columnist. I will come straight to Sajid with that one question. Set up the macro backdrop of what the budget should really be all about as far as India's economy is concerned.
Thanks very much, Siddharth. Good to be here. So I think the macro backdrop is one where there are a lot of encouraging signs over the last 18 months where you've got 3 or 4 autonomous growth drivers that have come together, right? We're seeing the government's doubling down on infrastructure. We're seeing the housing cycle, unlike China, pick up in India. We're seeing banks, balance sheets are the healthiest in a decade. So credit growth is running much above nominal GDP. And you've got, service exports that are doing very well. So that's why there's this excitement, because you've got these different autonomous drivers. Now, what's the challenge ahead? It's the fact that a lot of the heavy lifting has been done by public investment in recent years. And given fiscal and given debt constraints in the coming years, the public sector will eventually have to recede. And that investment will have to fall on the private sector's lap, which is something the economic survey, I think, repeatedly pointed out. Now, the question is, what is the binding constraint over there? The good news is the supply side constraints over the last decade, high levels of leverage, stressed balance sheets are behind us. Corporate balance sheets are very healthy. And in my mind, the constraint goes back to demand, right? It goes back to pushing up those utilization rates above 80% so that there's a trigger for more private investment. Now, this won't be easy in a world in which China is sitting on massive excess capacity. And that excess capacity is being exported, that deflation is being exported right around the world. And India is no exception to that. So the challenge before the budget is, how do you in the near term reduce deficits to ensure that debt remains sustainable over time, and yet sow the seeds for more structurally boosting demand? This will mean, what can we do on employment? What can we do on making our economy more competitive so that over time, both private consumption and exports become more durable sources of demand? When the private sector sees consumption and or exports picking up, then you have an incentive to invest, and then you get into a virtuous cycle. The last thing I'll say, Siddharth, is I think compared to February, however, the government's entering this budget with enhanced fiscal degrees of freedom. There's about 0.5% of GDP in revenues, RBI dividend and tax revenues that the government had not envisaged back in February. So you're in a sweet spot here where in theory the government can increase expenditures, possibly cut taxes, and further reduce the deficit. So you've got that extra 0.5% to play with.
Abhik, I want to come to you and then get Shankar and Sourav in as well. Sajid spoke about that sweet spot and some extra headroom available. Is therefore the government's challenge not to raise the revenues because public demands that it at least lower certain taxes?
Well, there's always a public demand to lower taxes. I think there's
nature of public, but I mean, there are other, there are various, expenditures to be accommodated if we look at it from a political economy perspective. Some of the states who are where the state governments are allies at the center are demanding transfers, whether that'll be a large one-off transfer or whether it'll be in bits and pieces. One doesn't know, but I think there are a lot of things that need to be accommodated, and not stray from this path of providing support to public investments until there are more definitive signs that private investment picks up. So I don't think the additional sort of headroom created by the large dividend from the RBI and a couple of other things necessarily sort of dilutes the case for aggressive revenue mobilization, and that means that the degrees of freedom in cutting taxes is limited. And broadly, our tax GDP ratio is low, and we'll have to sort of keep working towards it. A lot of it depends on the efficiency of the tax collection mechanism, but rates do play a role. I think if I could sort of just add a little bit to what Sajid was saying, and I absolutely sort of concur with his diagnosis of the macroeconomic situation and the challenges going forward. I think one of the things that the economic survey yesterday brought up, and here are some of the more difficult trade-offs that are involved in going forward, is how we treat China. There are the political issues, security issues. On the other hand, on the one hand. On the other hand, you have this problem of not being able to, with China sitting on very large manufacturing capacities. If you don't kind of plug into the China supply chain and kind of stay away, how much traction can you get on exports?
Okay.
So I think there are very, very difficult choices to be made going forward. Maybe the budget will not address all of this. After all, it's sort of a bit of a short-term fiscal document, but it does have sort of a vision that it invariably presents. And I hope some of these difficult challenges are kind of alluded to, at least in today's budget.
Sourav, the point that Abhik makes, that he hopes that the government does not stray from the path of driving capex to lift the economy. You agree with that? And the signs from private sector investment growth, do you think we'll hear Nirmala sort of indicate the roadmap where the heavy lifting is not only done by the government of India?
Well, Siddharth, if you see what the economic survey said yesterday, clearly it talks about private sector now having to step in more and more and more across the chapters. Across chapters, it talks about the private sector and its role. Having said that, I think, like Abhik said and Sajid before him, I think there is a certain leeway which the finance minister has in terms of giving, striking a balance between capex, which I don't think, if I remember the finance secretary giving us an interview in the magazine not very long ago, where he said it's probably, reached its peak, how much heavy lifting the government can do. Yes, because, there might be a little more, but I don't see. So there, and the leeway will probably have to be now looked at in terms of some welfare spending, the revenue expenditure side. So that is the deft balance. And remember, Siddharth, it is not a usual context. The budget is not being placed in a usual context. Here is a coalition government now, and there are pressures and pulls you and I are both aware of. So that is also a context which this budget will have to be mindful of.
Let me take that point to Shankar. Shankar, just a day before the budget, we heard from sources in the ruling establishment and about how there is no concept of a special category that is left anymore. And we heard from the sources that no additional states are currently being granted special category status because the Constitution of India does not provide for such categorization. This is indicative because it just comes in the run-up to the budget. The broader question, Andhra Pradesh, Bihar, Odisha and their demands. Do you think Nirmala Sitharaman and Prime Minister Narendra Modi are going to use the budget as an opportunity to address them, or will it be left outside of the budget to tackle?
Well, the budget is basically a document of pious intent. I don't think the government needs to sort of specify on this aspect. I think they will take the committee approach, and then there is the Finance Commission to offshore the issue to. While the government might say that there is no such categorization of special status, the Andhra Pradesh government is walking around with the document which they say it has some leverage on, which is the reorganization of it. Now, all of this conversation will happen till November, till the results of the next 3 assembly elections come, Siddharth. And that is where, as they say, the FNO market will open up and the hedging will sort of be called. Put and call options will play into the market.
Shankar, Shankar makes this interesting point of F&O. You brought that in because I wonder, Sajid, if we could come to you. The economic survey also made that point. The RBI and the SEBI have made this point about F&O and the risky bets that are being placed. Is there a broader message that is being sent out at the economy level by everybody concerned with regard to the markets and valuation?
I think the message, Siddharth, is that the economy has spent 10 years repairing balance sheets and the excesses of the last cycle, right? So it's taken 10 years for the economy to clean up bank balance sheets, for credit to start flowing again. Reserves have been built up. The current account deficit is benign. So we've really had to work over the last year to kind of institutionalize this macroeconomic stability. And the job of a regulator, of a central bank, is to take away the punch bowl before the party starts. So I'm very glad that this is being flagged repeatedly, because you don't want to reach, if it's idiosyncratic risk, it's one thing. But if it reaches a certain size and volume, then we've seen from the last 20 years globally that the spillover effects can be fast, can be uncertain, and can be places you least expect. So I think it's important to, disincentivize this behavior. We don't want a situation where, having worked so hard, you've got excesses building up in parts of the system. And the issue here is what the world is seeing is very often these risks are offshored away from bank balance sheets because the better regulated parts of the system are very closely watched. Yeah. And then this goes on to, NBFCs or other entities of the system. So I'm glad that there is a unifying voice here that when we see a buildup of risks, we need to act on it pretty quickly.
As Sourav comes in, he has a question for Abik. I just want to try and bring up the markets at this stage. Quick look at the markets. They remained more or less flat because there were some concerns that had built up perhaps on account of any possible changes to capital gains treatment. We haven't seen any concrete information in that regard, but of course we are counting down and literally now just 40 odd minutes away. Sourav, step in.
Abik, I just wanted to lob that same question to you about how much leeway will actually the finance minister use in terms of the RBI bonanza which she has got, the tax buoyancy, the tax collections having been better than expected. What are the things you think she will do in this budget in terms of propping up consumption demand and also trying to ameliorate rural distress?
Well, I think very clearly there is room for more welfare spending and either in existing programs, increasing allocations. For instance, if you take the support that that the government gives farmers, which is just 6,000 rupees a month, I think there is a strong case, given inflation, given the increase in agriculture inputs, to increase that. I'm sorry, I said 6,000 a month, it's 6,000 a year. So, I mean, you can do it through existing schemes, you can sort of bring in new schemes, and I think the need of the hour and for the foreseeable future is better quality spending and more allocations to sectors like health and education. I think we are running into a huge supply constraint in terms of effective labor inputs. I mean, we have a lot of people around, but they're not necessarily skilled. And as the economic survey pointed out, they are becoming, some segments of the population are becoming more unhealthy. So that's something that needs to be addressed. So is welfare spending, particularly in the farm sector, and in addressing skilling, where we do have a problem with youth unemployment, and then public spending on capex, etc., might have peaked, but you have to keep the sort of the engine going, even if it's not rising further very sharply, because private investments are, my sense is that it's not, they're not going to pick up immediately. There's still some way to go. Sajid mentioned a number of 80%. I think the RBI's measure of capacity utilization indicates about 76%, and that too dominated by 2 or 3 sectors. So we do have a way to go. So it's got to be a prudent thing, and I believe that I think Shankar alluded to the fact that it will be the special status, etc., would be left to a committee and so forth. I think, given my very limited understanding of politics and political economy, there have to be some allocations in this budget. I mean, I think the allies need to want the dominant partner to show them the money, and some allocations will have to be made in the budget, maybe through existing programs where a larger share goes to some of these states. We've seen this in the case of railways, if you remember in the past, where the railway budget was used to make allocations, disproportionate allocations to certain states that had a political claim on it. So, I mean, that's the way it'll go, I think.
Sajid, can the government reduce its expenditure at this stage? This might be a counterintuitive question at this stage and given the build-up, but I really want you to tell us whether that is at all in the realm of possibility.
Siddharth, are you suggesting that they reduce the deficit even more than was planned in February?
Yes.
By cutting expenditures? I think that's possible. So there are 2 points here. One is, what does the fiscal math allow, and what does the economy demand? So I think the fiscal math allows you to, in theory, take that deficit even below 5.1 and increase expenditure and cut taxes, because you've got 0.5% of GDP. So in theory, I can increase my expenditure, I can cut taxes, and simultaneously reduce the deficit. Now, I think on the fiscal front, we have to acknowledge that it's important to reduce the deficit, but not too quickly. The fact is, last year the deficit, we did a significant consolidation. The center's deficit went from 6.4% to 5.6%. That's almost 1% of GDP, more than was envisaged. So while we all agree that deficits need to be lower in the medium term, the economy, still has some catching up to do, given its pre-pandemic path, given the fact that we need private sector demand to fill in more fully. I think it's important not to consolidate too quickly. So I think 0.5% of GDP, maybe a little bit more, is kind of what the doctor ordered at this point in time.
Okay. Before I go to Shankar and Sourav, I just want to take a look at the markets. Most indices in the red. Now, is profit being booked ahead of the budget speech? Because there was a pre-budget rally, and we've seen there's a significant move that has happened a majority of the times post-budget speeches. But there you have it, the Nifty down just about 50 odd points. Take a look at the Bank X, you will see a similar kind of red, the PSU indices. So we are seeing overall, Sourav, Shankar, that the market's a bit nervous at this stage, but there's no sharp fall, and perhaps 11:05 onwards is when you will see the counters react. Shankar, very quickly to you, and I press on with that point. India is, everybody says, Sajid has written, Abhik has written in the past, that India is now at the cusp of a very long cycle of growth. And by the way, even as I say that, the first green that I'm seeing is the Nifty FMCG. So does that tell you something? But Shankar, a long cycle of growth ahead. Is today's occasion the right one for the budget to outline a strategy for implementation of that Viksit Bharat slogan, Shankaraya?
Well, they've pretty much done that in the interim budget in the sense of how they're going to take it forward. So there is the economy will be sort of ring fenced by public investment, and we have had a very robust public investment program. Even in the interim budget, it was 11 trillion rupees. So that has been done. What is not visible to keep the growth growing is the action on the factors of productivity, which is land, labor, which is at the state level, the issues of skilling and the education. That's why I was going to say that what I'm looking for in this budget is you could have the finance minister making everybody happy by giving out some money to the taxpayers, some money on welfare, and even though fiscal hawks will be happy if she sort of moves, nudges it from 5.1% to 5%, which is entirely possible given the bonanza of almost 1.5 lakh crore or 1.5 trillion that they're sitting on. The question is how imaginative can you get?
Okay.
And how can you lay? What are the issues that you can expand on? There are only so many roads and railway lines that can be done in a year. I'm not saying even for a minute that we have enough roads. We need more roads, but the execution capacity of the economy, the absorption capacity of the economy is governed by the statute of limitations. So
Okay.
you have to think about that. So what is the imagination? So I had suggested, for instance, that you could look at new cities. I mean, all the urban
Okay.
habitats are shot to hell in some senses.
Okay.
So I will be looking for some imaginative ideas in this budget to take a point further to the Viksit Bharat journey.
Okay, we seem to have lost Shankar there. One last question to Sajid before I let him go. Sajid, once the budget is done and dusted, will the key point be the cost of money and what the RBI chooses to do in the days ahead? And how do you think the budget announcements and the fiscal strategy is likely to impact the RBI's thinking?
Yeah. I think we need to be kind of cognizant of the broader point here that cyclical policy, both fiscal and monetary, have done a lot of the heavy lifting, Siddharth, as we've discussed over the last 4 years, right? That the RBI slashed interest rates in the pandemic, real rates were negative at that point in time, fiscal widened sharply. And I think, as the economic survey pointed out, we're living in a far more hostile global environment than we sometimes imagine. I think global inflation is going to be stickier. Interest rates are going to remain elevated. We've got a lot of geopolitical risks. We've got a US election. In that environment, I think it's important for India not to be adventurous. The fact is the monsoon is now catching up, but there is still food inflation remains a consistent risk. It's almost 50% of the basket. So I won't be surprised at all that the RBI is doubling down to bring inflation close to 4% and keep it there. So I think we should not expect any kind of monetary easing just as yet. Just as the fiscal needs to consolidate and ensure that debt is stable, I think the RBI needs to ensure that its primary mandate of keeping inflation low and stable is fulfilled. So we have to now look beyond these cyclical levels to what are the structural reforms that India can pursue, not just in the budget, but beyond that to boost consumption and exports. I think that's the larger thing to look forward to.
Absolutely. And Sajid, we'll come back and try and come back to you as we take this theme forward post the budget. Thank you very much for your time. At this stage, let me welcome Sunil Singhania, the founder of Abacus Asset Managers. Welcome, Sunil. There's some amount of red on the screens. Before I kind of get into a macro question, for those of our viewers who would like you to offer a spot assessment of how the markets are trading ahead of the budget.
Good morning and thanks for having me. I think, obviously in the run-up to the budget, actually we are having a very quiet market. I don't know what to make out of it, but I don't think there is anything extraordinarily positive or negative that is expected out of the budget. And we have already seen a very decent rally since the elections, So I think the markets are just sort of consolidating at these levels. I don't see anything which the market is making of the likely trend post the budget.
Sunil, overall, they've fallen from the opening highs. Benchmark indices are nearly 1% off. But the big question, and Sourav and I were discussing this earlier as well, is how would the markets respond and react to any possible changes when it comes to capital gains taxation? You've seen the kind of commentary by the regulators, the economic survey expressing certain concerns. Are the markets being prepared for some sort of tax-related intervention, Sunil?
So I think all the speculation and what will happen if this happens and that happens, I think we should not get into it because no one knows what is going to happen. So from our perspective, we are very clear, take things as it comes. However, I don't think even the economic survey spoke anything about, not investing in equities. I think the only thing maybe they were bothered about was more on the speculative front rather than on the investment front. So I don't think we should make two and two and try to come to any conclusion before the budget. Anyway, we are only half an hour away. We'll know what is going to be the trend. But yes, I don't think markets are expecting any significant changes, and therefore, if it does happen, both on the positive and negative side, we might see the markets react. But at this point of time, I don't think either we or the market is expecting any significant changes.
Sunil, I wanted to ask you, from a market perspective, no news is often good news. Most of the time we've seen that if there is no negative news, the market reacts very positively and, well. What is the best thing you think will happen for the market? What is the best thing the finance minister can do which will be good news for market experts like you?
No, so you're right. When no news is there, it's normally bad news. It's normally good news. The only thing is that if there has been an expectation of bad news, then no news is good news. Mm-hmm. I don't think there has been an expectation of bad news. Mm-hmm. So I don't think no news is going to be significantly good news. We would have a status quo. Frankly, our view is that this budget is going to have very little impact on the market per se. Because as I said earlier, I don't think the market is expecting anything significantly positive or negative. From a market perspective, 2-3 things which it's well sort of talked about. One is fiscal prudence, and second is the path towards growth continuing. I think the Prime Minister yesterday at the opening of the budget session clearly reiterated the fact that the government is clearly looking at continuing and in fact accelerating the path towards growth accelerating. And therefore, I'm sure that this budget would also have some elements which would encourage that.
Okay.
Fiscal prudence is something which obviously the markets would be looking at. And again, the movement of the 10-year GSEC yields definitely helped by the inclusion in the JP Morgan bond index also reiterates that we are not seeing anything which is going to be negative as far as fiscal prudence is concerned. Okay. I think the rest is all going to be more, of the same. We already had an interim budget 6 months back, and therefore our view is that the finance minister is the same, the government is the same. We don't see any major deviation in 6 months from what the government has already mentioned.
Absolutely. You're totally right, Sunil, because this is, after all, a revision of the interim announcements. At this stage, let me also welcome on the show Ajay Srivastav, CEO of Dimensions Consulting. But before we go across to him, one quick point, Abhik Barua, and thank you for waiting here. Before I let you go, respond to this point about fiscal prudence. What's your best guess with regard to the kind of fiscal strategy that is likely to be outlined, not just for this year, more importantly for FY26, where a sharp reduction had been earlier indicated?
Yeah, I think, given everything else, I think this government has been very focused on fiscal consolidation and good fiscal management as a hallmark of their economic strategy. And I think they will indicate a preference towards moving to a long-term target of, say, 4% of GDP. And so there would be no real compromise on the fiscal consolidation path that had been set out earlier. I think it's very much part and parcel of this government's broader economic philosophy. So unless there are, a lot more pressures, etc., from partners have to be accommodated and the entire game plan changes, I don't think the fiscal philosophy changes at all.
All right, Abhik Barua, thank you very much. We'll get back to you after the budget as well. Ajay, welcome to the debate. 25 minutes left. Let me come straight away to you and ask you, which are the couple of odd sectors that you feel are likely to benefit from the budget pronouncements? On the screen, you are seeing, only the FMCG sector that I noticed, which was in the green, Ajay.
I know people are expecting a lot of stuff from them to reduce the taxes at this point of time. I hope it comes through. I'm not sure whether it will actually happen, because the definition of middle class is very different from what you and I talk about and what the government wants to think and affect them. So I think we may have a discrepancy in the thinking on that part. But certainly, I think the sectors which we believe will gain or should gain, given government pronouncements, are going to be things like semiconductor. I think government has given a big go-ahead on the semiconductor part. We want to bring chips into India. It's a very unknown sector, very few companies in the market, so you don't see in the stock market. But I think that's going to be one big sector which will come through. Second sector, which we all see and have done very well in the market, is auto ancillaries and engineering, because I think the PLI there would be increased allocation, and India is doing tremendously in terms of exports to Europe and buying companies in Europe. So I think PLI in auto, PLI in electronics, PLI in semiconductors, I think are three big areas that one should really see coming through. And more important than PLI, I think we are all looking at one number, which is government borrowing. If government borrowing remains where it is right now or reduces, I think that's the best positive, because today, genuinely speaking, companies can't get credit for capex projects in this country. People may find it hard to believe, but small, medium companies are unable to fund capex anymore. Leave aside the large ones. If the government borrowing is restricted, more money to the market, I think we will see a lot more action in the real market, just not in the stock market.
Saurav. Ajay, Saurav here, wanted to ask you, there's been a lot of talk about how to boost employment, the jobs conundrum as well. There is also talk of whether, there have been suggestions made to the government about a possible employment-linked incentive on the lines of PLI. Do you think the government, the budget will look at tweaking some sectors, adding some sectors to the PLI itself so that it can create jobs, or do you think an ELI is also a possibility?
Well, I don't think ELI is a possibility, Saurabh, because I think the government in economic survey has now led to that at least they don't believe the narrative of that employment is an issue. Whether we agree or disagree with the numbers, that's a part. And the government officially has taken a stand that we don't have an employment problem and we've done a decent job with employment. So that rules out ELI, in my view, both as an economic step, very difficult to implement, and a political step, because that's a clear acknowledgement what the opposition is saying. So ELI, I think, is out. PLI, yes. I think PLI government has been trying to focus upon textiles, where India has lost its leg in terms of export competitiveness. That could be a big one. Yep. The assembly of electronics, which employs people, really speaking, is nothing but screwdriver technology, as needs people. So I think PLI, yes. But definitely sort of ELI is going to be a political and an economic, very difficult decision to say it's an ELI plan.
That's an interesting contrast between ELI and PLI. Sunil, I'm coming to you. Right after June 4th, after the election results, we saw a shift in market preference, and therefore the question to you is, what about PSU stocks, defense, railways? We can safely expect that the allocations indicated in the interim budget will continue, might get marginally increased. Therefore, how should an investor approach these segments?
No, to be very straight about it, I think we have been believing that the sectors are good, but stocks are pricing the moon. But over the last 2-3 months, we have been going wrong, because price movement in these stocks is like being very, very firm. But we would continue to reiterate that the sectors are good, but stocks are pricing significantly, very, very high growth for a very long period of time. And therefore, on a fundamental basis, I think we would be very careful, particularly about some of the PSU defense and PSU railway names. But from an announcement perspective, I think the government is very clear. They want to focus a lot on the railway side. I think almost 25% of the capex budget goes to railways. and that's almost 2.5 lakh crore rupees. And even in the defense, this indigenization of Indian defense is a story which is going to continue for a long, long time. But at least right now, the stocks are looking very expensive.
Ajay, fertilizer stocks, sugar stocks, they've been zooming ahead of the budget. Again, is this an instance of informed investment, or are just people betting on possibilities in the budget?
I don't know, informed or not, Saurav, but over the last 20, 30 years, I have never seen them giving me any returns. So yes, sporadically they wake up and they have a nice green shoot, but return-wise, both the industries have been pathetic as far as investors are concerned. So, yes, you can plan, but the real fact is, why the fertilizer industry not good for us? Because it's a government control. Everything is government controlled. Input price, external price. Now, as an investor outside, how do I predict government behavior where we know that they are pro-farmer lobby, pass-through pricing is not going to happen? So that rules out your investment in fertilizer. Sugar is the same thing. The moment the demand goes up and the price goes up, there is a price control on the sugar, and then they say ethanol, you can't mix the ethanol. So, so if you're invested in sugar, when the best part of the season happens, there's a government control on the pricing and realization. When the worst thing happens, anyway, you got a problem on the company. So, so these two sectors, plagued by just so much of government interference, not a stable policy, is linked to CPI, linked to pricing, market pricing, stock. Ethanol has gone back and forth, should be sugar, without sugar. So, how do you invest in a thesis? And as I keep saying, there is more available on the table. It's not about I have unlimited money. If I have limited money, why would I go to a sector with so much unpredictability when there are sectors available to me which are very clear path? I think Sunil mentioned PSUs. Yes, there is a froth there, but there is a growth pattern. The valuations are cheaper. One day they may get privatized. Who knows? So I've got so much stuff lying, so many new IPOs. Look at the beautiful stories coming out in terms of engineering, in terms of new sectors, in terms of chip technologies. Why would I want to go back to the old sugar and fertilizer, no matter how they look? The world is so much more exciting with new companies.
The world is so much more exciting, and it is uncertain. Saurav, we have both Ajay and Sunil only for the next 3 or 4 minutes. I want to put both of them a question and then you step in. What will the market cheer the most? Sunil, that question to you first. Will it be a lower fiscal deficit and a continuing indication of consolidation, or will it cheer a slightly increased capex allocation?
No, so I'll reiterate, we have had an interim budget just 6 months back. And, the budget for the capex was already increased to 11,11,000 crores. I don't think anything has happened between 1st of February to now for the government to say that this 11,11,000 will become 12 lakh or 13 lakh crore this year. I think what the markets might like is a statement that this growth in allocation to building India is going to continue. As far as fiscal prudence is concerned, again, I think it's very natural to expect that the path towards fiscal prudence will continue. We have had a big bounty in terms of 2 lakh crores of dividend, which RBI has given to the government. So even with some socialist steps, which have been talked about in the run-up to the budget, which is increasing the allocation per annum to farmers to 12,000 from 6,000 and so on and so forth. I think despite that, the market is already building in fiscal prudence. So frankly, I think, this is going to be one of the budgets where the market movements are going to be very, very small. Maybe, going back to your point, doing what has been done over the last few years and continuing in that would be the best thing to happen.
Okay, the best thing to happen. Ajay, that very same question to you as well. What will cheer the markets and what will sort of rock them in a negative way?
I think what will cheer the market when they hear there is no change in capital gains. I think that will certainly cheer the market because a lot of trepidation is sitting in the system to say that may be tweaked around. But what we're a little more worried about is not really the capital gain, but what's going to happen on the options and futures. Is there going to be a big tax coming there or some change in policy coming there, either from here or RBI? Because that can change the whole dynamics of the equation in the market, irrespective of fundamentals. So with the stance of...
No, but Ajay, sorry to interrupt you there. What is your position on this? Because
and I like the use of the word position.
Position on this because Sourav and I were at the venue on Friday where the SEBI chief was repeatedly asked this question and she gave pretty detailed answers to that.
In fact, she said it's becoming a macro problem, not an investor or an individual investor
and remember, Shail, last time when she had spoken, the markets had been rocked.
Yes.
So, Ajay, where do you stand on this? I'm not using the word position.
I stand on simple thing that we have got a robust capital market after a long time. Let people be mature enough to make investment decisions. If a 25-year-old can start a company, so can a 25-year-old buy a stock options or a future. Just because few of them make losses doesn't make the system wrong. The government job is to ensure regulation, checks, balances, and margins. I think to tell people that you're doing wrong economic decisions.
Okay.
Can you tell that to a startup guy with a 25-year-old comes an idea and says, give me 100 crore and I want to run a company? Investors cut a 100 crore check. Now, we are seeing on the other side that guy should not be allowed to take a decision on buying stock options worth 200 rupees or 500 rupees premium. I don't think it makes sense. I think what makes sense is people make informed decisions. You keep regulating the market and ensure that it doesn't get into wrong hands. You stop illegal channels, illegal advisors, etc.
Right.
That's fine. Let people invest money. Risk is the basis of economic growth, and you can't take away risk from people. They'll go gamble somewhere else. That's all, as simple as that.
Sunil, before I let you go, a quick comment on that very point.
No, I think you can argue it both the ways. I think options and futures and derivatives provide liquidity to the market, making it healthy. At the same time, I think proper education and proper checks and balances are definitely needed.
Okay.
To some extent, you can argue that, as Ajay said, that they are mature investors or mature individuals, not investors. But particularly the fact that 80-90% of the options are actually open only for half an hour to 1 hour on the day of expiry. I think that clearly points out that it is becoming a sort of a speculative or a lottery sort of a system, where you buy something for 500,000 rupees, you'll make 2,000-3,000 or you'll lose those 1,000 rupees. So maybe, there is a need for a proper education. There is need for proper checks and balances to ensure that, those who are indulging in this know what it is. In terms of investment, I think it's a good sign that so many Indian investors are finally investing for the long term. And I say for the long term because the systematic investment plan route is a clear model for long-term investing. I don't think there is anything wrong.
Okay.
And if banks are losing deposits, maybe the banks will have to get their business model right in ensuring that there's a balance between what they're offering to the investor and what the investors want.
I am so glad, Sunil, you made that point, because yesterday on India Today, I went out on a limb and said the onus should be on the banks to raise deposit rates and the government to look at how it treats the interest on fixed deposits. It's exempt only up till 10,000. Do some changes there and maybe bring parity for fixed deposits on with mutual funds. But Sunil, I know I have to let you go. Thanks very much. Try and connect to you after the budget. But Sourav, taking this point forward, State Bank of India chairman and the banker to the government of India has made this point that please reduce this differential because it is impacting deposit mobilization. Mutual fund tax treatment happened long back because it was then aimed at encouraging the mutual fund market. Is it time to encourage savers of fixed deposits, boring fixed deposits?
I think you have been harping on the word boring. So let's it's hoping that the government will look at this and make it more interesting, because it's a fact, because even leading bankers have said we are turning from a nation of savers to a nation of investors, which is right, which is good. But if you're turning from a nation of savers to a nation of speculators, that becomes a big problem. So if you want to make bank deposits more interesting, you need to bring down the differential between the deposits and mutual funds. That's a fair point.
And so if we are going to be joined by Sanjeev Puri, leading voice of industry, the chairman and managing director of ITC Limited, and the president of India's largest industrial grouping, the Confederation of Indian Industry. But even as he comes in, I wonder if Ajay is there. Ajay, do you sense some ideological sort of gambit here? If Ajay is still connected with us, can I ask him that question? Okay, we don't seem to have, we don't have Ajay, but we are also joined by Dr. Janmejay Sinha, Chairman of the Chairman India of Boston Consulting Group and Co-Chairman of CII Economic Affairs Council. Both of these industry guests joining us. Dr. Sinha, right, 10 minutes left. What is your biggest ask from this budget that you hope Modi 3.0 delivers on?
You know, I want to be boring. You know, if you go for an operation, what you want the doctor to come back and say is that it was uneventful, it was successful, and the patient is doing well. That's all that I want. I want a continuity of the policies that we have had, a tightening, you know, conservatism with fiscal deficits, you know, with consistency with tax, you know, looking at tariffs and continuing to spend on infrastructure. These are my expectations and wishes. I have a hope which may go unrequited, but it is on a focus on water, which I wish starts to get the attention it deserves, because it will help in a number of areas with agriculture and other places, but also the fact that we consume 1/3 of the what the G7 consumes in water and below what the overall world average is, and it's going to get worse.
Okay.
So water requires desperate attention.
Okay, Dr. Sinha,
that would be my
Dr.
wish,
Sinha, we are
but the
also
others
joined
are
by
my
Sanjeev Puri, because just around 8 to 9 minutes left. Sanjeev Puri, the FMCG sector seems to be the only one. Sanjeev Puri, if you can hear me, this is Siddharth Zarabi from the Business Today studios. The FMCG sector seems to be the only one in the green at the moment. From your point of view as CII, are you hoping that this budget delivers an impetus to consumption, particularly rural consumption?
So, you see, let me answer it in two parts. You know, first of all, I think this whole economic transformation that is happening, and you're seeing the growth in the economy, jobs are getting created. So this is no doubt going to have a positive effect on all sectors of the economy. So we're looking at, as my colleague just said, we're looking at continuity there. We're looking at building on the good work of reforms that's happened in the past. The idea is really to look at some other sectors that can deal with higher, labor intensity, be it apparel, toys, tourism, wood-related. The idea is to also look at the next set of reforms so that and a lot of that actually fall towards the state. So how can we kind of build a consensus around that so that further acceleration in the growth momentum can be looked at? So that's really one part of it. I think the part what my colleague was alluding to it. The second is, I think, and to some degree, I would say a bit to provide some relief to the middle class, maybe by way of income tax at the lower end, by way of certain enhancement in the amounts that are done through either Manrega or other direct benefit transfer mechanisms, to provide some, a bit of relief at that end. So really, two parts of it. And when we are talking of the relief, I would say that a lot more focus on rural, maybe as we are talking about public capex, higher indexation towards rural. These would be the important factors that we would look at. Having said that, we also need to address the risks in the economy, which is really to do with extreme weather events.
Yes.
Again, my colleague spoke about water. We do need to address that. We need to deal with adaptation on a larger way, because extreme weather events are multiplying and they pose risks to agriculture, they pose risks to economic activities. So broadly, I think these would be the areas which largely reflect most of it, continuity of what's happened in the past, that will build the momentum and will be good for all sectors of the economy.
Mr. Puri, Sourav here. You spoke about jobs, but the economic survey yesterday has also outlined AI as a positive and yet a negative in terms of what it can do in terms of losses for jobs. How is corporate India, particularly organizations like yours, CII, how are they looking at it? Because it's that again can lead to an exacerbation of the demand conundrum, right? So how is this whole AI debate? What is the corporate India stand on that?
See, let me just add to that. You know, just like AI, I also think energy transition has its risks also, because there needs to be a systems transition. When we talk about any of the sectors like the energy sector, there has to be a systems transition. When we talk about EV, it's a whole system that is transitioning. So all of these do pose, they have their pluses and they do have their risks. Similarly, AI. Now, I think we have to devise our roadmaps to leverage AI and make it an advantage for India, because India has the demographic talent to be the powerhouse of AI for the whole world. And similarly, we need to design our pathways for the transition so that at a larger level we benefit from it, and rather than get impacted by the risks associated with it. So just like AI, I think similarly we also need to look at the systems transition carefully as far as energy transition is concerned, for example.
Dr. Sinha, one of the points that the economic survey made was the rise in corporate profitability pre-COVID and at present, at almost 4 times up in PBT terms. And government policy makers say that the issue of consumption is also to do with rising prices. Is that a fair point according to you?
It's a very good thing that the corporate sector profitability has risen and that the banks are in good shape. The fact that prices are rising, are they rising ahead of inflation, and to what extent? Actually, there have been this is an advantage. A strong corporate sector is an advantage. And once the capacity utilization start to rise, and there is a lot of interest already, capex spending starts with it. So I don't think we should minutely go into our prices rising. That's the kind of micromanagement that the economy does not require. We should be happy with the strength of our corporate sector right now.
Okay, we should be happy. I completely agree with that. And remember 2019 when corporate India got a big tax break. Less than 3 minutes left for the official start. Parliament is a far more combative place, Sourav, these days, and we saw that even during Prime Minister Modi's reply to the President's speech, and Prime Minister Modi reflected on that as well.
Yesterday.
And I think the broader political economy impulse, Sourav, for this budget and beyond that, and our lawmaking, including economic policies, will be the government versus opposition face-off. So I'm hoping that at least the budget speech is listened to carefully, that it does not get...
Also, Siddharth, the interesting point is while Dr. Sinha and others say that, normal is boring, but normal is what they expect. Let's have continuity. Let's have the, way forward for reform. It's also important that the Prime Minister has emphasized and that this will be a budget which will set out the path for Viksit Bharat. So we will have to see what are those 5 or 6, and in fact the economic survey yesterday spoke of 6 key areas, including MSMEs and the rest of it, where they need to really focus on. So I'll be very keen to see what are those 6 areas and whether the budget touches upon them and how.
Dr. Puri, Mr. Puri, just one quick point as President of CII to you, sir. This whole debate around private sector investment not picking up, although there are signs and data that seem to suggest that is happening. What is your view? Is private sector investment now on a takeoff path and capacity utilizations improving?
Absolutely, and that's why you're seeing investment in the private sector. We are seeing that the investment rate is now higher than what it was pre-COVID. And what we are also hearing from the internal surveys that CII does amongst members, that capacity utilizations are at 75% or thereabouts, which are the tipping points where fresh investment starts to happen. And I think the general survey is optimistic, so I think investments will happen. But I think given the number of jobs that we have to create and the opportunity in the Indian economy, I think more needs to be done, and to unlock that, we're really looking forward to the next set of policy interventions, reforms in agriculture, a lot of reforms at the state level, so that the next set of potential in the economy is kind of unleashed, and the economy gets even more competitive than it is today.
Dr. Sinha, even as I come to you, I'll request my producers to try and bring us live visuals from Parliament as they come in, where the Finance Minister gets ready to speak. But Dr. Sinha, this is going to be a unique opportunity, the first full budget of any government, to lay out a very broad economic vision and strategy. What would you like to hear from the Finance Minister as far as the overall vision is concerned?
So I would like the Finance Minister to continue with fiscal conservatism, but be expansive with the social sector, to double down on investments in skilling and education, embedding it with technology, doing the same with healthcare, and looking at some of the environmental threats that are coming with a focus on water. And I would also like to see the building of the middle with the SME. You know, we have the SME and then we have the ME, you know, and we need the middle. And so any skilling, etc., which even the economic survey talks about, will be very good. But the one thing that the economic survey has said, which has delighted me, has been that the government should do less but do it better in the states. And that is a really welcome thing coming in the economic
survey. On the screens for you viewers is Lok Sabha Speaker Om Birla. Let's try and get that audio up even as we speak. And we'll try and continue this till the moment the Finance Minister stands up. Sourav, this is the formal part of it. And very clearly, for the markets, we've heard a host of experts say, please don't rock the boat. Corporate India is also saying the same message. You've already given us a message in the interim budget. We believe in you. You've been fiscally conservative. Would there be anything, Sourav, which might spoil the mood terribly according to you?
You know, I think, you know, this whole discussion around markets, F&O, if you really put some kind of a really prohibitive tax on markets, then that will really rock the boat. If fiscal conservatism is deviated from, which I think is a very unlikely, you know, possibility, because the government has really pushed its might behind it. So I think this is the first time I am seeing a chorus of let's have it normal, let's have it continue.
No one's mentioned dream budget.
No
one is saying,
there
you know, make
expectations,
or break it.
You know, I remember Dr. Bimal Jalan, the RBI governor, famously said his job was to manage expectations. I think expectations have been beautifully managed.
Mr. Puri, some foreign visiting dignitaries are being introduced by the Lok Sabha Speaker. That gives me perhaps another 30 odd seconds with you. You know, the whole 10 years of Modinomics has been big bang structural reforms in the first 5 years, followed by supply side interventions and the management of COVID. What should be the big third term strategy according to you, if you were to put it into a few words?
Okay, besides building on what is already being done, I think we have to look at the next set of factor reforms. Agriculture, power, land, labor, which are of course something that where states need to do a lot more. So that's one important area to look at. The other area to look at is really...
Okay, the Finance Minister is up and speaking. Let's listen in.
Honorable Speaker, I present the budget for 24-25. Introduction. The people of India have reposed their faith in the government led by Honorable Prime Minister Shri Narendra Modi and re-elected it for a historic third term under his leadership. We are grateful for their support, faith, and trust in our policies. We are determined to ensure that all Indians, regardless of religion, caste, gender, and age make substantial progress in realizing their life goals and aspirations. Global context. The global economy, while performing better than expected, is still in the grip of policy uncertainties. Elevated asset prices, political uncertainties, and shipping disruptions continue to pose significant downside risks for growth and upside risks to inflation. In this context, India's economic growth continues to be the shining exception and will remain so in the years ahead. India's inflation continues to be low, stable, and moving towards the 4% target. Core inflation, that is non-food and non-fuel, currently is 3.1%. Steps are being taken to ensure supplies of perishable goods reach markets adequately. Interim budget. As mentioned in the interim budget, we need to focus on 4 major castes, namely the Garib, Mahilaye, Yuva, and Annadata, the poor, women, youth, and the farmer. For Annadata, we announced higher minimum support prices a month ago for all major crops, delivering on the promise of at least a 50% margin over costs. Pradhan Mantri Garib Kalyan Anna Yojana was extended for 5 years, benefiting more than 80 crore people. Administrative actions for approval and implementation of various schemes announced in the interim budget are well underway. The required allocations have been made. Budget theme. Turning attention to the full year and beyond in this budget, we particularly focus on employment, skilling, MSMEs, and the middle class. I'm happy to announce the Prime Minister's package of 5 schemes and initiatives to facilitate employment, skilling, and other opportunities for 4.1 crore youth over a 5-year period, with a central outlay of 2 lakh crore rupees. I will speak about them shortly, while more details may be seen in the annexure. This year, I've made a provision of 1.48 lakh rupees, 1.48 lakh crore rupees for education, employment, and skilling. Budget priorities. The people have given a unique opportunity to our government to take the country on the path of strong development and an all-round prosperity. In the interim budget, we promise to present a detailed roadmap for our pursuit of Vikasit Bharat. In line with the strategy set out in the interim budget, this budget envisages sustained efforts on the following 9 priorities for generating ample opportunities for all. Number 1, productivity and resilience in agriculture. Number 2, employment and skilling. Number 3, inclusive human resource development and social justice. 4, manufacturing and services. 5, urban development. 6, energy security. 7, infrastructure. 8, innovation, research and development. And 9, next generation reforms. Subsequent budgets will build on these and add more priorities and actions. A more detailed formulation will be carried out as part of the economic policy framework, about which I will speak later in this speech. This budget details some of the specific actions to be initiated in the current year towards fulfillment of these priorities, with potential for transformative changes. The budget also covers some of the previously made announcements with intent to strengthen them and step up their implementation for expediting our journey towards the goal of Viksit Bharat. Priority 1, productivity and resilience in agriculture. Transforming agricultural research. Our government will undertake a comprehensive review of the agricultural research setup to bring the focus on raising productivity and developing climate-resilient varieties. Funding will be provided in challenge mode, including to the private sector. Domain experts, both from the government and outside, will oversee the conduct of such research. Release of new varieties. New 109 high-yielding and climate-resilient varieties of 32 field and horticultural crops will be released for cultivation by farmers. Natural farming. In the next 2 years, 1 crore farmers across the country will be initiated into natural farming, supported by certification and branding. Implementation will be through scientific institutions and willing gram panchayats. 10,000 need-based bio-input resource centers will be established. Missions for pulses and oil seeds. For achieving self-sufficiency in pulses and oil seeds, we will strengthen their production, storage, and marketing. As announced in the interim budget, a strategy is being put in place to achieve Atmanirbharta for oil seeds such as mustard, groundnut, sesame, soybean, and sunflower. Vegetable production and supply chains. Large-scale clusters for vegetable production will be developed closer to major consumption centers. We will promote farmer-producer organizations, cooperatives, and startups for vegetable supply chains, including for collection and storage and marketing. Digital public infrastructure for agriculture. Buoyed by the success of the pilot project, our government, in partnership with the states, will facilitate the implementation of the digital public infrastructure in agriculture for coverage of farmers and their lands in 3 years. During this year, digital crop survey for Kharif using the DPI will be taken up in 400 districts. The details of 6 crore farmers and their lands will be brought into the farmer and land registries. Further, the issuance of Jan Samarth based Kisan credit cards will be enabled in 5 states. Shrimp production and export. Financial support for setting up a network of nucleus breeding centers for shrimp brood stocks will be provided. Financing for shrimp farming, processing, and export will be facilitated through NABARD. National cooperation policy. Our government will bring out a national cooperation policy for systematic, orderly, and all-round development of the cooperative sector, fast-tracking growth of rural economy and generation of employment opportunities on a large scale will be the policy goal. This year, I have made a provision of 1.52 lakh crore rupees for agriculture and allied sectors. Priority 2, employment and skilling. Employment-linked incentive. Our government will implement following 3 schemes for employment-linked incentive as part of the Prime Minister's package. These will be based on enrollment in the EPFO and focus on recognition of first-time employees and support to employees and employers. Scheme A, first-timers. This scheme will provide 1 month wage to all persons newly entering the workforce in all formal sectors. Direct benefit transfer of 1 month's salary in 3 installments to first-time employees as registered in the EPFO will be up to 15,000 rupees. The eligibility limit will be a salary of 1 lakh per month. The scheme is expected to benefit 210 lakh youths. Scheme B, job creation in manufacturing. This scheme will incentivize additional employment in the manufacturing sector linked to the employment of first-time employees. An incentive will be provided at specified scale directly both to the employee and the employer with respect to the EPFO contribution in the first 4 years of employment. The scheme is expected to benefit 30 lakh youth entering employment and their employers. Scheme C, support to employers. This employer-focused scheme will cover additional employment in all sectors. All additional employment within a salary of 1 lakh rupee per month will be counted. The government will reimburse to employers up to 3,000 rupees per month for 2 years towards the EPFO contribution for each additional employee. The scheme is expected to incentivize additional employment of 50 lakh persons. Participation of women in the workforce. We will facilitate higher participation of women in the workforce through setting up of working women hostels in collaboration with industry and establishing creches. In addition, the partnership will seek to organize women-specific skilling programs and promotion of market access for women SHG enterprises. Skilling program. I'm happy to announce a new centrally sponsored scheme as the 4th scheme under the Prime Minister's package for skilling in collaboration with state governments and industry. 20 lakh youth will be skilled over a 5-year period. $1,000 industrial training institutes will be upgraded in hub and spoke arrangements with outcome orientation. Course content and design will be aligned to the skill needs of industry, and new courses will be introduced for emerging needs. Skilling loans. The model skill loan scheme will be revised to facilitate loans up to 7.5 lakh rupees with a guarantee from a government-promoted fund. This measure is expected to help 25,000 students every year. Education loans. For helping our youth who have not been eligible for any benefit under government schemes and policies, I am happy to announce a financial support for loans up to 10 lakh rupees for higher education in domestic institutions. e-vouchers for this purpose. E-vouchers for this purpose will be given directly to 1 lakh students every year for annual interest subvention of 3% of the loan amount. Priority 3, inclusive human resource development and social justice, saturation approach. Our government is committed to all-round, all-pervasive and all-inclusive development of people, particularly farmers, youth, women, and the poor. For achieving social justice comprehensively, the saturation approach of covering all eligible people through various programs, including those for education and health, will be adopted to empower them by improving their capabilities. Implementation of schemes meant for supporting economic activities by craftsmen, artisans, self-help groups, scheduled caste, scheduled tribe, and women entrepreneurs and street vendors such as the PM Vishwakarma, PM Swanidhi, National Livelihood Missions, and Stand Up India will be stepped up. Purvodaya. The states in the eastern part of the country are rich in endowments and have strong cultural traditions. We will formulate a plan, Purvodaya, for the all-round development of the eastern region of the country, covering Bihar, Jharkhand, West Bengal, Odisha, and Andhra Pradesh. This will cover human resource development, infrastructure, and generation of economic opportunities to make the region an engine to attain Vikasit Bharat. On the Amritsar-Kolkata Industrial Corridor, we will support development of an industrial node at Gaya. This corridor will catalyze industrial development of the eastern region. The industrial node at Gaya will also be a good model for developing our ancient centers of cultural importance into future centers of modern economy. This model shall showcase Vikas B, Virasat B in a growth trajectory. We will also support development of road connectivity projects, namely 1. Patna-Purnia Expressway, 2. Buxar-Bhagalpur Expressway, 3. Bodh Gaya, Rajgir, Vaishali and Darbhanga spurs, and 4. Additional 2-lane bridge over River Ganga at Buxar at a total cost of 26,000 crore rupees. Power projects, including setting up of a new 2,400 megawatt power plant at Pir Painti, will be taken up at a cost of 21,400 crore rupees. New airports, medical colleges, and sports infrastructure in Bihar will be constructed. An additional allocation to support capital investments will be provided. The requests of Bihar government for external assistance from multilateral development banks will be expedited. Andhra Pradesh Reorganization Act. Our government has made concerted efforts to fulfill the commitments in Andhra Pradesh Reorganization Act. Recognizing the state's need for the capital, recognizing the state's need for a capital, we will facilitate special financial support through multilateral development agencies. In the current financial year, 15,000 crore rupees will be arranged with additional amounts in future years. Our government is fully committed to financing and early completion of the Polavaram irrigation project, which is the lifeline for Andhra Pradesh and its farmers. This will facilitate our country's food security as well. Under the Act, Andhra Pradesh Reorganization Act, for promoting industrial development, funds will be provided for essential infrastructure such as water, power, railways, and roads in Kopparthi node on the Visakhapatnam-Chennai industrial corridor and Varavakal node on the Hyderabad-Bangalore industrial corridor. An additional allocation will be provided this year towards capital investment for economic growth. Grants for backward regions of Rayalaseema, Prakasham, North Coastal Andhra, as stated in the Act, will be provided. PM Awas Yojana. 3 crore additional houses under the PM Awas Yojana in rural and urban areas in the country have been announced, for which the necessary allocations are being made. Women-led development. For promoting women-led development, the budget carries an allocation of more than 3 lakh crore for schemes benefiting women and girls. This signals our government's commitment for enhancing women's role in economic development. Pradhan Mantri Janjatiya Unnat Gram Abhiyan. For improving the socio-economic condition of tribal communities, we will launch the Pradhan Mantri Janjatiya Unnat Gram Abhiyan by adopting saturation coverage for tribal families in tribal majority villages and aspirational districts. This will cover 63,000 villages, benefiting 5 crore tribal people. Bank branches in northeastern region. More than 100 branches of India Post Payment Bank will be set up in the northeast region to expand the banking services. This year, I have made a provision of 2.66 lakh crore rupees for rural development, including rural infrastructure. Priority 4, manufacturing and services, support for promotion of MSMEs. This budget provides special attention to MSMEs and manufacturing, particularly labor-intensive manufacturing. We have formulated a package covering financing, regulatory changes, and technology support for MSMEs to help them grow and also compete globally, as mentioned in the interim budget. I'm happy to announce the following specific measures. Credit guarantee scheme for MSMEs in the manufacturing sector. For facilitating term loans to MSMEs for purchase of machinery and equipment without collateral or third-party guarantee, a credit guarantee scheme will be introduced. The scheme will operate on pooling of credit risks of such MSMEs. A separately constituted self-financing guarantee fund will provide to each applicant guarantee cover up to 100 crore rupees, while the loan amount may be larger. The borrower will have to provide an upfront guarantee fee and an annual guarantee fee on the reducing loan balance. new assessment model for MSME credit. Public sector banks will build their own in-house capability to assess MSMEs for credit instead of relying on external assessment. They will also take a lead in developing or getting developed a new credit assessment model based on the scoring of digital footprints of the MSMEs in the economy. This is expected to be a significant improvement over the traditional assessment of credit eligibility based only on asset or turnover criteria. That will also cover MSMEs without a formal accounting system. Credit support to MSMEs during stress period. I'm happy to announce a new mechanism for facilitating continuation of bank credit to MSMEs during their stress period while being in special mention account, SMA stage, for reasons beyond their control. MSMEs need credit to continue their business and to avoid getting into the NPA stage. Credit availability will be supported through a guarantee from a government-promoted fund. Mudra loans. The limit of Mudra loans will be enhanced to 20 lakh from the current 10 lakh for those entrepreneurs who have availed and successfully repaid previous loans under the Tarun category. Enhanced scope for mandatory onboarding in trades. For facilitating MSMEs to unlock their working capital by converting their trade receivables into cash, I propose to reduce the turnover threshold of buyers for mandatory onboarding on the trades platform from rupees 500 crore to 250 crore rupees. This measure will bring 22 more CPSCs and 7,000 more companies onto the platform. Medium enterprises will also be included in the scope of the suppliers. SIDBI branches in MSME clusters. SIDBI will open new branches to expand its reach to serve all major MSME clusters within 3 years and provide direct credit to them. With the opening of 24 such branches this year, the service coverage will expand to 168 out of 242 major clusters. MSME units for food irradiation, quality and safety testing. Financial support for setting up of 50 multi-product food irradiation units in the MSME sector will be provided. Setting up of 100 food quality and safety testing labs with NABL accreditation will be facilitated. E-commerce export hubs. To enable MSMEs and traditional artisans to sell their products in international markets, e-commerce export hubs will be set up in public-private partnership mode. These hubs, under a seamless regulatory and logistic framework, will facilitate trade and export-related services under one roof. Measures for promotion of manufacturing and services. Internship in top companies. As the fifth scheme under Prime Minister's package, our government will launch a comprehensive scheme for providing internship opportunities in 500 top companies to 1 crore youth in 5 years. They will gain exposure for 12 months to real-life business environment, varied professions, and employment opportunities. An internship allowance of 5,000 per month, 5,000 rupees per month, along with a one-time assistance of 6,000 rupees will be provided. Companies will be expected to bear the training cost and 10% of their internship cost from their CSR funds. Industrial parks. Our government will facilitate development of investment-ready, plug-and-play industrial parks with complete infrastructure in or near 100 cities in partnership with the states and private sector by better using town planning schemes. 12 industrial parks under the National Industrial Corridor Development Program also will be sanctioned.
Veggie paper, no. Please, Petty.
Rental housing. Rental housing with dormitory type accommodation for industrial workers will be, just 1 minute. Rental housing, I repeat, rental housing with dormitory type accommodation for industrial workers will be facilitated in PPP mode with VGF support and commitment from anchor industries. Shipping industry, ownership, leasing and flagging reforms will be implemented to improve the share of Indian shipping industry and generate more employment. Critical mineral mission. We will set up a critical mineral mission for domestic production, recycling of critical minerals and overseas acquisition of critical mineral assets. Its mandate will include technology development, skilled workforce, extended producer responsibility framework, and a suitable financing mechanism. Offshore mining of minerals. Our government will launch the auction of the first tranche of offshore blocks for mining, building on the exploration already carried out. Digital public infrastructure applications. Turning to the services sector, I propose development of DPI applications at population scale for productivity gains, business opportunities, and innovation by the private sector. These are planned in the areas of credit, e-commerce, education, health, law and justice, logistics, MSME service delivery, and urban governance. Integrated technology platform for IBC ecosystem. An integrated technology platform will be set up for improving the outcomes under the Insolvency Bankruptcy Code for achieving consistency, transparency, timely processing, and better oversight for all stakeholders. Voluntary closure of LLPs. The services of the Center for Processing Accelerated Corporate Exit, CPACE, will be extended for voluntary closure of LLPs to reduce the closure times. National Company Law Tribunals. The IBC has resolved more than 1,000 companies, resulting in direct recovery of 3.3 lakh crore to creditors. 3.3 lakh crore rupees to creditors. In addition, 28,000 cases involving over 10 lakh crore rupees have been disposed of even prior to admission. Appropriate changes to the IBC, reforms and strengthening of the tribunal and appellate tribunals will be initiated to speed up insolvency resolution. Additional tribunals will be established. Out of those, some will be notified to decide cases exclusively under the Companies Act. Debt recovery. Steps for reforming and strengthening debt recovery tribunals will be taken. Additional tribunals will be established to speed up recovery. Priority 5, urban development. Cities as growth hubs. Working with states, our government will facilitate development of cities as growth hubs. This will be achieved through economic and transit planning and orderly development of peri-urban areas utilizing town planning schemes. Creative redevelopment of cities. For creative brownfield redevelopment of existing cities with a transformative impact, our government will formulate a framework for enabling policies, market-based mechanisms, and regulation. Transit-oriented development. Transit-oriented development plans for 14 large cities with a population above 30 lakh will be formulated, along with an implementation and financing strategy. Urban housing. Under the PM Awas Yojana, Urban 2.0, housing needs of 1 crore urban poor and middle-class families will be addressed with an investment of 10 lakh crore rupees. This will include the central assistance of 2.2 lakh crore rupees in the next 5 years. A provision of interest subsidy to facilitate loans at affordable rates is also envisaged. In addition, enabling policies and regulations for efficient and transparent rental housing markets with enhanced availability will also be put in place. Water supply and sanitation. In partnership with state governments and multilateral development banks, we will promote water supply, sewage treatments, and solid waste management projects and services for 100 large cities through bankable projects. These projects will also envisage use of treated water for irrigation and filling up of tanks in nearby areas. Street markets. Building on the success of PM Swanidhi scheme in transforming the lives of street vendors, our government envisions a scheme to support each year over the next 5 years the development of 100 weekly hearts or street food hubs in select cities. Stamp duty. We will encourage states which continue to charge high stamp duty to moderate the rates for all and also consider further lowering duties for properties purchased by women. This reform will be made an essential component of urban development schemes. Priority 6, energy security, energy transition. In the interim budget, I had announced our strategy to sustain high and more resource-efficient economic growth, along with the energy security in terms of availability, accessibility, and affordability. We will bring out a policy document on appropriate energy transition pathways that balances the imperatives of employment, growth, and environmental sustainability. PM Surya Ghar Muft Bijli Yojana. PM Surya Ghar Muft Bijli Yojana. In line with the announcement in the interim budget, PM Surya Ghar Muft Bijli Yojana has been launched to install rooftop solar plants to enable 1 crore households obtain free electricity up to 300 units every month. The scheme has generated remarkable response with more than 1.28 crore registrations and 14 lakh applications, and we will further encourage it. Pumped storage policy. A policy for promoting pumped storage projects will be brought out for electricity storage and facilitating smooth integration of the growing share of renewable energy with its variable and intermittent nature in the overall energy mix. research and development of small and modular nuclear reactors. Nuclear energy is expected to form a very significant part of the energy mix for Vikasit Bharat. Towards that pursuit, our government will partner with the private sector for 1. Setting up Bharat Small Reactors, 2. Research and development of Bharat Small Modular Reactor, and 3. Research and development of newer technologies for nuclear energy. The R&D funding announced in the interim budget will be made available for this sector also. Advanced ultra supercritical thermal power plants. The development of indigenous technology for advanced ultra supercritical thermal power plants with much higher efficiency has been completed. A joint venture between NTPC and BHEL will set up a full-scale 800 megawatt commercial plant using AUSC technology. The government will provide the required fiscal support. Moving forward, development of indigenous capacity for the production of high-grade steel and other advanced metallurgy materials for these plants will result in strong spin-off benefits for the economy. Roadmap for hard-to-abate industries. A roadmap for moving the hard-to-abate industries from energy efficiency targets to emission targets will be formulated. Appropriate regulations for transition of these industries from the current perform, achieve, and trade mode to Indian carbon market mode will be put in place. Support to traditional micro and small industries. An investment grade energy audit of traditional micro and small industries in 60 clusters, including brass and ceramic, will be facilitated. Financial support will be provided for shifting them to cleaner forms of energy and implementation of energy efficiency measures. The scheme will be replicated in another 100 clusters in the next phase. Priority 7, infrastructure investment by central government. Significant investment the central government has made over the years in building and improving infrastructure has had a strong multiplier effect on the economy. We will endeavor to maintain strong fiscal support for infrastructure over the next 5 years in conjunction with imperatives of other priorities and fiscal consolidation. This year, I have provided 11,11,111 crore rupees for capital expenditure. This would be 3.4% of our GDP. Infrastructure investment by state governments. We will encourage states to provide support of similar scale for infrastructure, subject to their development priorities. A provision of 1.5 lakh crore rupees for long-term interest-free loans have been made this year also to support the states in their resource allocation. Private investment in infrastructure. Investment in infrastructure by private sector will be promoted through viability gap funding and enabling policies and regulations. A market-based financing framework will be brought out. Pradhan Mantri Gram Sadak Yojana, Phase 4 of the PMGSY will be launched to provide all-weather connectivity to 25,000 rural habitations, which have become eligible in view of their population increase. Irrigation and flood mitigation. Bihar has frequently suffered from floods, many of them originating outside the country. Plans to build flood control structures in Nepal are yet to progress. Our government, through the Accelerated Irrigation Benefit Program and other sources, will provide financial support for projects with estimated cost of 11,500 crore rupees, such as the Kosi-Michi intra-state link and 20 other ongoing and new schemes, including barrages, river pollution abatement, and irrigation projects. In addition, survey and investigation of Kosi-related flood mitigation and irrigation projects will be undertaken. Assam grapples with floods every year by the Brahmaputra River and its tributaries originating outside India. We will provide assistance to Assam for flood management and related projects. Himachal Pradesh suffered extensive losses due to floods last year. Our government will provide assistance to the state for reconstruction and rehabilitation through multilateral development assistance. Uttarakhand too suffered losses due to cloudbursts and massive landslides. We will provide assistance to the state. Recently, Sikkim witnessed devastating flash floods and landslides that wreaked havoc across the state. Our government will provide assistance to the state. Tourism has always been a part of our civilization. Our efforts in positioning India as a global tourist destination will also create jobs, stimulate investments, and unlock economic opportunities for other sectors. In addition to the measures outlined in the interim budget, I propose the following measures. Vishnupad Temple at Gaya and Mahabodhi Temple at Bodh Gaya in Bihar are of immense spiritual significance. Comprehensive development of Vishnupad Temple Corridor and Mahabodhi Temple Corridor will be supported, modeled on the successful Kashi Vishwanath Temple Corridor to transform them into world-class pilgrim and tourist destinations. Rajgir holds immense religious significance for Hindus, Buddhists and Jains. The 20th Tirthankara Muniswarata temple in the Jain temple complex is ancient. The Saptarishi or the 7 hot springs form a warm water Brahmkund that is sacred. A comprehensive development initiative for Rajgir will be undertaken. Our government will support the development of Nalanda as a tourist center, besides reviving Nalanda University to its glorious stature. Odisha's scenic beauty, temples, monuments, craftsmanship, wildlife sanctuaries, natural landscapes, and pristine beaches make it an ultimate tourism destination. Our government will provide assistance for their development to Odisha as well. Priority 8, innovation, research and development. We will operationalize the Anusandhan National Research Fund for basic research and prototype development. Further, we will set up a mechanism for spurring private sector-driven research and innovation at commercial scale with a financing pool of 1 lakh crore rupees in line with the announcement in the interim budget. Space economy. With our continued emphasis on expanding the space economy by 5 times in the next 10 years, a venture capital fund of 1,000 crore rupees will be set up. Priority 9, next generation reforms. Economic policy framework. We will formulate an economic policy framework to delineate the overarching approach to economic development and set the scope of the next generation of reforms for facilitating employment opportunities and sustaining high growth. Our government will initiate and incentivize reforms for 1. Improving productivity of factors of production, and 2. Facilitating markets and sectors to become more efficient. These reforms will cover all factors of production, namely land, labor, capital, and entrepreneurship, and technology as an enabler of improving total factor productivity and bridging inequality. Effective implementation of several of these reforms requires collaboration between the center and the states, and building consensus as development of the country lies in development of the states. For promoting competitive federalism and incentivizing states for faster implementation of reforms, I propose to earmark a significant part of the 50-year interest-free loan. Working with the states, we will initiate the following reforms. Land-related reforms and actions, both in the rural and urban areas, will cover land administration, will cover 1. Land administration, planning and management, and 2. Urban planning usage and building bylaws. These will be incentivized for completion within the next 3 years through appropriate fiscal support. Rural land-related actions. Rural land-related actions will include 1. Assignment of unique land parcel identification number, UL PIN, or Bhu Aadhaar for all lands. 2. Digitization of cadastral maps. 3. Survey of subdivisions, survey of map subdivisions as per current ownership. 4. Establishment of land registry. And 5. Linking to the farmers registry. These actions will also facilitate credit flow and other agricultural services. Urban land-related actions. Land records in urban areas will be digitized with GIS mapping. An IT-based system for property record administration, updating, and tax administration will be established. These will also facilitate improving the financial position of urban local bodies. Labor-related reforms. Services to labor. Our government will facilitate the provision of a wide array of services to labor, including those for employment and skilling. A comprehensive integration of e-Shram portal with other portals will facilitate such one-stop solution. Open architecture databases for the rapidly changing labor market, skill requirements, and available job roles, and a mechanism to connect job aspirants with potential employers and skill providers will be covered in these services. Shram Suvidha and Samadhan portal. Shram Suvidha and Samadhan portal will be revamped to enhance ease of compliance for industry and trade. Capital and entrepreneurship related reforms, financial sector vision and strategy. For meeting financing needs of the economy, our government will bring out a financial sector vision and strategy document to prepare the sector in terms of size, capacity, and skills. This will set the agenda for the next 5 years and guide the work of the government, regulators, financial institutions, and market participants. Taxonomy for climate finance. We will develop taxonomy for climate finance for enhancing the availability of capital for climate adaptation and mitigation. This will support achievement of the country's climate commitments and green transition. Variable capital company structure. We will seek the required legislative approval for providing an efficient and flexible mode for financing leasing of aircrafts and ships and pooled funds of private equity through a variable company structure. Foreign direct investments and overseas investment. The rules and regulations for foreign direct investment and overseas investments will be simplified to 1. Facilitate foreign direct investments, 2. Nudge prioritization, and 3. Promote opportunities for using Indian rupee as a currency for overseas investment. NPS Vatsalya. NPS Vatsalya, a plan for contribution by parents and guardians for minors, will be started. On attaining the age of majority, the plan can be converted seamlessly into a normal NPS account. Use of technology. We have successfully used technology for improving productivity and bridging inequality in our economy during the past 10 years. Public investment in digital infrastructure and innovations by the private sector have helped in improving access of all citizens, particularly the common people, to market resources, education, health and services. We will step up adoption of technology towards digitalization of the economy. Ease of doing business. For enhancing ease of doing business, we are already working on the Jan Vishwas Bill 2.0. Further, states will be incentivized for implementation of the business reforms, action plans, and digitalization. Data and statistics. For improving data governance, collection, processing and management of data and statistics, different sectoral databases, including those established under the Digital India Mission, will be utilized with active use of technology tools. New pension scheme. The committee to review the NPS has made considerable progress in its work. I'm happy that the staff side of the National Council of the Joint Consultative Machinery for Central Government Employees has taken a constructive approach. A solution will be evolved which addresses the relevant issues while maintaining fiscal prudence to protect the common citizens. Budget estimates for 24-25. For the year 24-25, total receipts other than borrowings and the total expenditure are estimated at 32.07 lakh crore rupees and 48.21 lakh crore rupees respectively. The net tax receipts are estimated at 25.83 lakh crore rupees. The fiscal deficit is estimated at 4.9% of the GDP. The gross and the net market borrowings through dated securities during 24-25 are estimated at 14.01 lakh crore rupees and 11.63 lakh crore rupees respectively. Both will be less than that in 23-24. The fiscal consolidation path announced by me in 2021 has served our economy very well, and we aim to reach the deficit below 4.5% next year. The government is committed to staying the course. From 2026-27 onwards, our endeavor will be to keep the fiscal deficit each year such that the central government's debt will be on a declining path as percentage of GDP. I will now move to Part B. Indirect taxes. Sir, I start with GST. It has decreased tax incidence on the common man, reduced compliance burden and logistics cost for trade and industry, and enhanced revenues of the central and the state governments. It is a success of vast proportions. To multiply the benefits of GST, we will strive to further simplify and rationalize the tax structure and endeavor to expand it to the remaining sectors. My proposals for customs duties intend to support domestic manufacturing, deepen local value addition, promote export competitiveness, and simplify taxation while keeping the interest of the general public and consumers surmount. In Budget 22-23, we reduced the number of customs duty rates. I propose to undertake a comprehensive review of the rate structure over the next 6 months to rationalize and simplify it for ease of trade, removal of duty inversion, and reduction of disputes. I shall now take up sector-specific customs duty proposals. Medicine and medical equipments. To provide relief to cancer patients, I propose to fully exempt 3 more medicines from customs duties. I also propose changes in the BCD on X-ray tubes and flat panel detectors for use in medical X-ray machines under the phased manufacturing program so as to synchronize them with the domestic capacity addition. Mobile phone and related parts. With a 3-fold increase in domestic production and almost a 100-fold jump in exports of mobile phones over the last 6 years, the Indian mobile industry has matured. In the interest of consumers, I now propose to reduce the BCD on mobile phone, mobile PCBA, and mobile charger to 15%. Critical minerals. Minerals such as lithium, copper, cobalt, and rare earth elements are critical for sectors like nuclear energy, renewable energy, space, defense, telecommunications, and high-tech electronics. I propose to fully exempt customs duties on 25 critical minerals and reduce BCD on 2 of them. This will provide a major fillip to the processing and refining of such minerals and help secure their availability for these strategic and important sectors. Solar energy. Energy transition is critical in the fight against climate change. To support energy transition, I propose to expand the list of exempted capital goods for use in the manufacture of solar cells and panels in the country. Further, in view of sufficient domestic manufacturing capacity of solar gas, glass, and tinned copper interconnect, I propose not to extend the exemption of custom duties provided to them. Marine products. India's seafood exports in the last financial year touched an all-time high of more than 60,000 crores of rupees. Frozen shrimp accounted for about 2/3 of these exports. To enhance their competitiveness, I propose to reduce BCD on certain broodstock, polychaete worms, shrimp, and fish feed to 5%. I also propose to exempt customs duty on various inputs for manufacture of shrimp and fish feed. Leather and textile. Similarly, to enhance the competitiveness of exports in the leather and textile sectors, I propose to reduce BCD on real down-filling material from duck or goose. I am also making additions to the list of exempted goods for manufacture of leather and textile garments, footwear, and other leather articles for export. To rectify inversion in duty, I propose to reduce BCD subject to conditions on methylene diphenyl diisocyanate MDI for manufacture of spandex yarn from 7.5 to 5%. Furthermore, the export duty structure on raw hides, skin, and leather is proposed to be simplified and rationalized. Precious metals. To enhance domestic value addition in gold and precious metal jewelry in the country, I propose to reduce customs duties on gold and silver to 6% and that of platinum to 6.4%. Other metals. Steel and copper are important raw materials. To reduce their cost of production, I propose to remove the BCD on ferronickel and blister copper. I am also continuing with nil BCD on ferrous scrap and nickel cathode and concessional BCD of 2.5% on copper scrap. Electronics. To increase value addition in the domestic electronics industry, I propose to remove the BCD subject to conditions on oxygen-free copper for manufacture of resistors. I also propose to exempt certain parts for manufacture of connectors. Chemicals and petrochemicals. To support existing and new capacities in the pipeline, I propose to increase the BCD on ammonium nitrate from 7.5% to 10%. Plastics. PVC flex banners are non-biodegradable and hazardous for environment and health. To curb their imports, I propose to raise the BCD on them from 10 to 25%. Telecommunication equipment. To incentivize domestic manufacturing, I propose to increase the BCD from 10 to 15% on PCBA of specified telecom equipment. Trade facilitation. To promote domestic aviation and boat and ship MRO, I propose to extend the period for export of goods imported for repairs from 6 months to 1 year. I'll read that again. To promote domestic aviation and boat and ship maintenance, repair and operations, I propose to extend the period for export of goods imported for repairs from 6 months to 1 year. In the same vein, I propose to extend the time limit for re-import of goods for repairs under warranty from 3 to 5 years. I now move to direct taxes. We will continue our efforts to simplify taxes, improve taxpayer services, provide tax certainty, and reduce litigation while enhancing revenues for funding the development and welfare schemes of the government. It has been our endeavor to simplify taxation. We have taken a number of measures in the last few years, including introduction of simplified tax regimes without exemptions and deductions for corporate tax and for personal income tax. This has been appreciated by taxpayers. 58% of corporate tax came from the simplified tax regime in the financial year 22-23. Similarly, as per data available till now, for the last fiscal, more than 2/3 have availed the new personal income tax regime. Comprehensive review of the Income Tax Act. I am now announcing a comprehensive review of the Income Tax Act 1961. The purpose is to make the Act concise, lucid, easy to read and understand. This will reduce disputes and litigation, thereby providing tax certainty to the taxpayers. I will also bring down the demand embroiled in litigation. It is proposed to be completed in 6 months. A beginning is being made in the Finance Bill by simplifying the tax regime for charities, TDS rate structures, provisions of reassessment and such provisions, and capital gains taxation. Simplification for charities and TDS. Two tax exemption regimes. The two tax exemption regimes for charities are proposed to be merged into one. The 5% TDS rate on many payments is being merged into the 2% TDS rate, and the 20% TDS rate on repurchase of units by mutual funds or UTI is being withdrawn. TDS rate on e-commerce operators is proposed to be reduced from 1 to 0.1%. Moreover, credit of TCS is proposed to be given in the TDS to be deducted on salary. Further, I propose to decriminalize delay for payment of TDS up to the due date of filing statement for the same. I also plan to provide a standard operating procedure for TDS defaults and simplify and rationalize the compounding guidelines for such defaults. Simplification of reassessment. I propose to thoroughly simplify the provisions for reopening and reassessment. An assessment hereinafter can be reopened beyond 3 years from the end of the assessment year only if the escaped income is 50 lakh rupees or more, up to a maximum period of 5 years from the end of the assessment year. Even in such cases, a time limit of 6 years before the year of the search, as against the existing time limit of 10 years, is being proposed. This will reduce tax uncertainty and disputes. Simplification and rationalization of capital gains. Capital gains taxation is also proposed to be hugely simplified. Short-term gains on certain financial assets shall henceforth attract a tax rate of 20%, while that on all other financial assets and all non-financial assets shall continue to attract the applicable tax rate. Long-term gains on all financial and non-financial assets, on the other hand, will attract a tax rate of 12.5%. For the benefit of the lower and the middle income classes, I propose to increase the limit of exemption of capital gains on certain financial assets to 1.25 lakh rupees per year. Listed financial assets held for more than a year will be classified as long-term, while unlisted financial assets and all non-financial assets will have to be held for at least 2 years to be classified as long-term. Unlisted bonds and debentures, debt mutual funds, and market-linked debentures, irrespective of holding period, however, will attract tax on capital gains at applicable rates. Taxpayer services. All the major taxpayer services under GST and most services under customs and income tax have been digitalized. All remaining services of customs and income tax, including rectification and order giving effect to appellate orders, shall be digitalized and made paperless over the next 2 years. Litigation and appeals. While our concerted efforts to reduce pendency of appeals at various appellate fora are beginning to show good results, it will continue to engage our highest attention. To dispose of the backlog of first appeals, I plan to deploy more officers to hear and decide such appeals, especially those with large tax effect. For resolution of certain income tax disputes pending an appeal, I am also proposing Vivad Se Vishwas Scheme 2024. Further, I propose to increase monetary limits for filing appeals related to direct taxes, excise and service tax in the tax tribunals, high courts and Supreme Court to 60 lakh rupees, 2 crore rupees and 5 crore respectively, with a view to reduce litigation and provide certainty in international taxation. We will expand the scope of safe harbor rules and make them more attractive. We will also streamline the transfer pricing assessment procedure. Employment and investment. I have a few proposals to promote investment and foster employment. First of all, to bolster the Indian startup ecosystem, boost the entrepreneurial spirit, and to support innovation, I propose to abolish the so-called angel tax for all classes of investors. Second, there is tremendous potential for cruise tourism in India. To give a fillip to this employment-generating industry, I am proposing a simpler tax regime for foreign shipping companies operating domestic cruises in the country. Third, India is a world leader in the diamond cutting and polishing industry, which employs a large number of skilled workers. To further promote the development of this sector, we would provide for safe harbor rates for foreign mining companies selling raw diamonds in the country. Fourth, to attract foreign capital for our development needs, I propose to reduce the corporate tax rate on foreign companies from 40 to 35%. Deepening the tax base. I have a couple of proposals for deepening the tax base. First, security transaction tax on futures and options of securities is proposed to be increased to 0.02% and 0.1% respectively. Second, for reasons of equity, I propose to tax income received on buyback of shares in the hands of recipients. Other proposals. To improve social security benefits, deduction of expenditure by employers towards NPS is proposed to be increased from 10 to 14% of the employee's salary. Similarly, deduction of this expenditure up to 14% of salary from the income of employees in private sector, public sector banks and undertakings opting for the new tax regime is proposed to be provided. Indian professionals working in multinationals get ESOPs and invest in social security schemes and other movable assets abroad. Non-reporting of such small foreign assets has penal consequences under the Black Money Act. Such non-reporting of movable assets up to 20 lakh rupees is proposed to be depenalized. Other major proposals in the finance bill relate to withdrawal of equalization levy of 2%, expansion of tax benefits to certain funds and entities in IFSCs, and immunity from penalty and prosecution to Benamidar on full and true disclosure so as to improve conviction under the Benami Transaction Prohibition Act 1988. Personal income tax. Coming to personal income tax rates, I have two announcements to make for those opting for the new tax regime. First, the standard deduction for salaried employees is proposed to be increased from 50,000 to 75,000 rupees. Similarly, deduction on family pension for pensioners is proposed to be enhanced from 15,000 to 25,000 rupees. This will provide relief to about 4 crore salaried individuals and pensioners. Second, in the new tax regime, the tax rate structure is proposed to be revised as follows. 0 to 3 lakh rupees, nil. 3 to 7 lakh rupees, 5%. 7 to 10 lakh rupees, 10%. 10 to 12 lakh rupees, 15%. 12 to 15 lakh rupees, 20%. And above 15 lakh rupees, 30%. As a result of these changes, a salaried employee in the new tax regime stands to save up to 17,500 rupees in income tax. Apart from these, I am also making some other changes as given in the annexure. As a result of these proposals, revenue of about 37,000 crore, that is 29,000 crore in direct taxes and 8,000 crore in indirect taxes will be foregone, while revenue of about 30,000 crore rupees will be additionally mobilized. Thus, the total revenue foregone is about 7,000 crores annually. Mr. Speaker, sir, with this, I commend the budget to this august House. Jai Hind.
Well, that was the first budget of Prime Minister Narendra Modi's third term, and income tax changes announced, but income tax changes for the salaried, personal income tax, and for the markets, two different sets of decisions. The first big key takeaway, the government has finally done some changes as far as slab rates are concerned and standard deduction in the income tax regime, but that is applicable only to the new tax regime, which is the zero exemption regime. On the other hand, capital gains tax for markets have been changed, and that has led to a sharp cut on the markets. I have with me Sourav Majumdar, editor of Business Today, and our chief markets editor, Shailendra Bhatnagar. Shail, I'll come to you for a quick take on what's happening with the markets as the finance minister has announced those tax changes.
Well, Siddharth, after a 2,000-point rally in the last 7 trading weeks, we've seen lots of profit booking happening, and the worst that the market was expecting, hoping that it would never happen, has come in place. Long-term capital gains tax has been increased to 12.5% versus 10%. Short-term capital gains tax has been risen to 20% versus 15% earlier. And to curb F&O speculation, the securities transaction tax has been doubled to 0.02%. Nifty down 1.3%. Sensex has shed 831 points. Nifty Bank is 500 points lower. And across the board, you see a very sharp sell-off happening, especially in the small cap index, now down 2.7%, about 500 points lower.
Shail, if we go through some of the sectors, let's try and bring up the consumption FMCG sector that was rallying in the green prior to the budget, and I wonder how that's doing. FMCG a standout still, but Shail, what would this end up doing? Because the finance minister also announced a revenue foregone figure of 37,000 crore, which means 29,000 crore is what the government says its revenues will go down by from direct taxes and 8,000 crore by indirect. But the number that it hopes to get from this enhanced capital gains on the markets has not been disclosed. So very clearly, is this a move to reduce some sort of speculative activity on the markets? Because it can't be just a revenue realization measure.
Siddharth, from what I understand in the F&O space, that's an addiction. So unfortunately, we have this upon us that the tax on this addiction has gone up. Now, whether that will curb this addiction, I don't know. I mean, we've already seen over the last 30-35 years how increasing tax on cigarettes has not resulted in cigarette consumption going down.
Okay, Sourav, come in on that. What do you make of this? Very clearly there was expectation, RBI, SEBI, economic survey, and the budget delivering on that expectation, Sourav?
Yeah, clearly, because even a couple of days before the budget, the Reserve Bank of India, no less, also commented on this, and RBI and SEBI together, and you and I, Siddharth, were there at the event where the SEBI chairperson also made it very clear that she sees F&O as becoming a systemic problem rather than a individual investor problem. So I'm not surprised, because I think, unfortunately, market people would be obviously hit by this, and you can see it from the way the markets reacted. But again, this has to be seen from the broader way in which it was being built up. And like Shail's rightly said, addiction, you got to pay a price. Simple.
Will this impact the markets is the big question. But for a moment, I'll slip into personal income tax, direct taxes. Shail, Sourav, and please weigh in on this. I made quick notes, and I'll recall that even as we try and bring those numbers up as a graphic on the screen. New tax regime slabs. 1, 2, 3, 4, 5, 6 slabs that I heard. I will recount the rate, and I want both my colleagues to comment on that. 0 to 3 lakh income, nil. And this is after the standard deduction has gone up by 50% from 50,000 to 75,000. 3 to 7 lakhs, 5%. 7 to 10 lakhs income, 10%. 10 to 12 lakhs, 15%. 12 to 15, 20%. 15 lakhs and above, 30 lakhs. So I sense a new slab, a new categorization, a narrower band. And as you can see, the key part is almost 3 lakh is the variance except from first to second slab. But the new tax regime being incentivized, the old tax regime very clearly on its way out, Sourav, because the government is offering SOPs only if you give up your exemptions and move to the new tax regime.
I think over time it has been clear, Siddharth, that the government wants to move away from an exemptions-driven regime and incentivize those who come in with, and therefore with simpler slabs, therefore with higher sort of standard deduction. 75,000 it's being raised to in the new tax. So the whole move over the last 3-4 years, if we've seen 3 years, it's been to move the taxpayer into the new regime, and I think this is a continuation of that policy.
Okay, let's try and get an expert view on this. I am told that one of India's foremost tax experts, Mr. H.P. Ranina, is joining us on the line. Mr. Ranina, welcome. Expectations of changes to capital gains coming true. What do you make of these announcements as far as the markets and specifically capital gains is concerned to start our conversation?
Thank you, Siddharth, for having me. I think these changes are quite cosmetic, to tell you frankly. Because while she has increased the amount of exemption from 1 lakh to 1.25 lakhs, I think that's hardly going to make much of a difference to the short-term investor or the retail investor. But, the increase in the security transaction tax may have a problem and may create a dampening effect on the capital market. So I think much more should have been done as far as short-term capital and long-term capital gains are concerned. Just bringing down the rate for short-term to 20% for some of the specified assets, I don't think will really help. So my own view is that the government should have been taken bolder steps, because the capital gains tax contribution to the exchequer is negligible. I don't understand why the government is shy of giving, greater benefits for capital gains exemption. I don't think it brings much revenue to the government in any case. But it would give a tremendous boost to the capital market and to market sentiments, especially for retail investors, if the capital gains tax, in fact, I would even say is abolished as far as these transactions are concerned. And that would really help. Because all over the world, the capital gains are rarely taxed, but in India, they are big taxed, and that creates a problem. Because apart from the tax implication, you have to understand the practical difficulties of calculating the taxable amount of capital gains. That leads to litigation. There's a lot of uncertainty. When did you buy an asset? When did you sell the asset? These are all issues which can be taken care of if capital gains tax itself is abolished.
Okay, we also have Nishal Maheshwari with us. Welcome to the show, Nishal. Quick reaction on what's been done as far as the capital gains tax is concerned, Mr. Ranina here giving us his point of view and saying that this is out of tune with what happens globally. What's your first reaction? Nishal, you are on mute. Please unmute because we can't hear you.
Yeah.
Go ahead.
So market doesn't like it. Market is down 100 points at the moment. But I think basically the bigger point was basically the market was waiting for a trigger to correct. I think it's just a trigger which has happened now, but market was waiting for a trigger, and this has come through. I think in a couple of days, 2-3 days, I think market is going to forget about it basically, and it's going to be business as usual. So I'm not really worried.
Okay, Shail has a question for you. Viewers, I think Nishal has a bit of a bad line, but we'll try and persist. Shail, go ahead.
Okay, this one's coming to you, Mr. Ranina. As you rightly said, there is always issue on how capital gains is taxed, and there are increasing litigations on this account as well. Anything out of the entire budget speech that you found positive for both the broader economy as well as the markets in general, especially the amount of borrowings as also the lowered fiscal deficit target?
Yes, coming to the first point, as far as the broader issue is concerned, the provisions of the budget are on the right trend. And certainly there are a lot of infrastructure investment to the figure of 1,11,111 crores is the same which was given in the interim budget in the month of February. So infrastructure development, of course, the capital outlay is very good. The VGF viability gap funding which has been provided for certain projects is also excellent. It will promote a lot of investment. But the most important thing is things like in tourism and in other factors, the government is trying to promote employment opportunities, which I think has been the critical issue as far as this government is concerned. And one of the reasons why the government did not do so well in the elections. The labor reforms have to be brought in, land reforms have been brought in. These are the crucial things which have been announced.
Okay.
But for that, she has said that we will depend on the state governments as well, because land and labor are state subjects. And unless the state governments, cooperate, these reforms cannot take place.
There's lots more in tax, including the angel tax being completely taken away. Good news for startups, share buybacks. There will be tax on that, the income that is earned. But Nishal, to you, heavy selling in banking, railway and the defense counter. What explains that? Because the capex guidance that was there in the interim budget stays, as far as I am aware. Saurav, step in on that. Has anything been said that kind of negates the capex focus? No, these are revenue raising measures.
That's right. I think 11.11 lakh crore, the one which is there was announced in the interim budget remains. And then the leeway she has got, she has given elsewhere, which was expected because nobody really expected a huge increase in capex.
And Mr. Ranina makes the point that capital gains will not yield to some great. And the finance minister made this specific point, Nishal, that 37,000 crore is the revenue foregone. But what's happening on the railway, defense and other similar counters?
So, two things. One is, I think the market was expecting a higher allocation than 11 lakh crores basically, which was provided in the interim budget for capex outlay in the budget. So I think that is a bit disappointment that she has just maintained that at 11 lakh crores. And second thing, I think all these stocks, both the defense as well as railways, had run quite a bit basically. I think this is all profit taking.
Yes.
This is the panic selling basically which people are doing. I do not see any reason for being panicky about it. I think in a couple of days, as I was saying earlier, people are going to just forget about it. And I think it's going to be business as usual.
But Nishal, if I may just jump in, this is Saurav here. You know, this whole point about market being disappointed with capex not being hiked is strange, because the fact that capex has reached its sort of maximum point which the government can front load has been said earlier also by Mr. Somanathan and others. So I don't know why the market should be disappointed given the fact that it's already 11.1 lakh crore. There's been a hike from from the earlier years, and there has to be some welfare spending. Revenue expenditure is the need of the hour, which I think the finance minister in her budget has actually indicated.
No, I totally agree with you, basically. I was just telling you basically what the market was expecting.
Okay.
So they were expecting a slightly higher budget.
Go ahead.
Okay.
A slightly higher budget, and that's why I think you see some amount of reaction. I broadly see that, as I was telling you earlier, basically, the market was just waiting for a trigger, and a good amount of profit taking is happening. That's all.
Nishal, there's been a bit of a recovery as well.
Yes.
The Nifty was down 360 points at one stage. Sensex was down 1,000 points. Now what's happening, Shail?
So, Siddharth, from a low of about 24,074 on the Nifty, we are back above almost 24,320. Now, whether this is a knee-jerk reaction or a dead cat bounce, only time will tell. But the fact is that, large parts of this PSU segments, as Nishal very rightly points out, had gone up, just dramatically higher. There was just no reason for 5, 6, 7 defense stocks to trade between a PE of 45 to 70 compared with the Nifty PE of 23. You've seen rail stocks go up 4, 5 times. There is some sanity in the market that needs to come back, and this was the trigger. Nishal is absolutely right. In 3-4 days, sanity will prevail, and you have 21,000 crore rupees coming in as monthly SIP, about 20,000 crore rupees coming from ultra HNIs, EPFO, you name it, and those money is using this opportunity to buy the dip. We've taken buy the dip very seriously, Siddharth.
Buying the dip is coming in. Saurav, as you come in, I just want to refocus attention of all viewers. The securities transaction tax, a much vilified term as far as market participants are concerned, STT on F&O hiked Mr. Ranina to 0.02% and 0.1%. This is what the finance minister said. Again, at these small amounts, is this more of a signal than anything else, Mr. Ranina?
I think it's more of a signal that try to not get into this F&O market. It's a disincentive, it's a dampener, because to some extent it is speculative in nature, and a lot of uneducated people are going into these F&O markets. So I think it is really a way of keeping it in check.
Yes, Mr.
Perhaps
Ranina,
it's good. It's good.
Mr. Ranina, coming away from all the depressing news in that sense, can we look at some of the positives? One of the big positives is the fiscal deficit of 4.9%, which is actually accelerated from what was expected at 5.1. And she has very clearly said that, next year she will, and going forward, she will keep government borrowings on a declining path. So what are your thoughts on the overall structure of the budget, number one, and the accelerated fiscal deficit target which she has set?
The overall budget is excellent, and it is on the right trends. You see, the last 5 years or last 10 years has been continued. So my own take is that international and global investors will look upon this very, very positively. And if she has said that in the fiscal year 2026, she'll bring it down to 4.5, this is something which will really ensure that we will be upgraded by all rating agencies.
Yes,
absolutely.
Yes.
And a lot of money will flow into India as far as foreign capital is concerned. So I'm very happy with this fiscal consolidation.
Mr. Ranina, although I feel, as chairperson of PwC India, Sanjeev Kishan also joins in on the debate, I think some of the reaction, Shail, Saurav, on the capex heavy counters, the railway, the defense and other associated stocks is also because of this fiscal consolidation strategy that has been outlined. So basically what is the government saying? What they had said in the interim budget, they will stay on it because also of the RBI's bonanza, because tax collections are higher, and therefore was this kind of sharp fiscal consolidation required for maintaining the growth momentum on a year-on-year basis? Saurav, Shail, we know how growth is projected to decline, although 7% is kind of the median scenario, but from where we were in the previous financial year. Sanjeev, welcome to the show. What's your big takeaway as far as this budget is concerned?
Well, I mean, I have to say, to me, it's a very, very positive budget. Some of the tax changes notwithstanding, because I think it hits all the right notes. I mean, in my view, she said 4.9%. She could have easily done 4.8 or something like that. She could have gone lower, but for some of the giveaways, etc., which were necessary for various reasons, she could have even actually gone to 4.7, to my mind. I mean, I think that's very, very, I think it's, as Mr. Ranana was saying, I think it puts India on a very, very good fiscal path, so to speak, and I think the 4.5 North Star is very clearly established. The other good part of the budget is that wherever the money is being spent, whether it is in terms of skilling, one of the things that I've been very talking about extensively about skilling and making sure that it enables our manufacturing and services both, I think there is enough allocation which is happening out there. Then when we talk about women empowerment and women skilling, etc., there is significant amount of budgetary support which has gone there as well. Then tourism is one of the things which we have been talking about will potentially create employment, and I think there is significant allocation which has happened there as well. We talk about our sustainability goals, and we talk about financing as a big element, while the blueprint is yet to be read, so I don't know what exactly it is going to say, but they're clearly talking about a framework for moving towards that. And I think these are the things that we have been talking about, that how do we create, we want to go green, but financing is a problem. What is the framework? Can we actually have lower cost, 25, 30 basis, whatever, I don't know, we'll have to figure that out. So I think some of those are very, very good. Now, if you look at it, from a foreign investor perspective as well, when we talk about foreign direct investments getting simplified, I think that's a very good thing. The whole abolition of the angel tax, which was being looked upon as an irritant, and I do not know how much money was getting, collected, I think is also very, very good.
So,
now, when you do...
Sanjeev, I interrupt you here. One of the other items that we have not spoken about, 40% peak rate for foreign companies reduced to 35%. What kind of impact is it likely to have?
See, one, I think, like talking to a bunch of foreign investors, at times they tell us that, coming to India can at times be a bit of a steep bump, but when we come to India, it is very gratifying. Now, I think for those who already exist in India, and that's my first reaction was that for those who already exist in India, they are suffering 40% tax, they are now going to be at 35% tax. So that itself is, is a very big...
Sanjeev, what about that concessional rate of tax that had been announced for new manufacturing startups? That sunset was 31st March 2024. Are we to assume that has gone away? And as Sourav comes in, Mr. Ranina, if you also have thoughts on that, please do. But Sanjeev, quickly on that.
Yeah, we didn't hear anything on it, so I'm presuming that's gone for the moment. And I think I could see that coming because they were saying no employment generation is happening. It's not really helping. That was a talk in the circles.
So, Mr. Ranina, are you okay with the number of tax slabs for corporation? I'm not talking about personal tax here. Are you okay with this differential treatment? And we assume that concessional rate for new manufacturing has sunset.
Yes, and that is unfortunate. That should have been continued. There's no reason not to continue this rate. In fact, even the foreign tax, 35% in my opinion is too high. Other countries charge a much lower rate of tax. They should have brought it down. That's why I'm saying this is one budget where they should have taken the bull by its horns and gone full hog to make sure that India's climate and investment, development goes through. So foreign corporate tax, why 35%? Why not make it 30%? I think that should have been the real thing. So to give a real push. And this 22% rate for new manufacturing should have been continued.
Right. I think, Mr. Ranina, there are 4 more budgets left in this government, and the finance minister.
But I don't know. Nishchal has been.
We don't have the luxury of time. Why wait for the next 4 years? Do it right now. What do we have to lose?
Now, talking of some big steps and the luxury of time, Sanjeev, I have a question for you. The big one, which really is a major move, is the employment-linked incentives which were announced. How does corporate India look at that? What is your view on the ELI steps which have been announced by the budget?
Well, I mean, I think they're telling us that they're telling corporate India to walk the talk. I think we have been talking about the fact that there has been lack of skilled manpower. They've been talking about employment generation and apprenticeship. The need also came in from the opposition, incidentally. I think in one stroke they've addressed many of those, and they've put the onus back on businesses. They've identified 500 large corporations, which they are saying should be responsible. I think it's very noble. And I think it puts the onus back on us. I don't see anything wrong in it. I think it's very, very the right approach, right thing.
And corporate India should have got a signal from yesterday where number of times the private sector was mentioned as having to take the onus forward now in the economic survey.
The one other thing which I will say is that, I think the economic survey said it yesterday, the coordination between central spending, state spending, and they've given some allocation, 1.52 lakh crores also for states to do capex, and then private sector. It has to be a triple engine kind of a thing, moving towards India's Viksit Bharat agenda.
Okay, Shail, as you go to Nishchal, before that I just want to quickly introduce Andrew Holland, CEO of Avendus Capital, who's also joined us. But Shail, you had a question for Nishchal.
Yeah, Nishchal, I think one clear beneficiary of this budget is ITC. There is no additional tax on cigarettes, and this is one counter that's it's a sleeping giant that has awoken. Any view that you would have on ITC and broader markets in general? There seems to be a recovery underway.
So I think one thing basically which was being asked by the market was basically putting some money into the hands of the middle class and the consuming class, and I think with the cut in taxes, government has done that. So ITC, I think it will be a double beneficiary. One, obviously there has been no tax increased on the cigarettes, and the other side basically from the consumption side. Yeah. So definitely, we continue to believe basically ITC is a good stock to buy and accumulate in the portfolio.
Shail, as you ask, go to Andrew, I just want to focus everyone's attention on the real estate sector.
Yes.
Not just from the point of view of the Awas Yojana expansion, but also the fact that I'm wondering with the new tax regime, there is no home loan exemption that is going to be available. It doesn't apply to luxury housing, but there might be some impact. But please bring in Andrew to the debate.
As far as purchase of homes are concerned, especially in Andrews and Nishchal's city, people are not looking at tax breaks to buy 100 crore rupee flats. And I'm sure both Nishchal and Andrew are also in the pipeline to buy such flats.
Maybe they have already. But Andrew, come in on this. What do you make of this budget?
So, I mean, basically it's more of the same in terms of that. The interim budget hasn't really kind of moved the needle. And of course, they've used some of that RBI dividend to kind of prop up the rural economy and particularly AP and Bihar. So I mean, I think the market was expecting that. So that's no negative there. Fiscal deficit's under control. So it's a more of a, I think if from a market perspective, the consumption stocks will probably be the big beneficiaries here. And of course, the tax increases. Long-term capital gains tax, I'm not really worried about. But for short-term capital gains tax, I think the kind of the companies which were kind of, I would say, kind of had that retail focus in terms of trading, obviously will be under pressure, and that lends itself down to the kind of small and mid caps favourites for the retail investors. So that would be the dampener, I would say, on this budget.
Okay. Andrew, let's look at the FMCG space. And we had this conversation 3 weeks ago where you had mentioned that there is a time correction that's happened in FMCG stocks. Valuations remain what they were 4 years ago. And here is the loan index that is up today. The Nifty FMCG index up 1.8%. They are expensive. These valuations cannot be defended. But even now, is there anything that attracts to you to FMCG stocks, and if you can take a couple of names?
Yeah, I unfortunately can't talk specific stocks, but I think that when we spoke last time, I also mentioned that within FMCG, some of this will take time to reflect in the top line. It doesn't really happen overnight. So therefore, I'd look within that theme of premiumization, because I think that's going to continue, and if anything, that's going to be helped by this budget going forward. So, premiumization in beverages. So, those companies involved in beverages, alcoholic and non-alcoholic, I think will do very well going forward. So that's the theme I would play within FMCG for the longer term growth story of India.
Okay, one stock that I'd like to mark on the screen is AstraZeneca, up about 11% now in the vicinity of 6,500 or so. I believe there are some duty reductions that have happened on some kind of cancer drugs. So maybe
three of them in fact. So Saurav, come in.
Andrew, I wanted to ask you, from as a market person, what is your sense about, this whole environment was building up about F&O, with RBI and SEBI, and, there was a lot of concern. And today you have the F&O taxes, just being raised by a bit, but, that's dampened sentiment a lot. What is your sense? Did you see it coming, or was that a rude shock?
No, it wasn't a rude shock. I mean, I think, given what the RBI said, what SEBI have said, and even the economic policy, kind of highlighted the problem. So if you're going to talk the talk, then you have to do it. And that's what they've done. So not surprised in that they've taken this opportunity to try and dampen down the kind of speculation or trading in the markets. But it all goes back to now the fundamentals of India. So on a long-term basis, you're not worried about the long-term capital gains tax. But, for that trading, with high valuations that we have in India and first quarter earnings not looking so great, it's going to be a little bit more tougher to kind of make those gains, particularly when you're paying a higher tax.
That's right. One of the things behind this budget, viewers, and we are also going to be joined by other guests and our colleague Sakshi Batra as well, is that the State Bank of India in the run-up to the budget had said, please do something to incentivize fixed deposit savers. Now, I haven't seen any fine print, and I wonder, Saurav, if you've seen, or Shail, but Sanjeev Kishan, that question is to you. This whole build-up that fixed deposits, bank deposit mobilization, and that being down at multi-year lows, that concern doesn't seem to, at least minus the fine print, have been dealt with by the budget. Do you think it was to be expected at all?
Well, in a primary way, it hasn't. But in a secondary way, with the disincentivization for F&O trades and speculative trades, in a secondary way, if I may call it so, it has been, right? I mean, they have also maintained the taxation at applicable rates on mutual funds, on debt mutual funds, which is what the change that they made last year. And previous to that, on insurance-linked insurance, insurance policies like ULIPs and so on and so forth. So I think they have retained all of that, and on top of it, there is disincentivization for speculative trade. So by that, hopefully a little bit of secondary way that's come through, but not in a primary way. I mean, that's certainly. But I don't think much more could have been done, honestly speaking, because mutual fund trades are now already being taxed at full rates as FDs are. The only thing is about timing, because there you can actually, the gains accrue only when you liquidate, and in this it is on a yearly basis.
Sanjeev, sorry, Shail, you want to mark the Nifty, but Sanjeev, on the screen, I'll request my producers to stay with this. The new tax regime. Sanjeev, proposed slabs and the current slabs, see the changes. I wonder if you can see them, but basically the headline being save up to 17,500 rupees. The question I ask, for someone who is invested at peak rebate that is possible for home loan, will it make sense to move to the new tax regime? Sanjeev Kishan, before we start marking the markets with Shail and Sakshi.
Well, I think at these levels, these don't necessarily make any significant shifts. I mean, 17,500 rupees, will not create any significant. That's more from a consumption standpoint, I think, not so much from a housing finance or any such thing. I think, as Andrew was saying, that just put a little bit more money in the hands of people for consumption, nothing else.
So, Siddharth, I'll just place a small bet. I feel that the Nifty will end in the green. So, this is what Biden...
Didn't know you were a betting man.
Now this is the only bet we can place because F&O has been made costlier.
No, so is that irrational disappointment in the initial
I'll tell you
what, the market?
I'll tell you why the knee-jerk was there. Remember, the STT originally was placed to remove the capital gains tax.
That's right.
Right. Yes. Now what you've done is
you have both now.
And you've doubled STT and you've increased capital gains tax.
So death and taxes will not leave us. But Sakshi Batra has come in, and I know as she was rushing in from another studio, she messaged to say that she has questions for Andrew and Nishchal. So Sakshi, we're going to take a quick break for 2 minutes. Go ahead with a question for both of them.
Absolutely. So first, Andrew, to you, do you think, just like how Shail has pointed out, we are going going to be seeing a bounce back? We had seen that 6% crash on one day on the elections day. The next day the markets had bounced back. Will this be also digestible in the markets?
See, I think the long-term capital gains tax will be digested, and that's not a problem. So by tomorrow, we'll go back to the fundamentals. And the fundamentals, if you look at the first quarter results, are not so great. And there's lots of moving parts globally as well. So, there's no real catalyst for the market to move higher, given the valuations we have. So, it's been more of the same. Yes, we knew that there's going to be more expenditure. So maybe FMCG is the place to hide. If your favorite stocks, which were traded very highly by retail investors, are the ones which are going to suffer, in my view.
And one point I'd just like to make, we have two tax experts on the panel. To you, Mr. Ranina, specifically, we don't know as of now what date will these new capital gains tax come into effect. So for what is earned so far, I think investors will pay a lesser degree of tax, and from now on I believe that the tax rates will be higher at current market prices. Is my thinking right, sir?
Yes, provided this is what is specifically mentioned in the budget, from which date it is to come into effect. So we have to see the fine print. But certainly what has already happened in the past, that will not be affected by the new regime.
Okay, now Siddharth, I just want to mark one more point, important news point for everybody as you go to Nishchal. The rupee is at an all-time low of 83.69 to the US dollar. We'll bring that up on the screen, but just mark the rupee for a moment. Sakshi, over to you.
Absolutely. Right, Mr. Ranina, I'll also get you in, and I wanted to understand from you, this, especially the STT, the way it has been increased. Do you think this is going to be detrimental for the stock markets, especially the volumes, or this is the right fashion with which the concerns that were being raised by the SEBI chairperson erstwhile and in the economic survey yesterday is the right direction, the right way to curb some of the volatility and extreme frothiness that we are seeing in this space, sir?
Yes, Sakshi, the main reason is that FNO will be dampened, but that will in fact benefit the equity market. So my own view is that people will stop going to the speculative route of FNOs because they feel that the profit is much more, but now they will divert the funds to the equity market. And if they do that, I think the equity market should improve, should do better. And it's good for the retail investors. FNOs are speculative in the sense, and unless you have a very broad knowledge of the capital market, I don't think you can really make a good money on that. Many people have lost money. And that's why RBI and SEBI have been cautioning investors that please try to curtail the FNO market. But that will benefit the equity market in the long run, in the short run, in fact.
Right. Nishchal, I also have a question for you. According to some of the news points that I'm getting right after the fine print, LTCG on real estate gets reduced to 12.5% from 20% versus the asset classes now, stock markets versus real estate. Where do you think the money will go? I think you're on mute, sir. Could you please unmute yourself?
I think basically these are two different asset classes altogether. One is obviously you have very large investments when you have to do anything into the real estate. And here you can maybe do with a minimum like 5,000 rupees also, you can start with an SIP. And second thing is liquidity. So I think these are two different classes. I don't think so similar kind of investors are coming into both these classes, because if one is making these, he's very clear saying that he wants to do a long-term investment as far as real estate is concerned, and equities may be short-term also. So I don't think so it's going to impact. Yeah, rationalization across asset classes is, I think, what the government is trying to do. And that is what they have done basically when they have brought down the taxes basically for real estate.
Okay, I think,
my question to Sanjeev on a slightly broader level. Sanjeev, do you think the overall, if you look at the pluses and minuses, do you think the budget has essentially ticked all the right boxes in terms of the statement? See, please remember the Prime Minister and the government has been saying that this is a budget which will set the stage for Viksit Bharat. Now, having said that, and it has also addressed the concerns, the immediate concerns, employment, skilling, MSMEs. At least the announcements seem to suggest. So what is your sense? Do you think, and also remember that it has done things for the allies as well, you know, whether it is the Bihar situation or Andhra, they have done stuff for them as well. So do you think in a sense the finance minister has done this balancing act and ticked all the right boxes?
Me, certainly, Saurabh. I mean, you know, you mentioned the MSME, and I think let's not forget it. That's been an ask of the industry because supply chains are getting impacted. They're going to get impacted by energy shifts and all that. And, you know, some of them don't have strong enough balance sheets. So I think the credit financing, which is going to be available to MSME, which is also an employment generator, by the way. And employment is one of the big things that we've been talking about. I think that's very important. See, let's not also forget that they have actually set a very good roadmap. Like, I mean, we talk about land reforms and labor reforms. Those are the two things that she addressed in the budget. Okay. She said that she is going to come up with, you know, very clear, with digitization of urban land records and so on and so forth. So all of that has been done. Even on rural side, they've done it. Even she addressed the whole labor reforms part also, which is what foreign investors at that time say that, okay, you know, because of land and labor reforms, which is a state subject, you know, which is not necessarily a central subject, at times it becomes harder. You know, when she's also sort of talking about you know, a broad vision of this for the financial services sector, which is of course in better health at this point in time. And then, you know, let's not also forget that when we talk about, you know, people looking at India and India investments, and I take Andrew's point that, you know, some of the most recent results have not been, you know, maybe very healthy in that sense. I think you know, over a period of time, we need to move towards, when the RBI and the government are a little bit more confident, to a lower interest regime. And that hopefully will put us on the path of enhancing private capital. See, the RBI dividend, which is there last year, which it came on the back of very high yields on US dollar bonds that we had, will continue this year as well. Because in US also, the bond rates are still very high. So we'll continue to have that cushion. So the intention is to use that cushion and provide some of these enablements and give policy statements and directions, so which by the India investment quotient goes up and involve the states and involve the private sector, and that's why I'm very sanguine about the budget.
Andrew, one quick point, you know, given that the budget has been digested, and you use that word, is the next signal going to be for the markets from any rate policy decisions that the MPC may take? Does the attention now shift towards that?
I still think, so I'll answer that question shortly, but I think one of the factors you mentioned before was that, you know, in all of this budget, it does nothing to help the banks in terms of their, you know, attracting money to fixed deposits and getting deposit growth. And that to me is a very serious problem when you're thinking about all the expenditure that you're doing. If the banks are, you know, under pressure on their margins, it's going to be that loan growth might not pick up as quickly as we'd be hoping for. So I think banks are, you know, whilst it's led the sector up, I think it could lead, you know, the markets down again, because there's nothing in the budget for them to garner deposits again. In terms of, you know, will we be looking at interest rates reductions? I think we're going to have to look for what the Fed does first. If the Fed's going in September, you know, maybe we could think about November, December for the RBI, but I don't think they're in any hurry to do anything quickly until, you know, the Federal Reserve shows its hand. So it's your bet on the Federal Reserve, September or November for Federal Reserve.
Okay. One very quick point as we let Mr. Ranina go. Mr. Ranina, the finance minister also announced that the direct taxes code was back. She did not use those three words, but she said, you know, the essence of a direct taxes code. It's been going back and forth now for almost 19 years. I remember the first stories I did was way back in 2006, Mr. Ranina. What should we make of that announcement?
Well, what she has said is that the Income Tax Act 1961 is going to be overhauled in the next 6 months. So I don't know whether direct taxes code will be brought back, but they will make some rationalization in the Income Tax Act itself, because they want to keep the law as it is, because otherwise you change the number of sections and, you know, like you have this IPC and Indian Penal Code and Code of Criminal Procedure, it will become
well, Sourav, I think there's a worry for chartered accountants, and Mr. Sanjeev Kishan is one on the panel. I don't know if Nishchal is a CA, but for CAs, a worry may be coming up in 6 months or a year, because just like the criminal laws where lawyers are having to go back to school in some ways, CAs will also have to. But Mr. Ranina, thank you very much for your time with us today. Okay, quick update on the markets at this stage, Shail.
Siddharth,
is the process of recovery well and underway?
Absolutely. My bet is that you'll see a green tick on the Nifty.
Oh, you've been saying that for quite some time now. But on the banks, Sourav, I want to come to you for your view. Why do you think that weighty demands from the entire banking sector to, in some ways, incentivize deposit mobilization have not been heard? Is this the government tossing the ball towards RBI? कि आपने इतना बड़ा इंटरेस्ट रेट रखा, अब तुम संभालो, हमारे बस का इतना ही है.
See, banks, yes, I think partly you're right, maybe not in exactly those terms, but the fact of the matter
I take the blame for whatever I say.
But the fact of the matter is, I think the government is very clearly waiting for RBI to take the call on that, because, and it will have to wait till later this year, as was said earlier, because I think there are issues which the RBI has to be mindful of. On the other hand, if you look at, this whole saving versus speculation debate, I think the government has shown its hand in where it's wanting to go by the taxation on the F&O side.
Nishal wants to go, but I'll just slip in one quick question, 30 seconds, Nishal, with you. What should investors who are either invested in banking stocks or were looking at them do now?
I think so. Budget has been just, I think, some event. I would say basically, I think long-term fundamentals has to kick in. So if you are holding on to banks, basically some of the banks which we like, I think we should continue to hold. This quarter results are going to be good, and we have yet to see any interest rate cuts happening. So that should be beneficial to the banking sector as a whole.
Absolutely.
So continue to hold.
That's a good point there, Nishal, and thanks very much for taking out so much time. Andrew, I take that same point to you as well. Bank balance sheets, and I request all my colleagues also to weigh in on that, have never been better than this.
Yes.
Sourav, in all the time, the white hair and the lost hair that we all have collectively, PSU banks have never been better. You have behemoth private sector banks, yet you are seeing this reaction on one-off budget event. Andrew, is this sensible or just knee-jerk as far as the bank stocks are concerned?
No, I think on the bank stocks, it's because the pressure on NIMs is still very high, right? And you've done nothing to alleviate that in terms of helping get more deposits. So the margins will remain under pressure. And the second point is that, a lot of retail investors, particularly on the PSU banks, has been a favorite kind of trading for them. So again, the increase in short-term capital gains tax is gonna hurt them in that respect. So I think a double whammy for the banks in my mind.
And so that one more thing that has happened is that the Mudra loan amount is doubled to 20 lakhs.
Okay.
So that just might impact the PSU banking side of the economy at a time when the NIMs are under pressure. So maybe you need to twin that, and of course the kind of money that people have made on PSU
But
banks.
are you making the point that Mudra loans, the delinquency,
yes,
the concerns you basically alluding to that? At that stage, let's also welcome Manish Dangi, CEO and founder of Mosaic Asset Management, on to the panel. Welcome, Manish. Sakshi, over to you.
Manish, we were discussing right before the speech began on both the capital gains front and the F&O space as well. That's the question that I had put to you. Both these spaces have seen tax changes. Your first take.
So one thing that everyone knows, of course, that the capital gain tax has risen. What most do not appreciate that, you've actually touched something that market didn't want to touch, and therefore it is directional in nature. I think it's a bigger deal. Discerning people will understand that it's 12.5 today.
Yes.
And maybe a year out or two, it'll be 15 and 17.5 and thereafter 20.
Where does it stop?
So the way forward the way forward is harmonization of tax.
Yes.
Is what, as I said, more sophisticated investor or speculator would think of it.
Sanjeev, is that harmonization ever possible? 2005 was the time when the first internal notes on a direct tax code were put in place. It's almost 20 years now. Harmonization, stability, long-term certainty, rates outside the code, but the code being simple and just one small book. All of that has been said for 20 years and we continuously see these changes. Should we still keep our hopes alive?
I mean, this is the opportunity for us. I mean, I'm very, very optimistic about it. I think this is our opportunity, and I think enough has been said on that. I think they have shown initial effort to be able to do so. Even whatever has been announced today is a step in that direction, even though it might seem not very significant, but I think it's a step in the right direction. I certainly believe that it can happen. That's the way I would think about it.
Siddharth, the point I'd just like to make on capital gains tax is that when we came into the markets, there was no capital gains tax.
You've had the best of the rally.
Absolutely. And we are now aiming for a situation exactly like American markets, where no matter where your age is, you are taxed at the tax bracket of stock market profits as well. So if you pay 30% tax, you will pay 30% tax on your stock market income. That's what is happening on Wall Street for decades together, and possibly we are headed that way. You remember, Siddharth, especially on telecom bills, there was no service tax initially. It started at 5% and now it's at 17%.
And you know, one of these things, since you speak about that, and obviously that's more of a GST matter, but Sourav, the service tax, that is GST, that is levied on health insurance premiums. Manish, I wonder if you want to come in and tell our viewers about what kind of return expectations should they set for their overall portfolio post this budget. Because we have had some good outsized returns, but perhaps expectations need to be tempered further now.
Yeah, market is clearly very expensive, and a zone which is unlikely, at least if history were to be a guide, and unless, one cites some productivity boom of some kind, it's very unlikely that market would, in medium term, which is 5 year and above, deliver more than 10%, 11%. So, contrast this to 16% Nifty and 20% mid caps and 25% small caps in last 10 years. So I think, investors are primed for certain returns that market cannot offer. At this valuation, which is almost 1.5 standard deviation above, in any ways, forward PE, price to book, the bond yield and earning yield differential, Indian yield versus emerging market yield differential, in any frame that you think of our markets, they look expensive, and all ERP calculations will suggest that it's unlikely that you're going to get more than 3% excess return over bonds. Contrast this to a potential, just a small point, that, this budget, as I said in the morning also, is likely to be a bond budget. And, it surprised me further at 4.9% fiscal deficit, as a regime in which demand for bonds is actually far more than supply, after very, very long, after 2003-04 actually.
Yes.
And that means that, we are headed for a 10-year bond at 6% and below. So the final point is that it's likely that, the rate, bond returns and equity returns will perhaps converge for next 1 or 2 years.
Oh,
that's a beautiful point that you mentioned.
That's a really important
on a
point.
lighter note, maybe what they're also trying to say is that we don't want you to earn money from the markets. Go out, upskill yourself, generate some employment, and do some real work. So,
in fact, that's exactly the point I wanted to make, saying that let's move away. I mean, from the markets a bit and look at the real world.
Sourav, while all of you were saying this, I was reminded of several Hindi movie songs. I will not dare to repeat them because I am tone deaf. But lots of them like Hole Hole, Dheere Dheere. So this seems to be headed in a Manish. You have a song.
The real thing is that Jagjit's ghazal itni gurbat hai, to fir fasila itna kyun hai? So if the markets are doing so well, why aren't there jobs? So I think what they are trying to treat is not the second order, which is let's get market going, but the first order that let's get jobs going.
Absolutely.
So, and this is what entire world has actually now realized and figured that, lots of growth in market can exist without any job growth and main street growth.
Absolutely.
So let's get to the first derivative, first order instead of second order and third order, that is market.
Andrew, please weigh in on that as well, and I want you to perhaps add to that and tell our viewers what should we expect post-November once the US elections are done and dusted?
Just first of all, in terms of what you were talking about before, in terms of where can the market go from here, given the high valuations. I mean, our rule of thumb is that, earnings growth of 15%, which we're expecting this year, should be in line with the market growth as well in terms of the upside. Now, we've already done, 10% plus since April. So there's not really much to go for in the markets unless earnings, start to be kind of increased, which I don't expect now, following this budget. In terms of, the elections in the US, I mean, obviously, it's a moving changing picture every day. But I think the market's baking in a Trump win, and in a Trump win, you get lower taxes, lower interest rates, and so forth and so on. So that's good for markets, and that would be good then for emerging markets going forward. That's the kind of equity part of it. But obviously, policy-wise, we've got to wait and see, what kind of tariffs, how protectionist is going to be, how that's going to affect global growth, and therefore emerging markets. So I think it's a little bit early to kind of bake in a Trump win, but the markets will like what he's doing. But obviously, with the changes in the Democratic Party, will Kamala Harris be a good competitive edge against Trump winning, and that's still early days. So I think the markets are going to be more volatile in the second half of the year as we go into that, and I don't think India can withstand that, given the problems that might come from policy of a former President Trump coming in.
Shail, I have a question for you. You've been saying that the Nifty will end with a green tick in the end.
Yes.
Now, my question is that, do you think with this kind of reaction, which we are seeing in the markets today, as opposed to a fiscal deficit, which is actually 4.9, and a clear glide path and beyond, and also government borrowings poised to go, further down. Why is the market? I mean, this would have been otherwise on a good day. It would have been the biggest headline, right? What is? You think that is this F&O and STT have really spoiled the markets and spoiled the mood? Then that's
only for the real short term, Saurabh, and that's because of the day from which these LTCD and STTC will come into impact. See, from now on, there is a different tax rate. From the profit that I have already earned, which was book profit, I am booking it to transfer it into my bank account. Okay, so that is the knee-jerk reaction that you saw tax rates going up, and therefore those smart people who want to book that profit into actual profit are booking that number.
Profit booking. Andrew Holland, thanks so much for joining us for this extended period of time. We'll also be shortly joined by another guest, and we get a macroeconomic voice on the debate. But so I'll take moderate. Okay, go ahead, Shail.
I just want to mark one particular sector for the last 5 minutes. It's jewelry stocks.
Yes.
Look at Titan, look at Kalyan, and look at Thangamile jewelry. There has been a change in the basic customs duty. That tax has come down from 15% to 11%, and therefore you see this sharp surge, 4.5%, 5% higher in Titan, in Kalyan Jewellers, and of course Thangamile.
So there are jewels out there, even on a bad day.
That's a good one. Radhika Rao, ED and Senior Economist, DBS Bank, Singapore. Welcome, Radhika. I remember talking to you just literally hours ago. And we had gone over a lot of territory in that conversation. And it was wonderful, Saurav, because it was an all-women, top-notch economist panel. And we took great pride in that. But Radhika, your top 3 responses to this budget?
Hi, Siddharth. Good to speak to you again. I think some of the things that really need to be, given a lot more attention is what they've done with various capital, key factors of production. There's something for labor, there's something for capital, and there's something for land, right? In the sense that they're trying to get to the root of the issue, trying to get to, how labor and employment generation should be focused. So they're putting, of course, some some money in the hand of recently employed workers. Also paying attention to skilled labor. Apart from that, you've seen some capital in the sense that they would like more private sector participation also to come in on the capex side. I think so that is where the bent is. So it's very fine balance, I would think, trying to achieve fiscal consolidation without really compressing demand, so to speak. So they have looked at where the avenues could be, where you could boost, particularly employment generation. So overall, I think it's a fine balance. I think it's broadly along market expectations in terms of fiscal deficit being reduced. So that means you're implying that fiscal deficit is going to go down by about 70 basis points, right? Last year it was about 80 basis points lower, so thereabouts we have a 70 basis point now between fiscal 24 and fiscal 25. At the same time, they are conservative by not lowering borrowings to mean that, if there is some savings to be had in the second half.
But Radhika, 150 basis points reduction in 2 years, what does that mean for growth? Because the headline number for growth is projected to go down. So, how will it impact growth?
I think that's a very important question, Siddharth, because the interesting bit is that the revenue buffer that the government had between last year and this year, right? Look at the nature of that revenue buffer. It's not which is basically demand negative, to mean that it's coming from the RBI's surplus, which is a function of its financial operations. That means it's not due to higher taxes. That means you're not being regressive in terms of raising some tax levels. So from that point of view, I would think achieving this consolidation against a backdrop of increase in revenues, which is not negative for demand, I think that's what is important, and that's why I think this kind of faster pace of consolidation was possible. But nonetheless, I think in this, as your other panelists were also touching upon it, there have been taxation changes also. Some income tax relief being given on from one hand, and while wealth effects or capital gains being taxed, where the rates have gone up by a bit. So there too, I would think they're trying to put more money in the hands of people, especially if you're in the formal sector and along with those employed by MSMEs. So that's why I think this consolidation is not as demand negative, I would think, as previously is the case, where usually it's through higher taxation.
Radhika, just stay with us. Sort of one of the other things that we haven't, because we focused on the market, Sakshi, Shell, there was also a mention of Andhra stocks that were doing well.
They're still rallying. In fact, I was looking at them. The KCP Limited is up, Andhra Cements is up, and those are the only two stocks within the entire cement pack that seem to be rising in trade. You also have KNR Constructions. All of them are rallying in trade with that special packages that are coming in, announcements coming in.
Sort of a comment from you. For 10 years, the Modi government was not known to bend to demands. Is this a new Modi 3.0? The changed political reality is making the government more amenable to public demands, some in fact for taxes also. Is this a more responsive government really, Sourav?
It's a very good question, Siddharth, and you will recall we've been discussing this earlier also in other programs, that and in fact, when the new government was sworn in, that people were talking about coalition, whether Mr. Modi will be able to handle coalition. He's been used to, having it his way. And this is the example, you have two important allies, and both of whom you have tried to do something for, number one. Number two, this is one budget, and I wanted to say this, good you asked me this, that this is one budget which shows that the government has been listening. If this is not example of government has been, look at it, MSMEs, jobs, skilling, these were the discussion points.
Brilliant point. Radhika, therefore, this point that is even said by professional economists like you, that coalitions are good for growth. And this budget certainly a demonstration of that. I know you want to make a political point, and I'm not asking you to speak on the politics, but from a very broad overall political economy perspective, Does this budget tell you that it's good for growth because this is a more responsive administration at various levels, like Sourav was saying?
I think certainly. I mean, the announcement seemed to carry some, sobs, so to speak, for the at least 2-3 states which were in question. But again, we have to see whether that has resulted in them or the government's finances going awry. So according to at least the math that's available as of now and that I've had a look, it seems to suggest that it hasn't really thrown them off the consolidation path. There's going to be some way that revenues are going to be redeployed towards these ends as well. And I think we need to see the actual numbers. I haven't seen them as yet. But I would think that it could be in a phased manner. And it is targeted more towards, again, broader infra, broader tourism, those kind of channels as well. So, as far as macro stability and macro prudence is concerned, I think that's very much still on track. And I think you also found, for me, interestingly, again, that they did mention that the track beyond fiscal 26 is going to be married, so in terms of fiscal deficit path and the debt path is going to be married. So deficit will go down to the extent that the debt path also improves. And I think the final point on the capex, I think that's something that we had expected, which is that they wouldn't increase it very much from the 11.1 lakh crores that was announced.
There's one point which I wanted to mention, Siddharth. We've been talking about the RBI dividend bonanza, right? Now that's a windfall. This is a dividend bonanza, and that has made some of this possible.
Yes.
Because you have got that extra leeway to sort of.
But we still don't have the fine print. And Radhika, I heard you say that you don't have the fine print, but I'll add to Saurav's question here. Radhika, what about social sector schemes? Because the welfare state has continued to grow. What's your sense from at this stage of what has happened to social sector schemes, Manrega and other things? What has happened to the trend there for allocations?
Look at NCC.
I think my broad feel is that listening to the finance minister, at least, that allocations have been raised, especially towards housing. Again, this was not entirely unexpected. I think there has been a push in two ends, to my mind, especially the agrarian part of the economy. And to MSMEs. So agrarian, rural together, and then you've got MSME. So they're very clear. So social sector certainly spending would have marginally gone up. I think it has already gone up in the fiscal 25 math, which when the interim budget was tabled. I think it would have been increased probably marginally again in the final budgeted estimate. So I would think that certainly that stays. And agrarian in particular, we need to also remember that to make it more weather resistant becomes important. And this year's southwest monsoon is again another signal that it can be off to a weak start, then you can have a surplus, and we don't know what's going to happen in August, September. So try and build resilience, talk about the supply chain, food processing industry, all of that found a mention in the announcements as well.
Radhika, Sourav here, one more point I wanted to add to this, the RBI question, is that when you talk about going forward, remember, budget is only 1 year and there is continuity. We are talking about continuity, a budget for the next 5 years at least and beyond. That's why I said that this year has been special because you've got that 2.1 lakh crore. What about, do you see that there can be some roadblocks, bumps along the way as we move forward in the next year and beyond?
That's an important, observation. Certainly, I think the windfall that the government had, they were also, apart from just the RBI's surplus transfer, there was also direct taxes that actually did quite well. Also, you did have some buffer from that side as well. So yes, this dividend transfer will not happen every year. This is also because rates were going to be higher, so they made better returns on their dollar assets, for example. That might not come to pass 2-3 years hence. So I would think that certainly the way to go in a normal circumstance, it's always best to consolidate finances on the basis of better tax collections and tax to GDP ratios. But of course, not so much indirect taxes because it tends to be regressive, much more direct taxes.
Shankar Sharma, market veteran and founder of G Quant, is with us. Shankar, welcome to you. We also have Gokul Chaudhary, tax leader at Deloitte India. But Shankar, we've been waiting for you to join because at the Business Today Editors Roundtable, we've done multiple rounds of conversation on the market impact, the tax changes. Please come in and tell us your big comments as far as this budget is concerned.
I just finished wiping my tears on the massive hikes in the capital gains taxes at both levels, the long term and the short term. So, yeah, I'm astounded that the government would do such a thing, given the fact that, the election numbers are obviously a tad below what the expectations were. So I was hoping, and I'm sure many people are hoping, that they would not tinker, and I like the word tinker or tweak in India, which means a 25 to 33% increase in tax rates are called tinkering. I was hoping that they would not do this, but they have done it, and it is what it is. My real disappointment is that the last time they did something like this was 2018.
Yes.
When the party was going on quite well, post the demonetization, there was a decent bull market happening, and then LTCG was brought back to life from being non-existent for several years, from 2007 actually. 11 years later, LTCG made an unwelcome comeback, and STT did not go out, it remained. So we had two unwelcome guests coexisting, and that created a bear market in 2018 and 2019. Which lasted up until 2020 March. I think COVID saved us. Otherwise, we were headed for a multi-year bear market. I'm not saying just because of the imposition of taxes, but these things do matter, no matter what anybody says. And today I was on another channel and they said, but it's just 2.5%. But I said, I don't understand. It is the equivalent of your personal tax going from 30% to 37.5% or to 40%. Would you be happy? If your tax rate went from 30 to 40, that is effectively what the 15 going to 20 is, or the 10 going to 12.5 is. So it's not, you can absolute percentage.
You mentioned a very critical point right there, Shankar, and this is something that we discussed with you last time when you were with us on Business Today television as well. You had said that a bull cycle usually lasts about 4 to 5 years, and we are towards the end of it. Will this measure by the budget, taken in the budget, spur a bear market like scenario, something that we have been fearing?
Right.
Could that be a reality?
So let's hope not. I am still fully invested, much to my regret now. But the fact of the matter is, when markets are elevated and we are into the 5th year of any bull market, markets look for a reason to fall or reasons to correct or reasons to become bearish. Reasons can come from many areas, but here we have given a domestic homegrown reason to them. Markets on a platter. I hope it doesn't take it too seriously, but I fear it might.
Okay. Shankar, please stay on with us, because Anand Goenka, Vice President of FICCI and Vice Chairman of RPG Enterprises, one of the largest companies in its space, is with us. Anand, welcome. Your thoughts? Tax seems to have spoiled the market party, but for industrial India, there are lots of things. What do you make of some of the newer initiatives that have been announced today?
Right. So I'd say overall for industry, it is a budget of continuity. A lot of the announcements that have been made in the past are continuing, largely say infrastructure, capex, no major change, but it is a large outlay that they are going to be continuing on. Second is job creation has been a big area of focus, which is something, a challenge that we have seen where there has been a shortage of availability of skilled labor on one side and unemployment on the second. So if they are able to bridge this gap through effective skilling, that's something which is very, very welcome. Third is the comprehensive outlay of the budget, where FM speaks about 9 key priorities covering agriculture, women, and all the various sectors, urban development, Make in India, all of that. So I think that's very positive, as well as the discipline that is being maintained at about 4.9% fiscal deficit. So on various fronts, it is fairly positive. In terms of ease of doing business, the few areas that are positive is the simplification of the tax structure, as well as reduction of disputes and simpler resolution of disputes is very welcome. So I'd say largely these are the 4 or 5 big benefits that we are seeing to business.
What about share buybacks? The fact that share buybacks, the gains there will be taxed.
That's right, but that is largely a capital markets again view. It's something which out of a profit, some amount will be further taxed. But largely, if you look at the fundamentals of business.
So as a captain of industry, because Shankar Sharma is here with us, Anand, As a captain of industry, are you okay with what's been done as far as capital gains taxation changes are concerned?
I don't have much of a view actually on the capital gains taxation part of it.
Okay.
For me, I'd say from FICCI or from the industry, it's more about what is more important to make sure we are growing as a country and it is inclusive. So these are the few areas that really matter to us in industry.
I believe Mr. Goenka is a long-term investor.
Go ahead, Sourav.
Anant, Sourav here. One of the key areas which was being discussed before the budget has been that of spurring consumption and bolstering rural demand, which was clearly, depressed. Do you think the budget has done enough to sort of look at those areas and, sort of consumption coming back and therefore, private investment being spurred further?
Right. To me, I'd say rural demand has been seeing some positive green shoots in the last few months. You look at two-wheeler demand is coming back to normal levels. You look at tractor demand has generally been quite positive. So rural demand has been seeing some positive green shoots. There's been a fair amount of talk on agriculture by the finance minister in terms of making sure yields get better. We are more resilient to climate change. I think that will have some positive impact as well. And some element of housing and incentives given up on that front as well, that should result in positive change. So, and the other is on the salaried personnel, there is some further deductions that are there for them. So some possible money into the hands of the consumer, which should spearhead some demand. Difficult to say really what is going to be the longer term impact, but hopefully that will be some positive.
But the employment linked incentive scheme as well.
That's right. So that is fairly positive. The entire employment linked incentive scheme for internships, for first timers coming in, these are all new experiments and I think it's very welcome. Again, the success is to be seen, but I think these are all positive new things to try on. In fact, when you add on the new things, I'd say the entire nuclear small plants and R&D on nuclear energy, that's again something new, unexpected and positive outcome for energy security.
Anand Goenka, thank you very much for your time with us. Shankar, as we come to you, I just want to go across first to Gokul Chaudhary. He's been waiting in for some time now. Gokul, explain the big tax picture from this. Is there a grand design? Because we also had this small announcement about a new simplified tax code. Direct tax word was not used, but the things seem to smell of the same. But what's the big picture with all the changes that have been done today?
So I think the big news is the fact that the government has tried to define the fact that it's going to go and look at recasting the direct taxes code and come up with a new direct taxes code for the country. So that's the first big roadmap announcement which is there. I think also what is important is that when you look at the fine print, and we've already got a download of the finance bill and it's over 200 pages, there's a fair bit of trying to address some of the challenges that have come over the years and bothered industry. I do know that the capital markets will be hurt by what has happened in relation to capital gains tax. But if you look beyond that, the government has gone out and done the following things. It has no longer tweaked around with the angel tax and has actually shut it, which is a good thing because it used to bother. And every year there was some tweak to or the other to try and alleviate the problems, but it was only compounding them. Secondly, for equalization levy, the government has gone ahead and eliminated the equalization levy for digital e-commerce players. Third, it has addressed the long-standing demand of foreign companies that the 40% corporate tax rate applicable to foreign companies was just too high, and therefore the government has at least responded by bringing it down by 5 percentage points. Then comes the entire play of dispute resolution. The government, as was mentioned, has picked up with some innovative ideas and also tried to go back to ideas that have worked in the past. One of the ideas that worked in the past was the Vivad to Vishwas scheme, which was called the VSV scheme, and has said we're going to bring it back to try and do another round of cleanup of the litigation. The government has also gone out and said that we will improve the safe harbor regulations, which effectively means that the amount on which we will have controversy in relation to transfer price will get hopefully resolved. And finally, the government has said we're also going to increase the thresholds beyond which we go to the courts from the government side to litigate matters.
Okay, Gokul, as you speak, my colleagues, Manvendra Rajvanshi has just sent us some details from the finance bill, and Shankar, please also listen in, because this is not for equities but for real estate. The indexation benefit on property sales has been done away with. This was a bonus that was offered on property sales. It's been eliminated in this budget. And it's, Gokul, what is the impact likely to be? Because the question that is being asked is, property sellers will now consequently be unable to increase the realization and lower their capital gains. Have you had time to look at this?
Very quickly, that the thing which is there is, I think they have reduced the rate also of long-term capital gains, while they've taken away this benefit of indexation. That's one. The B, they have reduced the period of holding from 3 years to 2 years. So I think it's a bit of a mixed bag which is coming in here. So you're right, there is an impact with the indexation going away, but there's also an improvement on the
Fair
rates.
point. 20% goes to 12.5%, 3 years is 2 years. But Shankar is waiting. Shail, Sakshi, over to you.
Yeah, Shankar, Shail this side, a very warm welcome to you. I'm just wondering which part of the world you are sitting in. Is it Europe or Middle East?
Last time he was in Greece.
It's actually India, and I'm here meeting a company, and I just took a break from the company meeting to do this. So yeah, I mean, I'm still doing what I do for a living, Shail, irrespective of this rude shock today.
Well, let me just dig a little deeper as far as this rude shock is concerned. Yes, we have 4 negatives for us: increase in STT, STCG, LTCG, and of course income on buybacks being taxed. Now you have another one on real estate too.
Shail, you are sounding like Amitabh Bachchan in Sholay. You know, थोड़ा शराब भी पीता है, थोड़ा जुआ भी खेलता है, थोड़ा कोठे पे जाता है, बाकी सब कुछ अच्छा ही करते हो.
अब अच्छी बातों की बात करते हैं शंकर जी. ये बताइए, do you see interest rates actually headed lower given the way the fiscal deficit is moving and of course government borrowings? Is there a chance that debt might make a comeback versus equities?
No, I don't think so. I'll tell you why, Shail. My view is very simple. I think interest rates are too low. I mean, the real interest rates are too low in India. It's still not, I mean, the inflation numbers, I do not believe in reality are what they are. Therefore, the squeeze on the savings part of the economy is significant. If anything, there's probably no real interest rate that I know of available. It's probably neck to neck. So I do not think the government can afford to cheese off a large part of the population, which is the savings population. Stock market is still ultimately hardly 4-5% of the people in any material sense. But savers are a lot more than that. Today, we have very low real interest rates. I don't think there is a big room. I can see, unless inflation crashes dramatically, I do not see that happening either. So I really don't think we should be too enthused about a sharp cut in interest rates.
Okay. About 10 years ago, both of us were at an event in Goa, and you mentioned very clearly that Indian retailers should look at mutual funds to tap into the market. That's happened dramatically. Given this wider participation that we are seeing, is it the capital gains structure headed the way as it is on Wall Street, where you pay tax on what you make on the markets?
I don't pay any capital gains tax in the US. As a foreign investor, I pay zero income. I pay zero tax on any gains made in the US. I only pay tax on dividends, but not on capital gains. And actually, I must point out, since we are talking about that, almost no country that I know of imposes capital gains on investors, or let's say foreign investors. Okay, almost no countries. And even the domestic taxation is minimalistic. Today, with a 20% on a blended rate of 15-17% on what is not a predictable source of gains is very, very high. And I understand, Shail, that FNO is something to be sort of curbed and taken down. But why do you want to dissuade or disincentivize equity investing? We were just getting started. We know penetration is still low. Right. Okay. We need to create the so-called equity cult. Why do we need to do these things in the first place? And I was hoping, given the performance of the government in the elections, they would have actually reduced these rates rather than increase them. But obviously, I was wrong.
In fact, I will get some more pain for you from the root shock that you already were seeing from the capital gains tax. The changes will be effective from today, is what Revenue Secretary is indicating to our wires as well. So that's the information that is coming in. Shankar, more pain?
Well, I just heard something on the real estate front also. So, I mean, it's back to the same Amitabh Bachchan theory. और भी कुछ बचा है, बताने के लिए तो बता दीजिए, because see, as far as I can tell, the three broad things were capital gains. Second is the fiscal deficit coming down 4.9, but obviously it includes a big one-off, which I don't think is replicable. And the third thing is the capex budget remains flat, which has been my view for the last year and a half, that was the big driver of certain kinds of companies, the sharp increase in government capex, but that is not sustainable. And the government, rightly so, has decided to put a kind of a ceiling on that. But none of that is good news for the stock markets. So capital gains tax and a flattening of the capex number, both of those things are actually bad news for the stock market. But Shankar, talk about stock markets and not rural employment, I'm focusing only on that. So from that perspective or that narrow lens, however immoral that lens might be, I don't think there is a lot of good in this budget for investors.
Okay, Shankar, I just want to interject on the point of capex. This budget in financial year terms is already coming 4 months after a lull. No major new project sanctions, elections and everything. When we have spoken about this to government officials in the past, they say, how can you get even 11.11 lakh crore spent in 8 odd months? So why are we expecting an increase in capex in this election year budget, sir?
I mean, I completely agree. But I'm saying even if this were a normalized full year budget, I did not expect any increase because we are running unsustainably high fiscal deficit. Let's look at the last 25 years of fiscal deficit. You will find the last 3 years fiscal deficits to be absolutely the top end, barring 2009, which was a 2008-9, which was a global crisis year. These deficits have to be curbed and brought down to more normalized 3.5-4%, which means capex has to remain here or actually come down. So I agree. But all I'm saying is the markets love high fiscal deficits and the markets love those fiscal deficits coming as the result of high capex. Both those two reasons, apart from capital gains, are problematic reasons for the stock market.
Point taken. And Shail and Sakshi, as Sourav and I hand it over to you, I also want to introduce Vikram Kotak, co-founder and managing partner at Ace Lansdowne Investments. But Shail and Sakshi, the show is with you now.
Okay, before we welcome Vikram, I'd just like to make a small point, Sauravda. The IT index is in the green. It hit an intraday low of
more power to you, Mr. Bhatnagar, more power to you.
But Shankar, do you think like with IT or FMCG, only both these two sectors and consumer durables to some extent in the green, is the market flavor going to be turning extremely defensive from today onwards?
All I can tell you is that right now I'm sitting in the office of an IT company. You can see what great foresight God has given me.
शंकर जी देखिए काम तो हमें करना ही है. अब ये टैक्स के रेट बढ़ा दिए गए हैं, ये चिंताजनक है और दुखद है, लेकिन आपको हमको इसी बाजार में एग्जिस्ट करना है और क्या बैर लेके चलें किसी से. अब बताइए यहाँ से क्या, आप आईटी कंपनी में बैठे हुए हैं और एक अच्छा मूव फार्मा में भी आ रहा है. एफएमसीजी आपने कभी नहीं देखा तो उसकी बात हम करते ही नहीं. अब आईटी और फार्मा दो डिफेंसिव स्पेस जहां पर पैसा आता हुआ दिख रहा है, यहां से क्या?
ये बिल्कुल स्वाभाविक है कि जो सेक्टर क्षेत्रों में गवर्नमेंट कैपेक्स से ग्रोथ आ रहा था, वहां मुझे लगता है कि थोड़ी बहुत वहां रुकावट आएगी. एंड गवर्नमेंट कैपेक्स का आईटी में और फार्मा में कोई रोल है नहीं. तो cyclically some sectors which have been overlooked and under invested in should do well. So ये कोई सरप्राइजिंग बात नहीं है जो आप मुझे स्क्रीन पे दिखा रहे हैं फिलहाल.
All right, we also have Mr. Vikram Kotak, the co-founder and managing partner at Ace Lansdowne Investments, now joining right in. Shankar, we'll welcome him on the panel discussion. Vikram, your first quick take on the budget. Are you as disappointed as we are, because we are the stock market investors and we deal with all those investors' issues, and all of our viewers are really troubled at this point in time, just like how Shankar has pointed out?
Yeah, thank you for inviting me. I am also from the stock market community, and I fully agree. I echo what Shankar said, that we are trying to kind of curb the FNO and excess speculation and excess FNO turnover as a percentage of GDP of the world. Sorry, a percentage of the total turnover of the world, and we went and hit the short term and long term suddenly. I don't know why this thing should have happened. This is actually avoidable in my view, and I think this is very. It's not a percentage; it's very sharp. But it opens up the gate that you can increase tomorrow also. We are following the consistent taxation policy for last many years, and now we are saying next year I can do 12.5 can go to 15, or even 20 can go to 22.5. So normally we like consistent policies rather than having this kind of knee jerk happening suddenly. And also real estate side, you reduce the tax, but you actually kind of took away the indexation, which is actually a big problem for them. So these are the bad points for the market. The good point, of course, I think fiscal deficit numbers, also getting more inclusive, bringing skill in education, spending a lot on that, which is very important. I don't know how much it really goes and execute at the year end, but finally this is a very good move. And I was very disappointed with the manufacturing side of the world, which is, I think I could have expected more number on the manufacturing side, because the private capex is not picking up as it should have picked up compared to public capex. So there's definitely some more incentive required on the private side, manufacturing side. That's other disappointment. Thank you.
Vikram Shell, this side, you've been one of the longest term investors that I've had the pleasure of interacting over the last 25 years. And this shade of grey and white on your forehead is adding to that luster. Now, given this background of higher taxes and the fact that we are at super record high levels, where are you deploying fresh capital?
I think you have to start getting defensive in India right now, in my view. I think we have already kind of moving up, the markets are moving up post-COVID by average of 25-30% large cap and maybe more in the small mid cap. So we are actually expensive. And as someone was mentioning, that we are anyway waiting for some news to trigger, which can hurt the market. And this is one of the news which can hurt the market. So I believe markets are going to either have a time consolidation or a good correction in the short to medium term. IT or FMCG cannot take the market up to very different level, because the valuations are very high, and we are in a world which is slow and disturbed, right? So we cannot expect IT to really do wonders. So I'm of the opinion that markets should either have a time consolidation or a price correction, one of that for some time, because we are at the high level of valuation. Second, earning growth is likely to remain little lackluster because we are again on a high base. I believe inflation will pick up from here, and I'm not seeing a big sight of foreign investor coming in, putting large money in India. So broadly speaking, and also one thing which was pending, which was huge liquidity in the market on FNO side, which will also dry down slowly because of the FNO curve or the number of stock you can pledge on the market. So I think overall scenario, I think equity market right now, in my view, will go into the time consolidation or price correction, whichever way it is.
Let's get Gokul into the conversation. Mr. Chaudhary, at a time when India is competing with the China plus one policy, and the fact that you need to set up global centers for technology, for services, and a whole host of foreign investment needs to be brought in, what according to you are the 2 or 3 points that you would be telling potential investors into Indian FDI from now on?
I think the one big thing is the big India story. And I think while the capital markets could be a little afraid with the capital gains tax change, the larger India story is something which remains sound, because it's a country which is investing largely in the right areas, whether it's in manufacturing, whether it is in job creation, whether it's in skilling. So a number of those broader themes continue to remain consistently good for India. That's one. B, if you look at it, some of the bugbears that used to bother foreign investors, whether it was in relation to angel tax, for example, when the money was moving into more the startup ecosystem, that's been done away with. If you look at the large digital players, the FANGs, for example, from the US, they used to talk and complain about the fact that India has gone unilaterally and imposed the equalization levy, which is a digital tax, and India has done away with that piece also. The third is, of course, the piece which was around how litigation is building up in this country, tax litigation specifically. And they have tried to bring out measures to try and to somewhere restrain that. And finally, I think the concern always has been about the job creation in India because there's a huge demographic curve that's moving up. And I think the government has recognized it and has put that right up in front to try and see as to how job creation can take place, whether it's through the employment linked incentive that they put for manufacturing, whether it's for the internship program that they want to build. So I think if one looks at it, it's in some sense like a PLI for jobs that they have created, whereas the PLI previously was largely linked to capital formation and capital investments that were taking place by large industries.
Okay.
So I think there is of course an expectation that India would have done something around easing some of the foreign investment curbs on China, specifically after what we heard in the economic survey. But that hasn't still taken any announcement of the finance minister. So let's watch the space for that.
Okay. Sakshi, there's a 1,000-point uptick on the Sensex from the day's low. The Nifty is just 84 points lower now at 24,426. And the IT index, as I had pointed out, is not only in the green but rising dramatically, now 364 higher at 40,150. I think it's Vikram's presence that is sort of adding to the calmness in the market. Vikram, we understand you are angry, but within the large cap space, what looks good? And I again repeat, Vikram has traditionally been a very long-term holder of equity simply because he worked with some of the finest insurance companies and looked after their treasury. So at this point of time, where do you see relative valuations begging investors to come in and put in money?
If you have a medium-term perspective, which is 3 to 5 years from now, I think clearly the India, capex story or infra story will continue to do well. Of course, valuations are expensive, so maybe at some point of time you want to go and really dip into that. I think a lot of push on agri side and the rural side can actually kind of help the agri or consumption side of the basket to some extent. Cement we like as because that's going to be part of anyway, India's broad story, whether you have low cost housing or the luxury housing. So cement is where we are putting our money into. And the private banks is where we think the risk management consistency and the credit growth on overall level will allow them to really do well. What we are not liking is not too much of the IT. Also, we are not liking very heavy, high, expensive consumer companies on the India because there's huge amount of competition and also huge amount of there's also growth kind of normalization or I can say moderation in those kind of companies. So that's where we are a little negative. IT, metals, and high end of the consumption company where the valuations are super expensive and the growth is much lower than that. So I think these are the three areas we are not very bullish. Otherwise, we like a few of the basket where the valuation gaps are still there.
Okay, let me get Gokul into the conversation. Now, Gokul, as far as the abolishing of the angel tax in the startup world is concerned, do you think this will put an end to the funding winter and the long-standing demands of, of course, layoffs is something that has been a big problem over the last 12 months to 14 months odd within the startup world in India. Will that at least put some of the issues in the back burner?
Well, I think it was one hurdle or one friction that was a bother. That's gone away. But of course, the larger business imperatives which investors have from valuations, which they want from the larger, risk-taking capacity that they want to engage in with the startup community, those issues will remain. But I think one botheration that was there in operationalizing those investments and the risk appetite around the tax issues, that will go away. So I think it becomes easier, but of course, it's only an operational ease and does not take away the underlying desire for investors to be able to invest in the right startup community.
Mr. Gokul Chaudhary, thank you so much for your wonderful thoughts and of course the calm presence and the wonderful ideas that you put forth. I'm sure a lot of potential foreign investors into the FDI space are listening in and are very eager to get into India. With that, ladies and gentlemen, we welcome another guest and a very dear friend, Mr. Vijay Kedia. He is the MD of Kedia Securities. Vijay ji, नमस्कार, स्वागत है आपका. जिस पर आपने इतनी अच्छी कविताएं लिखी और इतना दुखड़ा गाया, एफएनओ को कर्व करने के लिए सरकार ने एसटीटी तो दुगना कर दिया, लेकिन साथ में 3-4 गोलियां हमारी तरफ भी चला दी. शॉर्ट टर्म, लॉन्ग टर्म, बायबैक, सब पर टैक्स बढ़ गया. केडिया साहब, क्या हो रहा है ये?
कौन सा गाना याद आ रहा है सर अब आपको?
बड़े बेआबरू होकर तेरे कुचे से हम निकले. तो
क्या बात.
और सवाल ये देखिए, ये तो होना ही था. मेरे को ऐसे लग रहा था कि लॉन्ग टर्म कैपिटल गेन जो है वो तो सरकार थोड़ा सा उसको ट्वीक करेगी, उसको बढ़ाएगी. हाँ, और मैंने सुबह एक चैनल पे ऐसा बोला था कि ऐसा लाजमी है. तो उसका कारण क्या होता है जी, ऐसे अपने जैसे रेस्टोरेंट्स पे जाते हैं ना, या समझिए ऐसे भी लाइफ में एक तो वर्किंग आवर्स होते हैं.
मिस्टर केडिया, 1 सेकंड के लिए आपको इंटरप्ट करूंगी. प्राइम मिनिस्टर मोदी कुछ कह रहे हैं, ये सुनते हैं.
नए अवसर देने वाला बजट है. इस बजट से शिक्षा और स्किल को नई स्केल मिलेगी. ये मिडिल क्लास को नई ताकत देने वाला बजट है. ये जनजातीय समाज, दलित, पिछड़ों को सशक्त करने की मजबूत योजनाओं के साथ आया है. इस बजट से महिलाओं की आर्थिक भागीदारी सुनिश्चित करने में मदद मिलेगी. इस बजट से व्यापारियों, एमएसएमईज को यानी कि लघु उद्योगों का, उसकी प्रगति का नया रास्ता मिलेगा. बजट में मैन्युफैक्चरिंग पर भी बल है, इंफ्रास्ट्रक्चर पर भी बल है. इससे आर्थिक विकास को नई गति मिलेगी और गति को भी निरंतरता मिलेगी. मैन्युफैक्चरिंग पर भी बल है, इंफ्रास्ट्रक्चर पर भी बल है. इससे आर्थिक विकास को नई गति मिलेगी और गति को भी निरंतरता मिलेगी. साथियों, रोजगार और स्वरोजगार के अभूतपूर्व अवसर बढ़, ये हमारी सरकार की पहचान रही है. आज का बजट इसे और सुदृढ़ करता है. देश और दुनिया ने पीएलआई स्कीम की सफलता देखी है. अब इस बजट में सरकार ने एम्प्लॉयमेंट लिंक्ड इंसेंटिव स्कीम की घोषणा की है. इससे देश में करोड़ों करोड़ों नए रोजगार बनेंगे. इस योजना के तहत जीवन में पहली नौकरी पाने वाले युवा की पहली तनख्वाह हमारी सरकार देगी. स्किल डेवलपमेंट और उच्च शिक्षा के लिए मदद हो या फिर 1 करोड़ नौजवानों को इंटर्नशिप की योजना, इससे गांव के, गरीब के मेरे नौजवान साथी, मेरे बेटे बेटी देश की टॉप कंपनियों में काम करेंगे. उनके सामने संभावनाओं के नए द्वार खुलेंगे. हमें हर शहर, हर गांव, हर घर एंटरप्रेन्योर्स बनाना है. इसी उद्देश्य से बिना गारंटी के मुद्रा लोन की लिमिट को 10 लाख से बढ़ाकर 20 लाख रुपए किया गया है. इससे छोटे कारोबारियों, विशेष रूप से महिलाओं, दलित, पिछड़े, आदिवासी परिवारों में स्वरोजगार को बल मिलेगा। साथियों, हम सब लोग मिलकर भारत को ग्लोबल मैन्युफैक्चरिंग हब बनाएंगे। देश का एमएसएमई सेक्टर मध्यम वर्ग से जुड़ा हुआ है। एक प्रकार से एमएसएमई सेक्टर की ओनरशिप मध्यम वर्ग है और इसी सेक्टर से गरीबों को ज्यादा से ज्यादा रोजगार भी मिलता है। छोटे उद्योगों की बड़ी ताकत, उस दिशा में हमारा अहम कदम है। इस बजट में एमएसएमईज के लिए ईज ऑफ क्रेडिट बढ़ाने वाली नई योजना का ऐलान किया गया है। मैन्युफैक्चरिंग और एक्सपोर्ट इकोसिस्टम को हर जिले तक ले जाने के लिए बजट में अहम घोषणा की गई है। ई कॉमर्स, एक्सपोर्ट हब्स और फूड क्वालिटी टेस्टिंग के लिए 100 यूनिट्स, ऐसे कदमों से वन डिस्ट्रिक्ट वन प्रोडक्ट अभियान को गति मिलेगी। साथियों, ये बजट हमारे स्टार्टअप्स के लिए, इनोवेशन इकोसिस्टम के लिए ढेर सारे नए अवसर लेकर आया है। स्पेस इकोनॉमी को बढ़ावा देने के लिए 1000 करोड़ रुपए का फंड हो, एंजल टैक्स हटाने का फैसला हो, ऐसे कई सारे कदम इस बजट में उठाए गए हैं। साथियों, रिकॉर्ड हाई कैपेक्स इकोनॉमी का एक ड्राइविंग फोर्स बनेगा। 12 नए इंडस्ट्रियल नोड्स, देश में नए सैटेलाइट टाउन्स का विकास और 14 बड़े शहरों के लिए ट्रांजिट प्लान्स, इससे देश में नए इकोनॉमिक हब विकसित होंगे और बहुत बड़ी संख्या में नए रोजगार बनेंगे। साथियों, आज डिफेंस एक्सपोर्ट्स रिकॉर्ड स्तर पर है। इस बजट में डिफेंस सेक्टर को आत्मनिर्भर बनाने के लिए अनेक प्रावधान किए गए हैं। आज पूरी दुनिया में भारत के प्रति आकर्षण बढ़ा है और भारत में टूरिज्म के क्षेत्र में नई संभावनाएं बनी हैं। टूरिज्म क्षेत्र गरीब और मध्यम वर्ग के लिए कई अवसर लेके आता है।
Prime Minister Modi here recounting the main themes that are running through the budget. Mr. Kedia is with us. Vijay ji, 3 या 4 बातें जो आपको बाजार के इस बजट में पसंद आई हों या सिर्फ निराशा ही हाथ लगी है?
नहीं, मैं तो कोई निराशा हाथ नहीं लगी जी। मैं तो बहुत खुश हूँ जी। मेरे को लगता था कि ये लोग बार बार हिंट दे रहे थे कि ये लोग लॉन्ग टर्म कैपिटल गेन टैक्स बढ़ाएंगे जी, और इन्होंने 12.5 खाली किया है और वो शॉर्ट टर्म को भी 15 से 20 किया है और एसटीटी बढ़ाया है। ये मेरे ख्याल से बाजार के लिए लॉन्ग टर्म के लिए अच्छा है। शॉर्ट टर्म के लिए हमको सट्टेबाजी नहीं चाहिए मार्केट में, इस बोलकर एसटीटी उन्होंने बढ़ाया और लोग ज्यादा से ज्यादा मात्रा में यहाँ पर शेयर्स लेकर खरीद कर बैठे हैं, इस बोलकर उन्होंने लॉन्ग टर्म को भी 10 से 12.5 किया। तो ठीक है, 1% आदमी भी नहीं है भाई साहब हिंदुस्तान के अंदर में शेयर बाजार में जो 1 साल से ज्यादा शेयरों को होल्ड करता होगा, अगर आप देखेंगे तो उसके अंदर। तो इस बोलकर उसका बाजार के अंदर में कोई फर्क नहीं है। सब 90% आदमी यहाँ पर सट्टेबाजी करते हैं। उसके लिए उन्होंने एसटीटी लगाया है कि आप लोग सोच समझ कर काम कीजिए। तो मेरे ख्याल से इसके अंदर में कोई बुरी बात नहीं है। और आप जनरल टैक्स आप 30% देते हो, आप शॉर्ट टर्म इन्वेस्ट करते हो तो आपको 15 से उन्होंने 20 किया। तो मेरे ख्याल से देखिए, एक बात आप समझिए साहब, इतनी बड़ी कंट्री के अंदर में 1,69,000 आदमी ऐसे हैं जो 1 करोड़ से ज्यादा की इनकम शो करते हैं। ये कंट्री चलेगी कैसे, आप मेरे को बताइए कि 1,69,000 आदमी 1 करोड़ से ज्यादा की इनकम दिखाते हैं। तो फिर कैसे में कहीं ना कहीं से तो टैक्स आपको देना पड़ेगा ना। और जो कमाता है आप उसी से टैक्स ले सकते हैं सर। जिसके पास कमाई नहीं उससे आप टैक्स नहीं ले सकते हैं आप उसको। तो जो कमाएगा वो देना नहीं चाहेगा, जो नहीं कमा रहा तो वैसे भी नहीं देना चाहेगा, तो कंट्री चलेगी कैसे। तो जो कंट्री के लिए अच्छा है वो शेयर बाजार के लिए अच्छा है। मेरे को कुल मिला के लगता है कि ये बजट अच्छा आया है और ये लॉन्ग टर्म शॉर्ट टर्म के बाद 1-2 दिन में लोग भूल जाएंगे और वापस जो गवर्नमेंट की जो पॉलिसी है उसी के हिसाब से चलेगा। फिस्कल डेफिसिट उन्होंने कंट्रोल करने की उन्होंने बातें की है, ये बहुत अच्छी बात है। इंफ्रास्ट्रक्चर में 11,000 करोड़ रुपया, जो 11 लाख करोड़ का जो उन्होंने किया, पहले भी ये लोग करते आ रहे थे, वो भी बहुत अच्छी बात है। टूरिज्म के ऊपर में भी, मैन्युफैक्चरिंग के ऊपर भी गवर्नमेंट ध्यान दे रही है। तो मेरे को कुल मिलाकर बजट बहुत अच्छा लगा सर।
चलिए, आपको बजट बहुत अच्छा लगा। मुझे ये बताइए और सभी दर्शकों को भी, सभी निवेशकों को भी, कि बजट से पहले जो आपकी बाजार में रणनीति थी उसमें क्या बदलाव आएगा बजट के बाद? अब आपके नजर में कौन से सेक्टर्स फ्रेश आएंगे इस डिप के बाद भी? जो आज हम रिकवरी देख रहे हैं, कहीं ना कहीं संकेत यही है कि शायद बाजार डाइजेस्ट कर रहा है इस टैक्स को भी। अब नए सेक्टर्स में क्या निवेश करना चाहिए, या पुराने वाले जो अच्छे सेक्टर चल रहे थे, डिफेंस, रेलवेज, उन्हीं में तेजी आएगी, या फिर कुछ और सेक्टर्स आएंगे?
तो देखिए मैम, क्या है ना, मैं तो प्राइवेट इन्वेस्टर हूँ, मैं किसी का पैसा मैनेज नहीं करता हूँ, न एडवाइजर हूँ न ब्रोकर हूँ। तो मेरे पास में तो पैसे की कमी रहती है, तो मैं बोरो भी नहीं करता हूँ। तो मेरे को तो जो पुराने जो थीम है, जो पुराने मेरे इन्वेस्टमेंट थे, वो चाहे इंफ्रास्ट्रक्चर से रिलेटेड थे, टूरिज्म से रिलेटेड थे, एविएशन से रिलेटेड थे, मैन्युफैक्चरिंग से रिलेटेड थे, मैं तो उन्हीं के अंदर में रहूंगा। और मेरे को कोई नया सेक्टर एज ऑन डेट, जब भी आपसे बात कर रहा हूँ, ऐसा कोई मेरे को नहीं समझ में आ रहा कि कोई नया सेक्टर, वो सारे सेक्टर अच्छे करने वाले हैं। तो मेरे लिए कोई नई स्टोरी ढूंढने की इच्छा नहीं है, पहली बात ये। दूसरी बात, मेरे को क्या लगता है ना कि मार्केट थोड़ा यूफोरिक है। तो चाहे आगे की पॉलिसी अच्छी है, इकोनॉमी हमारी अच्छी है, लेकिन शेयर बाजार का जो ढंग है ना, वो गिरते बढ़ते रहने का, वो एक तरफा शेयर बाजार नहीं चलता है। तो मेरे को लगता है कि मार्केट में रिटेल के इतने पार्टिसिपेशन, रिटेल का लिक्विडिटी इतनी ज्यादा है मार्केट के अंदर में, तो इस बोल कर थोड़ा सा मार्केट, मेरे को लगता है कि पर्सनली मेरे को लगता है कि थोड़ा सा सुस्ताना चाहिए, वो आगे के लिए अच्छा है। बाकी जो आपने नाम लिए डिफेंस के, रेलवे के, ये स्टॉक्स मेरी अपनी पर्सनल हिसाब से बहुत महंगे हैं, तो मैं उनमें इन्वेस्ट नहीं करूंगा। और मैं अभी मेरे पास जो इन्वेस्टमेंट है उसी को रखना चाहूंगा। नो एक्टिविटी इज ऑल्सो एन एक्टिविटी। कुछ इन्वेस्ट नहीं करना भी एक इन्वेस्टमेंट है कि हाँ भाई ठीक है, मैं पुराना संभाल रहा हूँ, पुराना बेच कर नया लूंगा, उससे कोई मतलब नहीं है।
जी केडी साहब,
ये मेरा पर्सनल।
हाँ केडी साहब, 2 बातें मेरे जहन में आई आपकी चर्चा सुनते हुए। प्रभु आप जैसे पैसे की कमी सब लोगों को दे, और दूसरी बात, बाजार कुछ नहीं सीख रहा। 400 पॉइंट निफ्टी का जो डिप था वो खरीद दिया गया है, और कुछ ही क्षणों में आपको ये हरे निशान में आता हुआ दिखेगा। हमारे और आपके मित्र श्री आशीष सोमाया साहब भी हमारे साथ जुड़े हुए हैं, और यहाँ पर वाइट ओक कैपिटल से सोमाया साहब आए हुए हैं, CEO वाइट ओक कैपिटल एसेट मैनेजमेंट कंपनी के, जो PMS स्कीम की तरह शुरू हुआ था और एक अब फुल फ्लेजेड म्यूचुअल फंड है। नमस्ते आशीष जी, अ वेरी वार्म वेलकम टू यू ऑन मार्केट टुडे। We see you smiling. Is this smile coming deep from the heart, or are you also disturbed with this unfortunate rise in short-term and long-term capital gains tax?
नहीं तो शैलेंद्र जी, एक्चुअली क्योंकि विजय सर है यहाँ पे कॉल पे हमारे साथ, तो उनको ही मैंने सुना था, उनका ही कोटेशन मैं आपको सुनाता हूँ अभी। एक बार इनके साथ में एक मीटिंग में था, मैं तो इनको किसी ने क्वेश्चन पूछा था, तो विजय जी ने ऐसा बताया था कि भाई चलती गाड़ी का बोनेट नहीं खोलने का।
क्या बात है।
तो मुझे ऐसा लग रहा है कि फिस्कल सिचुएशन बहुत बढ़िया है। चारों तरफ हमारे देश की और गवर्नमेंट की वाहवाही हो रही है, पॉलिसीज की वाहवाही हो रही है, सब बढ़िया चल रहा है। फिस्कल डेफिसिट कंट्रोल में है, रेवेन्यू नए नए आसमान छू रहा है। तो फिर 10 का 12.5 करेंगे कैपिटल गेन, और शॉर्ट टर्म 15 का 20 करेंगे, तो इससे क्या ही लाभ होगा? मतलब एक्चुअली इफ यू आस्क मी, क्या होता है कि देखिए 2018 में 0% लॉन्ग टर्म गेन था, फिर उसको 10% किया, तो तब से हमको अंदेशा था कि भाई अब ये दरवाजा एक बार खुल गया तो ये 10 का 12, 12 का 15, 15 का 18, 18 का 20 होके रहेगा। मतलब सो अब तो ये क्या है कि अब ये गाड़ी चल पड़ी है। मतलब अभी नाउ क्या है कि लॉन्ग टर्म जो है उसको प्रिपेयर होना चाहिए मेंटली कि भाई अब ये 10 का 12.5 हुआ है, तो अभी ये अगली बार 15 भी हो सकता है। सो प्रॉब्लम 10% या 12% से नहीं है। तो वो तो मैं विजय सर से सहमत हूं कि भाई जो लोग कमाते हैं, मार्केट में इन्वेस्ट करते हैं, टैक्स तो जो दे सकते हैं वही दे सकते हैं, और हम लोग सब एक सोशलिस्ट डेमोक्रेटिक कंट्री में है, तो बात सही है उसकी। लेकिन क्या है कि अब ये बढ़ता रहेगा, ऐसा मुझे फियर है।
आपने बहुत सही पॉइंट उठाया यहाँ पर आशीष जी। मैं विजय सर से यहाँ से रिस्पांस भी चाहूंगी इस पर। अभी आपके ज्वाइन करने से पहले विजय जी, शंकर शर्मा जी हमारे साथ थे और वो बहुत ज्यादा डिसअपॉइंटेड थे। वो कह रहे थे कि बस अभी मैंने अपने आंसू पोंछे और आपके चैनल पर आया ही हूँ। उन्होंने सीधा ये बोला था, और उन्होंने ये कहा कि जब दुनिया भर में कहीं ऐसे टैक्सेस नहीं होते स्टॉक मार्केट्स में, तो हम ही क्यों पे कर रहे हैं? तो इसका जवाब आप क्या देंगे?
देखिए, शंकर शर्मा जी बहुत वाइज मैन है, उनके ऊपर मेरे को बोलने का कोई अधिकार नहीं है। मैं एक बात खाली आपको बोल सकता हूँ, जो मैंने पढ़ा है कि कनाडा में 50% लॉन्ग टर्म कैपिटल गेन टैक्स है। खाली आपका बात का जवाब है कि दुनिया में कहीं नहीं है, तो ठीक है ना। तो आप अपने से नीचे वाले को देखकर आप खुश होइए या ऊपर वाले को देखकर दुखी होइए, या आपकी मानसिक स्थिति पर निर्भर है मैम। तो मेरा तो यही है कि हो वही जो सीतारमन रची राखा, क्यों करी तर्क बढ़ावी शाखा। और आप कमाएंगे तो आप टैक्स देंगे, और आप कुछ कमाएंगे तो आपको टैक्स देना पड़ेगा। आप ये समझ के चलिए।
जी केडिया साहब, जाते जाते 2 लाइनें हो जाएं इस बार के बजट की, और जो आपका अंदेशा था वो कम से कम एफएनओ पर तो सटीक बैठा। अब क्या लगता है अगले साल में क्या होगा? एसटीटी और बढ़ेगा, एलटीसीजी और बढ़ेगा, या सरकार कहेगी भाई 5 साल आराम कर लो फिर देखेंगे?
नहीं, ये देखिए बोलना मुश्किल है। मेरे को क्या लगता है कि जर्नी को एंजॉय करना चाहिए। कल क्या होगा उसको सोच के आज को खराब नहीं करना चाहिए। आज 12.5% है, आज 12.5% दीजिए। ईश्वर करे अगले साल आप 200-300% और कमाएं और 15% टैक्स दें, क्या फर्क पड़ने वाला है आपको? प्रॉफिट में से टैक्स देंगे ना, तो उसकी चिंता नहीं करनी चाहिए। आज का एंजॉय कीजिए। और चलती गाड़ी का बोनट बहुत खुली, आशीष भाई ने बताया आपको।
चलिए केडिया साहब, बहुत बहुत धन्यवाद आपका, और आपसे दोबारा जुड़ेंगे, मुंबई में आके दर्शन करते हैं और फिर गाने बजाने का एक सेशन रखेंगे।
ठीक है सर, थैंक यू सर।
थैंक यू सो मच विजय सर।
Let's get Ashish Somaya into the conversation. Ashish, 2 things. The undervaluation, the relative undervaluation of large caps versus mids and smalls, and of course this newfound enthusiasm and love for FMCG. Do you think your long-term portfolios will change their structure given the kind of momentum that we are seeing in FMCG in particular?
No, so look, actually, if you ask me, last couple of years for us at White Oak, for example, last couple of years has been such that over long period we always look at good governance, free cash flow, and then of course since we are in a business of managing relative performance, then we also obviously look at the index and see how our portfolio is positioned vis-a-vis index. But our natural preference is to buy good governance, free cash flow, and longevity or sustainability of business models. From that perspective, if you ask me, last 1.5 year has been challenging, because instead of bottom up or instead of what I am saying, market has been driven by certain labels and themes and certain just anything which becomes a label, that is what has been flying. So market has been anyway waiting for an opportunity or a reason, because market is always driven by relative valuations. So market will always look for some bend in the road or some trigger point whereby something which is relatively more attractive will get triggered, and something which has become very expensive will try to kind of take a back seat. This has been happening now for at least last couple of months. If you see last, someday private sector banks go up, someday FMCG, someday IT companies. A rotation is already underway in the market. I think that might just get amplified as we go along.
Okay. Ashish ji, will also welcome Mr. Pankaj Pandey with us. He's the head of research at ICICI Direct, which is a trusted brand and with which you can live the Ant life, that is to meet your aspirations and research-backed investments. ICICI Direct is our presenting sponsor on Business Today Television for the entire budget week as well. Pankaj ji, a warm welcome to you. The budget day with us, we've been discussing so many things as expectations in the prior week before the budget. You tell me, has the fine print really met your own expectation? How would you really rate this budget out of 10?
So hi, good afternoon. Thanks for having me. I think, see, the key expectation from budget was that ideally it should be fiscally prudent. Then I think infrastructure or capex template ideally should be maintained. And job creation was obviously a byproduct of this. And I think from a calculation perspective, while the government could have taken a higher nominal GDP growth rate, given the overall expectation that FY25 the growth could be higher, but they have taken 10.5% kind of a growth. So obviously a lot of numbers could have relatively looked better. But I think most of the major points or major expectation which was there from the budget have been met. But I think disappointment is definitely there on the capital gains front, be it short-term, long-term, and even for other asset classes also. I think real estate also will sort of get impacted if the indexation benefit gets taken out. And I think our sense is that if that sort of gets taken out, say even in real estate, probably if we are paying say 9% kind of a capital gain, probably it might go up to 12% odd. Again, I think we need to see the fine print further to sort of figure that out. Otherwise, most of the numbers are largely unchanged from the interim budget. So no major directional change is what we are expecting in our approach towards market. But yes, this long-term capital gains, be it short-term and long-term, I think is definitely a sort of a dampener, at least in the near term.
Getting you into the conversation, you have a lot of schemes backed by the central government, which is putting money in the hands of youth, whether it is via a training stipend or a initial payout immediately or interest subvention. The fact is that money is coming in the hands of say 20 years old, 25 years old youth. Do you think that's the reason why you see this sharp spurt in two-wheeler stocks because bike sales may go up?
So I think two-wheelers, if you look at, our sense is that this was the only segment within the auto pack which got impacted because of the steep hike in the overall prices, because I think from 56,000 rupee kind of a bike, the cost had gone up to 70,000 because of change in some fuel efficiency norms, plus the insurance had sort of gone up. And for a rural household to sort of absorb this kind of a hike takes time, and which is why the recovery in the two-wheeler as a pack took a bit of a time. And on top of it, last year, the monsoon was really not great. The spread was not or sort of uneven. So that's sort of had impacted. And on top of it, if you look at the export segment of or export leg of the major countries, I think that is where the challenge was that some of the countries were struggling with forex issues. I think some of them are sort of getting self-addressed, but overall our sense is that going forward, this is one segment. First half, we've seen about 11-12% kind of a volume growth. Possibly with better monsoon and with the schemes like what they've come up with, I think the double-digit growth rate could be maintained this year. But I think longer term, 5-6% kind of growth is what one can look at.
All right, let's get in Ashish ji also into the conversation now. Ashish ji, do tell us, how will investment in markets differ for you as a strategy post-budget now? Where would you put in fresh funds and where would you book out from?
So, I think that what I was just telling, in the previous question also, what has happened is that on one side, certain segments of the market have definitely got stretched because, in the last couple of years, certain labels and themes were dragging the market up. And if you look at certain other segments of the market, they were underperforming like significantly. Just take a simple example. A few days back, I was looking at this. If you take 5-year return of Nifty Total Return Index, it was say 15 to 16% compounded. As opposed to that, if you took say PSU Bank Index, it would be north of 20% compounded. And if you looked at Private Sector Bank Index, it was mid-single digits. So, that's just an example. And then if you look at financial services broadly, if you look at consumer, if you look at IT, a lot of these big chunks of the market now on a 1-year, 3-year, 5-year basis were underperforming the broad index, whereas few parts of the market were, showing like 30, 40, 50% compounded kind of numbers. So market was ripe for a rotation because, like I said, market works on relative value. Now, the trigger for that rotation can come from anywhere. And today, if there is some kind of even a small shallow sell-off, where will the sell-off happen? The sell-off will happen where people have made money. So we are not a sectoral or a top-down investor. We invest in broad blended portfolios across the market. But I'm just answering your question that I think the market is having a rotation. Second thing is that small caps, for instance, on any given day, if you see, it's not just today. You take yesterday, you take last week. On any given day, when the market corrects 1.5%, you find that small caps and mid caps correct by almost double the percentage points. So it's already underway, and I think that is for some time. There are no further triggers immediately. The result season obviously in progress, but it's mixed. It's not like standout, if you ask me. So no triggers plus certain negatives. So I think market will take a breather. That's my sense. And for safety, you should be in stuff which underperformed in last couple of years, rather than being in stuff which is already heated up.
Okay, let's get Pankaj to this conversation and shift our focus away from equities. Pankaj, if you see how the fiscal deficit number has come up 4.9% and the glide path to reducing debt as a broader percentage of GDP has been announced, do you think debt funds will make a comeback this year?
So I'm largely an equity guy and I have got a huge bias towards equities. But I think debt as an asset class does exist. But I think, see, what we have been typically advising people is that, see, while equity comes with its inherent set of risk, you get 10 to 12% kind of a correction in a large cap, and it's a pretty normal correction. But if you have to sort of make a double-digit kind of a return, I think equity is the only asset class which can offer that. Unless you are in a wealth preservation mode, the debt fund might be an option to sort of look at. Otherwise, I think equity is the only option available on the table.
Pankaj, till about 11 a.m., all of us were equity guys, and it's only after 11 a.m. that we, sort of tried to activate the other part of our market, of our brain, which focuses on debt. Let's get Ashish's view in. Ashish, the glide path in front of you as far as debt is concerned, and of course, a very well acceptable number on fiscal deficit. Do you think you will see a cut in interest rates over the next 6 months?
I think, see, our consolidation is definitely welcome, but I think a lot of this will, any possibility of rate cuts will also be informed by what happens in US and what is the way forward as far as US monetary policy is concerned. So that is something to watch out for. Second important thing on the point you made on debt, that, in the last couple of months, any which way fixed income markets have rallied. 10-year bond has rallied over the last 2-3 months. It has made returns, no doubt about it. But as far as mutual fund participation is concerned, we always tell people that you invest in debt, but invest through hybrid funds. Because if you see, anything which is say 35 to 65% in equity, and if you go to debt in a mixed asset class, like say, for example, we run multi-asset funds, which has 50% debt, 25% equity, 25% gold. So that's a better structure for your debt participation. Right. So debt is definitely likely to perform well. I have no doubt about it. But taxation is such that it makes sense for mutual fund investors to participate in debt through the kind of hybrid structure that I mentioned to you. Third thing is that everybody was hoping that fixed income investment should be incentivized. There is clamor about deposits and there is clamor about fixed income funds not growing, etc. So everybody thought that the adverse taxation of fixed income should be addressed. But how they've addressed it is to make the others also relatively unattractive. So, I think that is the point to keep in mind.
Sakshi, जब हम लोग पहाड़ों पर चलते हैं और गलती से मोच आ जाती है ना पैर में, so what people do is there is always bichu booty growing everywhere in the hills, and what they do is they beat your leg with that bichu booty. So you have more pain than what you were having earlier, and you forget the earlier one.
Oh gosh.
So that is exactly what has happened. People were hoping to incentivize fixed investment so that FDs would grow. They made life difficult on the capital goods, on the capital gains tax side. That's exactly what has happened.
Yeah.
Absolutely. Well, we'll thank you, Ashish, for being with us and gracing us with your presence on the budget day and with your pearls of wisdom. We'll get you back very soon on Market Today and on Business Today television when the fine print comes in. Let's get in Pankaj into the conversation. Pankaj, you tell us, in your sense, which are the top sectors that will benefit the most after the budget is digested in the markets?
So over a medium to long term, I think the sectors are going to remain the same. So for example, you will have capex or infra related sector which are going to benefit. So likes of infra, capital goods, the core sectors like cement and steel. And I think when you sort of look at some of the sectors where structural transformation is sort of going on, so banking and financial services is definitely there. Because I think post IBC, our sense is that you're going to see a lot less volatility in the earnings of banks in general, and RBI has been quite proactive in sort of curbing or putting curves where the growth has been on a slightly higher side, and including the real estate. So real estate, while the premium end of the market is sort of doing well, we expect that it will become more broad-based once you sort of get some rate cuts. Because mind you, this kind of a growth, what we are getting is on a 200 bips kind of a higher home loan rate. So if it were to sort of come down over a period of time, then we would want to believe that you will see a more broad-based. And then I think from a energy transition perspective, we like the power as a theme, because power as a theme looks good for a good period of time. And auto is another sector which is going to sort of witness a decent amount of premiumization. It's a better consumption to sort of buy rather than sort of buying FMCG. That is what I would say.
Fair point. Now less than an hour left for the market to close, and Sakshi, we are now just 19 points lower on the Nifty. I'm sure you will see a green tick. There is a nice deep green tick on the IT index, and this is just the right time to welcome Mr. Hiren Ved, Director and Chief Investment Officer at Alchemy Capital Management. Good afternoon to you, Hiren, and our pleasure to welcome you. Of course, 2 hours ago, this was looking like a death trap, but it seems this buy the dip philosophy has been taken by retail investors deep into their heart. Hardly any reaction, wouldn't you say, at a time when there have been such sharp increases in long-term and short-term capital gains tax? What's happening in the market?
So I think obviously initially there was an expectation that there would be no change in long-term and short-term capital gains tax. But it was not as if that this sword is not hanging in every budget, right? So I think typically you tend to absorb that and move on, because I don't think people invest or don't invest because you have to pay slightly higher tax. Obviously, nobody likes to pay higher taxes. That apart, the fact of the matter is that it's a reality, right? So I think in the longer context, if you are a long-term investor, instead of 10%, if you are going to pay 12.5%, it's not going to change your view of investing. And on buying the dips, I think, I think the way the markets have behaved in every deep correction, the markets have bounced back. And, the retail investors, they are like millions of ants, right? So when they march, their power is phenomenal. And I think that they all have been, they've understood, they've tasted blood, and they're unlikely to relent anytime soon.
Okay. Hiren sir, Sakshi this side, I want to ask you, but 12.5% could be just the starting point, or maybe 10% was just the starting point. It could be going much further from here on. Will the markets, the first time investors, the new demat holders continue to hold faith in the Indian equity story despite the continued rise in the taxes that we can now hope to see?
Well, I think for starters, let's just absorb this 12.5%. Let's not go beyond that. I hope that this is it, and there won't be any further tinkering on capital gains tax going forward. But you never know, right?
Yes.
I think for now, to me, given that all that we've been hearing from the RBI, the regulators, was that there was a concern that the market's going up in breakneck speed, and that needed to cool down things a little bit. And my sense is that they've taken a comprehensive view of capital gains across all asset classes.
Yes.
So I'm hoping that this is pretty much what they wanted to achieve is done.
Yeah.
And I think once this is digested, people will move on from here.
Absolutely, and it seems to have been absorbed by the market. The Nifty 500 at least is back in the green, and there's a salute coming in from the Nifty as well for you,
It is in the green now.
We'll see it in the green. Now, we have to live with these taxes. As they say, the only two certainties in life is death and the tax that you pay. Hiren, you've always been an alpha creator in the market. What now? Where will you deploy the funds? Two major events are out of our lives, the national elections and the national budget. Now things are back to normal as far as events are concerned. How do you see the markets from now on, and what will you do?
So I think, that last few years, we had fantastic earnings growth. And I think now if you look at the numbers in Q4 and Q1, I think earnings are normalizing. So I think it's from here onwards, it's going to be more of a stock specific market. Very difficult to argue that at current valuations, there can be more re-rating, which means that any stock price appreciation will really be built on the basis of how much earnings growth we are able to see. So I think in 2-3 days, people will forget the budget. As it happens in every event, markets adjust and move on. And I think the only durable thing that works longer term in the markets is earnings, earnings, and earnings. So I think it's back to the basics. The only thing I think from here onwards is that the kind of momentum that we saw over the last few years, I think investors now have to brace for a more normal market, right? As it used to be in old times, that you have to sit and be patient, and you can't expect that you buy today and in 1 month or 2 months you make handsome return. That's not going to happen anymore now. So it's going to be like a normal market as it used to be, because earnings have normalized, and now I think it's going to be business as usual. Long-term patient investing is going to pay off.
Hiren sir, before we let you go, any 2 to 3 stock ideas that you will have post the budget now?
Well, I think I'm not allowed to speak on individual stocks. I think that while the focus on capex continues, because they've kept the allocation the same, but people forget that they've also allocated to Andhra and Bihar for various infrastructure projects. So
absolutely,
in a way, if you add that, that also is going to be in the nature of capex. But having given a big boost to job creation and skilling, I do believe that in the long run, it will also put more money in the hands of the youth.
Yes.
And I think the youth will consume what they've been consuming. So if they have more money in their hand, hopefully they'll buy more mobile phones. They will travel. So I think you should see a little more balanced growth going forward, where selectively I think consumers' consumption will also get a reasonably good leg up.
Right, and perhaps that's the reason, Sakshi, why you see two-wheeler stocks buzzing the way they are. It's hard to keep a 25-year-old who has now 10,000 rupees per month in his hand away from a new bike.
Yes, possibly. Well, thank you so much, Hiren sir, for being with us on this very special broadcast and helping our viewers with your insight on the budget. And we'll see you very soon post the budget once it's digested fully to really understand the strategies going forward for our viewers too. Many thanks for being with us on this very special edition.
Thank you so much.
All right, viewers, we also have some more very special guests joining right in on the broadcast. We have now Sourav Mohanty, the CEO of Mirae Asset Mutual Fund, now joining in. Sourav, warm welcome. Good afternoon to you, and thank you so much for taking the time out. Well, you're smiling. What is it that has pleased you within the budget? Has it met your expectations?
I think irrespective, one has to smile.
Very well said.
See, when you see some of the things that you have in your mind and then the event goes by, you then start, like you said in your last statement, that as you start reading more into the budget, obviously you start getting more insights. My first knee-jerk reaction was something, but then once you saw that there is a sort of rationalization of all capital gains is fixed at 12.5, the view kind of normalized to the fact that maybe now this is the new norm. But one looks at continuity in every budget. So when there is any change in continuity, one gets a little, one sits back and notices. While the priority of the country has been laid down by the budget, and that's the job of every budget in this entire journey of the country. I think some parts were very well put out, and the priorities on job creation and consumption were laid out very well. I felt that, if you are in a stage in India where financialization of assets are just beginning, consistency of tax is the need of the hour. So when you tinker with it, there's always a kind of thought process which is not warranted, is my personal opinion.
Right. And Sourav, you have another reason to smile because your most immediate competitor, which is, as a lot of regulators say, taking away precious money meant for national building into speculation, F&O has been hit hard. So I'm sure mutual fund CIOs and CMOs and CEOs are internally rejoicing. I'm sure there's a party today evening.
No, I don't think we mutual fund guys should party or not party from that perspective. See, at the end of the day, investors have to be conscious of the risk side of this whole business of investing. Typically, when we start investing, all of us think it's a return generating process. But as we mature, we realize that it's a risk mitigation process. And that's where, when you look at all the powers to be finally acknowledging the risk side of the business, is a good thing and augurs well for investor protection. So it not only applies to just F&O, it applies to our industry. When you look at the last 2 years and 45% of sales going into small caps, and now practically people lapping up thematic, that brash return chasing and non-cognizance of risk also is there in our flows also. One cannot deny that. So that's something which needs to be addressed, and that, when the powers to be speak about it, always is a good thing for the end investor, and it's high time the end investor also takes cognizance of this.
Okay, and our common friend, Mr. Navneet Munot, MD and CEO at HDFC Asset Management Company, and of course the chairman of AMFI joins us. Namaste, Navneet ji. Very warm welcome to you. You have this lovely smile on your face. What's the reason behind it? We all will be paying higher taxes in the market, but are you hoping that interest rates will be coming down?
No, I think anything which is good for the economy in the long run is good for us. And I think whatever finance minister has tried to spur investments, to spur job creation, to spur income growth for large number of people is good for us. As Sourav just mentioned, that more predictability and stability in the capital gains tax regime would be desirable. I think markets are still digesting the changes that have just happened. People are still looking at the fine print to look for some of the nuances in case there are some. But overall, I would say that the budget has tried to continue on the path of SIP, and that SIP from budget perspective has been sustainable development, inclusive growth, and prudence.
Okay.
So I think that government has continued, and we are happy to see all of those developments.
Right. Navneet sir, wanted to ask you as well, for the average investor out there who's now been looking at changes in equity, now looking at changes in the realty space, in of course customs duty on some extent on gold also getting cut now to 6%. How should an average investor now look and deploy their funds and invest their funds looking at these changes? What would you advise?
So average investor should continue to focus on the SIPs and mutual funds, not only from the taxation perspective, but long-term wealth creation perspective. There cannot be a better way to create wealth by investing in a disciplined manner every month. And that is what I would advise. Of course, there are changes in some of the other, the taxation changes in some of the other asset classes, but no major change on the equity funds in particular, or hybrid funds which are equity oriented. There's no major change there. Of course, long-term capital gain tax, we would have liked to continue at the same level, but it has gone 10 to 12.5%, or short-term at 20. But as it is, we are talking about average investor investing for the long term, so it's a small change. So they should continue what they have been doing.
Okay, I'll take one question from both of you, and that is on from here on, what is your expectation of the markets? Where are they headed? Post all the major events which are already out of the way, elections, budget now digested, where do you think the Nifty is headed? And I'll ask first you, Navneet, and then same question to Swaroop also.
So I think we don't predict markets in the near term. You said all the events are behind. We don't know. There would always be some event, and we don't know. There could be some unknowns, like there are many that we have seen over the last few years. Maybe in few months' time, people will talk about US elections, or maybe the global geopolitics, or what happens on US Federal Reserve, or the interest rates in India. But from our perspective, what we always advise investors is to remain focused on the long term, keep doing your SIPs, they continue on SIP in a highly disciplined manner. What I know is that I think the budget has given further fillip to the structural growth story of India. Corporate sector should continue to do well, and those earnings growth will reflect in the market returns over a period of time. In the near term, valuations are stressed in some pockets of the market. We are seeing some correction there, while some of the under-owned sectors of the markets are seeing some bit of recovery.
Swaroop?
Yeah, I'll take it on from where Navneet kind of left off, because, when we have these discussions, and Navneet and I share a lot of dices recently, and this basic thing is that if we knew near-term markets, then we wouldn't be salaried individuals is a fact. The fact that all of us agree on one simple thing, that this is probably the only economy in the world which is going to double in the next 8-10 years. And rarely do you sit in such an economy, and we should think ourselves to be fortunate to be in this country as investors at this point of time. Now, when you look at data, and that is what worries me a bit, data will suggest that we are all long-term investors in India, no doubt about it, but we make very short-term investments, and that's the sad part of it. The good part of taxation is only you pay when you make money, right? And that's the good part of this whole thing. But when you are situated in a situation where in the next 8-10 years your economy is going to double, and some of these structural requirements like employment, suppose, was a big issue in the prior 2-3 years, is getting addressed, that means the powers to be are cognizant of retaining this journey for the next 8-10 years at least. So then all you should do is sit in the market and enjoy the ride. Now, if you're going to time the market and look at it from a taxation perspective, more often than not, you'll be on the wrong side of wealth creation. So my humble submission to everybody is align your long-term goals to your long-term investments. This is a good time to be in the country, and structurally, we do expect the markets to broad base. If you look at the last 2-3 years, the markets had run up and become expensive in some narrow pockets. When that happens, the rest of the markets become quite open for good valuation. The fund managers are aware of that. Across board, fund managers in the industry today have enough experience to take cognizant of those values. So it's a good time to continue your SIPs, like Navneet said, and please do not get out of the market, will be my humble request. invest.
Okay, Swaroop, what we'll do is we'll keep that discussion on mutual fund salaries a little later. But joining this lovely chat is Mr. DP Singh, Deputy Managing Director and Joint CEO at SBI Mutual Fund. So this is a nice little party that we are having discussing this budget. Mr. Singh, नमस्कार, स्वागत है आपका. क्या एसबीआई के म्यूचुअल फंड के फंड मैनेजर्स ने इस डिप का फायदा उठाया इंट्राडे का?
हम उनसे रोज आके पूछते नहीं है कि उन्होंने क्या किया, वो तो ये काम करते ही हैं.
क्या बात है.
तो पूछने लगे तो फिर तो मतलब हम ये कंपनी नहीं चला सकते.
जी जी, सिंह साहब, आपके दो मित्रगण नवनीत जी एचडीएफसी से और स्वरूप जी हमारे साथ जुड़े हुए हैं. मैं बस ये जानना चाह रहा था, आज शाम को पार्टी कहाँ है? वो इसलिए क्योंकि एसटीटी डबल कर दिया गया है और उम्मीद की जा रही है कि अब जो एडिक्शन बाजार में है वो कम होगा और जो 21,000 करोड़ रुपए का एसआईपी है वो अब लगता है 25,000 करोड़ की तरफ बढ़ रहा है. तो कहाँ है पार्टी?
देखिए, वो तो बजट के बगैर भी हो जाता, वो तो चल ही रही थी पार्टी. तो दैट पार्टी इज ऑन. ऐसा नहीं है कि बजट में एसटीटी बढ़ा तो ऐसे भी बुक बढ़ जाएगी. मेरे ख्याल में वो जो this comparison is not right, but the thing is, I absolutely agree with what Sourav was saying, that we have to be there for the long term. Whatever has happened is a small shock, and we are competent enough to absorb those shocks. तो ये जो हमारा बाजार का रुख है, ये जो चल रहा है, या जो नए निवेशकों को लाने की दर है, वो तो बढ़ानी बहुत जरूरी है हमारे लिए, क्योंकि अभी भी दैट इज द बिगेस्ट चैलेंज कि बहुत ज्यादा निवेशक अभी तक हमारे साथ जुड़े नहीं हैं. वही रिपीट इन्वेस्टर अपना ज्यादा पैसा डाल रहे हैं. तो नए निवेशक को लाने के लिए एटलीस्ट वी एक्सपेक्ट एटलीस्ट इन द नेक्स्ट 5 years देयर विल बी नो चेंज, क्योंकि दिस हैज हैपेंड इन द फर्स्ट बजट ऑफ द करंट थर्ड टर्म. So that is what even the 10% also has remained for a long period, and this 12.5% and 20% will continue to remain for a long period. So this is matter is settled in first year. Now everybody will get aligned, and as we were saying, the investments are not made for the tax arbitrages. The investments are made for long-term wealth creation, and that is very much evident in the last 5 years. It will continue to be next coming years also.
Okay. Mr. Singh, also wanted to understand from you what I was also asking in Navneet and Swaroop as well. Where do you think the outperformance among sectors, asset classes will now lie going forward from here? And even when it comes to sectoral deployments of funds, are there any particular themes that will outperform now?
I think the most competent person in this panel to respond to this is Navneet Manot. Me and Swaroop are on the other side. I think he will do that. But I can only say one thing, that there are opportunities in every sector. There are good opportunities in every kind of sphere, and the fund management teams in the mutual funds are competent enough to find those. And on the sector side, I'll pass this to Navneet to respond.
So Navneet ji, the shuttlecock is in your part of the game. What would you suggest to Mr. Singh?
हम सब एक ही साइड पर हैं और जी हमारे पार्टी तभी होती है जब हमारे निवेशकों का पैसा बनता है.
जी.
और जब और निवेशक धीरे धीरे जुड़ते रहेंगे और उनका पैसा बनता रहेगा तो ये पार्टी जारी रहेगी. मुझे लगता है कि यही समय है, सही समय है, जैसा स्वरूप ने कहा पहले. और जहां तक सेक्टर फंड्स की बात है, मैं एक बात जरूर कहना चाहूंगा आपके माध्यम से कि पिछले कुछ क्वार्टर्स में हमने देखा है कि निवेशकों का रुझान सेक्टर और थीमेटिक फंड्स पर काफी बढ़ा है. पिछले कुछ क्वार्टर से, कुछ महीनों से हमने देखा है कि निवेशकों का रुझान सेक्टर और थीमेटिक फंड्स पर काफी बढ़ा है. पोर्टफोलियो का एक छोटा एलोकेशन वहां होना चाहिए. अगर आपको लगे कि कोई भी थीम या सेक्टर में ज्यादा संभावनाएं हैं ब्रॉडर मार्केट से या नैरो मार्केट से, तो आप थोड़ा एलोकेशन कर सकते हैं. पर मुझे लगता है कि ज्यादातर निवेशकों को सबसे ज्यादा एलोकेशन एक डाइवर्सिफाइड इक्विटी फंड में रखना चाहिए, चाहे कैप हो चाहे फ्लेक्सी कैप हो, और अभी रिलेटिव वैल्यूएशंस हमें लगता है कि लार्ज कैप फंड्स में बेटर है, टॉप 100 स्टॉक्स में बेटर है, तो ज्यादा एलोकेशन वहां रखना चाहिए। थोड़ा बहुत एलोकेशन आपके एडवाइजर से बात करके या आपके डिस्ट्रीब्यूटर से बात करके अगर आपको लग रहा है तो थोड़ा एलोकेशन कर सकते हैं। इंडस्ट्री में काफी चॉइसेस हैं वो सेक्टर फंड्स पिक करने की, लेकिन मैं ये एम्फेसाइज करके कहना चाहूंगा कि बड़ा एलोकेशन वहां नहीं होना चाहिए। बड़ा एलोकेशन डाइवर्सिफाइड इक्विटी फंड्स में ही होना चाहिए। निवेशक क्या करते हैं, पिछले 6 महीने का, पिछले 1 वर्ष का रिटर्न देख के लगता है कि ये रिटर्न सबसे ज्यादा यहाँ आया तो आगे भी वहीं आया, ऐसा नहीं होता है। अभी अभी फिलहाल हमने हमारे डिफेंस फंड में जो SIP फ्लोज ले रहे थे वो भी बंद कर दिए, क्योंकि हमें निवेशकों को लग रहा है कि पिछले साल 125-150% के रिटर्न बन गए तो सबसे अच्छा यही है, बाकी जगह क्यों पैसा लगाएंगे। लेकिन इस तरह से एक्स्ट्रापोलेशन ऑफ पास्ट रिटर्न्स नहीं करना चाहिए।
बिल्कुल। मेरे ख्याल से सन 2023 में आपने HDFC डिफेंस फंड लॉन्च किया था 10 रुपये पर, और लास्ट जो मैंने नेट एसेट वैल्यू चेक करी थी वो शायद 23 रुपये कुछ थी। मेरे ख्याल से सबसे बेहतरीन,
ऐसा अभी हर 1-2 साल में वो डबल नहीं हो सकती है।
जी जी बिल्कुल,
लेकिन इन्वेस्टर्स को ये मैसेज जाना बहुत जरूरी है।
जी, मैं इसके बाद ही सबसे बढ़िया बात ये कहना चाह रहा था कि बावजूद इसके कि इतना शानदार रिटर्न आया है, इतनी ज़बरदस्त समझ AMC में है कि वो लोगों को मना कर रही है कि भाई तुम अब इसमें पैसा ना डालो। तो ये एक काबिले तारीफ बात है। HDFC
SIP चल रही है वो कंटिन्यू होती रहेंगी।
जी 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 जी। और खासकर नवनीत जी, मेरे को ये सवाल आपसे पूछना था क्योंकि ये 2 मेजर इवेंट्स हमारे सामने से निकल चुकी हैं, नेशनल इलेक्शन और नेशनल बजट। अब आपको क्या लगता है कि बाजार क्या सोचेगा? क्या मेरे को अब वैल्यू की तरफ जाना चाहिए? क्या मेरे को रिलेटिव वैल्यूएशन देखनी चाहिए मिड कैप, स्मॉल कैप और लार्ज कैप के बीच में, या जिस हिसाब से गाड़ी चल रही थी सरपट तेजी से वो चलती रहेगी?
गाड़ी लॉन्ग टर्म के हिसाब से देखें तो इंडिया की गाड़ी सरपट चलती रहेगी। स्वरूप ने पहले कहा कि ये बहुत कम अर्थव्यवस्थाएं पूरे विश्व में ऐसी हैं जो अपने अर्थव्यवस्था को इस गति से आगे बढ़ा पा रही है और आगे बढ़ाती रहेगी। हम $3.5-4 ट्रिलियन डॉलर इकोनॉमी से 6, 8, 10, 12, 15, 20 ट्रिलियन डॉलर की इकोनॉमी बनेंगे, और कैपिटल मार्केट्स के जरिए आपको भारत में ही ऐसी संभावनाएं हैं कि उस ग्रोथ को कॉर्पोरेट प्रॉफिट्स में कन्वर्जन हो जाता है, और कॉर्पोरेट प्रॉफिट्स का कन्वर्जन इक्विटी मार्केट के रिटर्न्स में हो जाता है, और म्यूचुअल फंड इंडस्ट्री के जरिए आपको भी वो ग्रोथ मिल जाती है। ऐसा बहुत विश्व के बहुत कम देशों में हुआ है। चाइना में पिछले 20 वर्षों में बहुत ग्रोथ हुई है, भारत से भी ज्यादा हुई है, लेकिन कैपिटल मार्केट्स में रिटर्न नहीं बन पाए। तो ये एक बहुत ही बड़ी, अगर मैं कहूँ, एक महत्वपूर्ण डिफरेंस है भारत और दूसरी अर्थव्यवस्थाओं के बीच में। बहुत अमेरिका और ऐसे कुछ ही मैं कहूँगा इकोनॉमीज और मार्केट्स हैं जहां पर ये पॉसिबल हो पाया कि इतने लंबे समय तक अर्थव्यवस्था अच्छी करे। यू हैव अ कॉर्पोरेट सेक्टर जो उस अर्थव्यवस्था की प्रगति को उनके रेवेन्यूज और प्रॉफिट में बदल सके, और यू हैव अ कैपिटल मार्केट जो कंपनियों के मुनाफे हैं उनको कैपिटल मार्केट के रिटर्न में बदल सके, और यू हैव अ म्यूचुअल फंड इंडस्ट्री जहां पर एक छोटा सा निवेशक भी उसी ग्रोथ को पा सके। सो ये एक बहुत ही बड़ी अच्छी बात है भारत की अर्थव्यवस्था के बारे में, भारत के बाजार के बारे में। सो वो अगले कई वर्षों में बदलने नहीं वाली है, तो अच्छा है कि निवेशक उससे जुड़े रहे हैं।
जी, सिंह साहब आपसे मुखातिब होते हैं, और आखिरी प्रश्न आपके लिए ये बताइए कि आगे आने वाले साल भर या 18 महीने में आपको लगता है कि डेट फंड्स की वापसी होती हुई दिखेगी बाजार में? क्योंकि जिस हिसाब से फिस्कल डेफिसिट कम बताई गई है इस साल के लिए, और जिस हिसाब से ये कहा गया है कि डेट एज अ परसेंटेज ऑफ GDP आगे आने वाले समय में कम होगी, तो क्या निवेशकों को डेट फंड्स की तरफ देखना शुरू करना चाहिए?
देखिए, इसमें 2 तरीके से देखना जरूरी है कि एक तो ये जो आप ले रहे हो, जो आंकड़े जिसकी बात कर रहे हो, और दूसरी तरफ ये है कि क्रेडिट ग्रोथ कितनी है और ग्रोथ कैसे हो रही है कंट्री में। अगर क्रेडिट डिमांड ज्यादा रहेगी और बैंक अपने ब्याज दरों में कमी नहीं करेंगे, तो मेरे को नहीं लगता कि डेट फंड में बहुत ज्यादा अट्रैक्शन आने की संभावना है। यस, कैपिटल गेन का जब कोई बहुत विजिबिलिटी होगी कि हाँ अगले 1 साल में ब्याज दरें कम से कम 1% या उससे ऊपर कम हो जाएंगी और कुछ कैपिटल गेन बनेगा, तो शायद कुछ अट्रैक्शन आ सकता है। वो भी एक सेट ऑफ इन्वेस्टर से, क्योंकि टैक्सेशन के हिसाब से तो जो पहले एक अट्रैक्शन होती थी टैक्स आर्बिट्राज था, देयर इज नो टैक्स आर्बिट्राज एनीमोर, और वो तो मार्जिनल टैक्स पे अगर टैक्स देना है तो डेट फंड्स के बारे में तो मेरी मतलब आई एम लिटिल पेसिमिस्टिक ओनली फॉर द टाइम बेइंग।
जी सिंह साहब बहुत बहुत धन्यवाद आपका, आपने अपना कीमती समय निकाला और इतनी सटीक राय दी, खासकर ये कि अब अगले 3 या 4 साल के लिए कम से कम हम लोग एक लंबी सांस ले सकते हैं। सरकार ने अपनी पहले साल में कैपिटल गेन्स टैक्स बढ़ा दिया है, तो उम्मीद की जाती है कि अगले 4 साल में नहीं बढ़ेगा। धन्यवाद आपका।
थैंक यू
जी नवनीत जी, ये अगला प्रश्न आपके लिए है। 3 सेक्टर आज चलते हुए दिखे, वो डिफेंसिव्स जो हम पिछले 30 साल से ट्रैक कर रहे हैं, फार्मा, एफएमसीजी और आईटी। क्या तब्दीली का समय आया है सेक्टर रोटेशंस में?
आई थिंक इनमें से कुछ स्टॉक्स ऐसे हैं जहां पर रिलेटिव वैल्यूएशंस बेटर हो गए थे बाकी बाजार के कंपैरिजन में, और कई फंड मैनेजर्स ने अपनी पोजीशन वहां पे बनाई है। लेकिन मैं कहूँगा कि हमेशा एज ए हाउस हमारा तो हमेशा से ज़्यादा विश्वास बॉटम अप स्टॉक पिकिंग पर ही रहा है, ज़्यादा मैक्रो और सेक्टर कॉल्स पे नहीं रहा है। तो कई बार ऐसा हो जाता है कि कई बार एक बहुत अच्छी एक मैक्रो पिक्चर होती है कोई सेक्टर के बारे में, लेकिन फिर वैल्यूएशंस भी बहुत बढ़ जाते हैं। अभी कुछ ही क्षणों पूर्व हमने डिफेंस की बात करी, हमें लगता है कि लंबे समय में बड़ी संभावनाएं हैं उसमें। सरकार का बड़ा ध्यान है, चाहे आज बजट में उन्होंने ज्यादा उसके बारे में बात नहीं करी हो, लेकिन कई स्टेप्स गवर्नमेंट ने उठाए हैं पिछले कई वर्षों में जो सेक्टर के लिए अच्छे हैं। लेकिन फिर कई बार ऐसा हो जाता है कि वो वैल्यूएशंस भी कई बार फंडामेंटल से आगे चले जाते हैं। तो ज्यादा जरूरी है कि मैक्रो स्टोरी नहीं देखें और इंडिविजुअल स्टॉक पिकिंग पर ही ध्यान दें, जहां पर हमारे जैसे फंड हाउसेस अपनी निगाह रखते हैं।
Okay. Navneet ji, we'll also welcome Mr. Dheeraj Relly on board. He's the MD and the CEO of HDFC Securities. Dheeraj, welcome to you. Thank you so much for taking the time out. Okay, tell me your first reaction. We've been seeing all smiling faces, something which we were not anticipating from all the market guys. So your sense after the big budget blow has come into the equity investors?
दूसरी बार वर्चुअली धीरज को मिल रहा हूँ, इसलिए मैं स्माइलिंग।
So we've been meeting virtually on various channels and
अब देखिए यही टेक्नोलॉजी का फायदा है।
करेक्ट और शायद इसीलिए टेक्नोलॉजी चल रही है आज। धीरज जी।
So I think the big takeaway for me post budget is that there is huge liquidity in the market, and we are seeing that markets participants are willing to take anything and everything on stride. If you look at this, had there been few years ago this kind of an increase in the capital gain tax, STT increase, I think we would have seen bigger knee-jerk reaction in the market. But how markets are taking this on the stride is something to demonstrate there is an absolute maturity among the investors, and there is a liquidity in waiting to grab any corrections in the market. That's my post-budget reaction. But overall, I think it was quite a balanced budget. If you look at it, it was clearly a continuity of the old policies, similar kind of allocations for the rural 2.66 lakh crore or 3.4% allocation to the infrastructure and capex side 11 lakh odd crore. So and that too, these kind of spends will be available in next 8 months only. Mind it, this is not for a full year, because in last 4 months we've seen hardly any spend, and now this will be an accelerated spend in the next 8 months, because we'll have another budget in the next year, beginning of next year for the fiscal 26. So that way I think it's good, and glide path for fiscal consolidation will augurs very well for mid to long term. I think Indian rating upgrade is due. This will pave path for the India's rating upgrade as well. I think this will make the case for rating upgrade even more stronger.
Right. Navneet, before we let you go, the final view on US elections, it's pretty much sort of baked in that Mr. Trump is going to make a comeback. How does that impact India in terms of the policies that Mr. Trump is highlighting, which is inward looking, which is raising tariff barriers, and which is sort of trying to get America better again, but at the same time becoming isolationist? How will that impact the Indian economy?
So first of all, a week is a long time in politics, Shailendra, so we shouldn't give our verdict on the election yet. I think there is going to be a relatively more closer fight than what people thought a few days back. With the change in the Democrat candidate. The second thing, we have heard Mr. Trump when he was in India during his last presidency, as well as we have heard Mr. Biden, that the relationship between India and US is one of the most defining relationship of this century. I think given the geopolitical realignment in the world, India is emerging as one of the most, I would say, critical partner for almost every power in the world. And in this part of the Pacific, everybody would like to see India growing economically, India growing strategically, India growing on a world map to counterbalance the rising influence of China. Given the democracy, given the demographics, given the demand in India and the over the next several years for almost every large economy as well as all large businesses in the world, India is very, very critical. India is very critical. We will be the largest supplier of new consumers to the world. We'll be the largest supplier of labor force to the world, both virtually, I mean, to provide services as well as provide cheaper goods in terms of producing here. So I think India is going to be strategically very important for almost everyone. And I think India keeping that flexibility, I mean, that strategic flexibility by ensuring that we remain a good partner, a good collaborator with everyone while ensuring that our interests are protected and India's economy does well. I think, yeah, it augurs well for India in the long run.
Right, Navneet, before we thank you, let me just send you a virtual ghee shakkar for this lovely comment. You take very good care of your health, so you're not going to eat it.
Thank you.
We live this in this technology-led world, which you and Mr. Gelly just pointed out. So, a virtual ghee shakkar to you for this lovely comment on US-India relations.
For us, the ghee shakkar is always when our investors make money.
Wonderfully said. Thank you so much, Navneet, for being with us on the show. We'll continue the conversation with Dheeraj now. Dheeraj, also wanted to understand from you, post this budget, how will you devise the strategy in investing in markets differently from what we were doing before? Does anything change for you? Do the sectors change? Do the stocks change from large caps or the mid caps, the deployment right there? How would you really advise an average investor right here? What would be prudent to do in the markets now?
I think we have all witnessed in last year or so euphoria in certain sectors where defense, PSUs and some of the other sectors have done exceptionally well. Some of the stocks have performed 100%, 200% and are already at a stretch valuations where some of them are at 80 to 100 PE multiples. Those are clearly an avoid at this stage. And my take is that we've seen some tilt or some focus on the rural economy. Though I'm not saying that tomorrow morning all these spends will change the demand in the rural economy, but we will see structural green shoots coming in the rural economy because this spend and good monsoon. I know some participants have expressed concerns on the monsoon, but my take is that we still have another 45 days to see the monsoon, and IMD is quite bullish on the monsoon piece. So my take is that the rural spend is one thing that will come up very well. State governments will also increase their focus on rural spend. So some green shoots will be visible from the third quarter onwards. So investors should look at the sectors like FMCG. I think consumer staples have not performed well in last 3 years. Their valuations are reasonable. Consumption in India have been a secular story, and the way employment will increase, skill building will happen, and some green shoots coming from the rural space. That's one space where people are under-allocated. If they are under-allocated, they can increase their allocation. Also, my take is that even in the discretionary space, that story will continue to do well. There were talks about the tourism and so I think those are the sectors one can look at it, including one more space, that is BFSI. Large cap banks haven't performed well. So the NPAs are at all-time low, and we are seeing good credit growth also, though deposit growth has been somewhere a bit challenging, but this would balance the equation. And my take is that one can look at BFSI, particularly large banks also.
Okay. Well, on that note, thank you so much, Dheeraj, for being with us on this very special broadcast on the budget day and sharing all your views for all the strategies for all our viewers post the budget as well. All right. We'll also get two other special guests now with us joining in. We have Mr. Sourav Mukherjee, the founder and the CIO, Marcellus Investment Managers, now joining in. And we also have Mr. Chakri Lokpriya, the managing partner at Red Strawberry LLP, joining right in. Warm welcome to both of you, and thank you so much for joining in for the last 20 minutes on trade as far as the markets are concerned. Sourav, let me come to you straight away and ask you a two-pronged question. We saw the reaction on the Lok Sabha elections day on the markets. The markets crashed. They took just one day to recover most of the losses. Today, they've managed to digest the negative news on taxes in just about a few hours, and they're back into the green as well. How are you looking at the market setup post the budget and the announcements?
I thought the market digested the good news because the market expected to get a whack on its head for the wild amount of speculative activity we've had in our country. It's not 80 million people are registered to pay income tax in our country. There are 150 million demat account. And the F&O volume especially beggars belief. So full marks to the FM for tackling the bull by the horns. No pun intended here. She's tackled the bull by the horns, jacked up F&O tax, jacked up STCGT, and the long-term capital gains tax is a warning shot, I suspect. The long-term capital gains tax is a warning shot to the promoter class, in fact, to people like me, saying, if you don't use your business surpluses to grow your businesses, if you keep pumping in your business surplus into the stock market, then this 12.5% will soon resemble the corporate tax rate, thereby removing any arbitrage that the business community has. At the moment, the business community enjoys a lovely arbitrage.
Yes.
The 10 percentage point gap between the corporate tax rate and the LTCGT rate. I think the FM's given a veiled warning to people like us, saying invest in the country, create jobs, get on with it, don't dole out dividends, don't do buybacks. So full marks to her. Brave budget, and I think the right budget at the right time.
Absolutely. Good afternoon, Sourav, and a warm welcome to you, Chakri. Sakshi, what's really happening is that dozens of companies are raising QIP money, and large part of that money is actually going into family offices and getting rooted back into equities. It's sort of creating that jobless growth kind of a scenario where markets are booming, but the real economy and real jobs are not clicking as they should have been. Chakri, you're a stock picker. A very warm welcome on market today. What do you make of the budget and anything that you shopped for in the last 4 hours?
Good afternoon. Thanks for having me. I think, the budget, by keeping the fiscal deficits in order and balancing out the spend across various sectors, agri also gets some infrastructure, you kind of maintain it. No real big growth in defense, railway, but it's all well maintained. But there is one point which I kind of quite feel deeply about is, equity is risk capital. Risk versus fixed income is not risk capital. And therefore, equity around the world is taxed at a lower tax rate. And to lower the difference in tax rates between a risk capital and non-risk capital ultimately does take away some primary capital from the market. Now, a market is made up of all kinds of investors. There are speculative investors, there are long-term, short-term, but all together create a price discovery, and that price discovery is used for capital formation, whether it's a QIP. QIPs are used for good sources, capital expansion purposes, and then further on capital raising. So I think, one, an ease of doing business should take into account that a lower tax rate for equities is important for capital creation.
Okay, Sourav, let me get you into the conversation. Do tell me, you speak to a lot of foreign investors. What have they, assessed within this budget? Will this budget, propel some further inflows from the FPIs within the Indian markets, or will they still be slow and steady?
I think you've seen since 4th of June. Since 4th June, you've seen a clear trend of FPIs returning, and it's also clear that they're returning via the sorts of stocks that they've historically liked, which is consumption-oriented stocks, private sector banks. To the extent that the FM today also showed her cards by jacking up RevX, she increased spending on the poor, on rural areas, on employment. She did not increase capex compared to the interim budget. I think that shape, that fiscal expenditure shape, will also please the foreign investor. The foreign investors are reasonably reluctant to invest in PSU capex plays. They're far rather invest in consumption or private sector banking or private sector financial services plays. And to the extent that the FM is suggesting that this is the beginning of a consumption recovery in India. Remember, consumption in India last couple of years has grown at a 20-year low. So to the extent that the FM is suggesting that the government is in the mood to reinvigorate consumption, I think that will further boost FII sentiment. And I think we'll continue seeing the return of FII capital, which began on 4th June, and I think will continue in the coming months.
Sourav, you've always eschewed staying away from momentum themes in the market. Given the fine print of the budget, is there any sector that makes itself attractive to you? Also the fact that these numbers, especially the capex part, will be there for 8 months. So 11.11 lakh crores is not actually flattening out of capital expenditure, but it's sort of maintaining it, but on a reduced number of months.
Yeah, so I would say the one piece that we'll have to sort of join the dots on is, to what extent is the government minded to juice up pro-poor construction? Because they broke that spending up. Some of it, I think, goes into the rural budget, which was increased by 1.25 lakh crores. Some of it goes in the urban area housing spend, which has been doubled. And some of it, I think, is linked to women. I think they made an announcement that if a woman buys a house, there is a lower expenditure. I think if we join the dots on all of this, and I haven't done this piece properly yet, if we join the dots on all of this, I think there's a massive boost being given to small ticket housing. Small ticket housing has really struggled in the last couple of years. 20 lakhs and below home loans have really struggled to grow at a time when for 50 lakhs and plus home loans are growing at 25% plus. I think 20 lakhs and below has barely grown at 10-15%. I think the small ticket housing space has been given a fillip between the lines, and therefore plays on building materials, especially inexpensive building materials, should do well, and perhaps affordable housing. Companies that give home loans of 5 lakhs, 10 lakhs, 15 lakhs potentially stand to benefit as well.
Okay, Chakri, let me get you in right there. You tell me which are the top sectors that will perform from here on for the next 6 months in 2024?
Affordable housing does benefit indeed, and the valuations of the companies in those areas clearly are also looking okay. And also importantly, in terms of affordable housing, also creates a lot of employment with the companies which make right from the various building materials to across the entire sector. And then it also the allied sectors like cement, etc., which has now become a volume game with loss of pricing power. They will also see some kind of an uptick. And incrementally, as far as capital spending, I think largely it has been more or less in line with expectations, or slightly less. So I think that spend has largely been maintained, which is very important, clearly, for economic growth and for FDI to come in. They need to show infrastructure spend, which is necessary for companies to become, for foreign companies to come and pump in FDI.
Okay. Sourav, if you were to, gaze into your crystal ball or look at the debt market from a 6-month point of view, do you see interest rates coming down given the glide path of debt as a percentage of GDP and of course a very amenable fiscal deficit target of 4.9%?
So look, I mean, from a government perspective, she's done her level best to throttle off, reduce the government borrowing requirement. Encouragingly for India, inflation in the Western world seems to be under control. The Fed seems to be on the cusp of rate cuts. The only fly in the ointment is food inflation. Yes. The bulk of our inflation in India is food inflation. And ironically, the pro-poor measures in today's budget would further stoke up food inflation. Now, the chief economic advisor did suggest yesterday that the RBI shouldn't look at food inflation, but I doubt the RBI will be as charitable as that. So whilst I would love to believe that rates in India will come off by 100 bips in the next 12 months, my sense is that there will be rate cuts, but far more measured than perhaps people like us in the stock market would like them to be.
Would that also mean that somewhere maybe 12 months in the horizon, you will see equity returns tapering off and returns from high quality debt rising? I
think if you break the stock market into low quality expensive stocks, I think the returns of that have already started tapering off, right? Okay. We've seen a bizarre rally in the last 2 to 3 years in low quality names which are trading at 100, 200 times PE. So I think that story is already over. Paradoxically, because of the junk rally in the market, high quality names trade at the same multiples as they did 5-6 years ago. I think that piece continues, especially because many of those stocks are driven by consumption and private sector investment. So if you break the market into two parts, the low quality names, I think the rally is already done. In a way, 4th June was the high water mark for the low quality part of the market. And the quality names, which used to do well pre-COVID, did well in the first year of COVID. I think their turn in the sun comes back after 3 years in the sidelines.
Okay, Chakri, how about stock ideas post the budget? Where would you think that the money flow will, get into now? Would you like stocks like ITC which are rallying 6%, or would you continue to be with the stocks which have been in momentum thus far?
This budget clearly, of course, aside, capital expenditures and infrastructure spend is essential if you want to have any kind of, if the country needs to have any kind of meaningful FDI. And so that and the various allied things. Now, FDI can come in not just in manufacturing, but it can come in various high-tech sectors as well, all of which requires infrastructure, which is still inadequate in India. It's an emerging, and that's why it's called an emerging country. So I think, that aspect, I think still there are enough stocks to look at. And yes, now, because the market has run up so much in the last couple of years, short-term traders, not just short-term traders, short-term investors would also kind of be more measured in their capital allocation or change their capital allocation, which will moderate returns until we see an earnings pickup for the overall index levels. That earnings pickup, I think, is a bunch of interest rates have to come down, private capital formation has to happen, and for all those things is still a work in progress, which will hopefully happen not in the next couple of quarters, but probably in the year after.
Okay. Sourav, our last question to you. Do you think this is a bit of a masterstroke from the finance minister? She's doubled the STT. And deep down, all of us know it's an addiction to trade on the derivative side. So you have higher revenue. You've sort of ticked the box in making it a little more unattractive. And yet, you enjoy both sides of the equation.
I mean, look, you're making it sound like cigarette taxation. I hadn't thought of it like that, but that's a nicely thought through point, Shail. I suspect there's an element of that in it. Yes. Remember, they kept the CapEx spend constant. Yes. They jacked up RevX. They needed to finance it from somewhere. And to the extent they didn't increase the cigarette levy, they increased the new cigarette, which is F&O trading. Yes. So there is an element of it. But I do believe that beyond the fiscal gain that she might get out of this, she is sending a message. SEBI has also sent a message that if F&O trading does not throttle off in our country, then there'll be other measures on the way to reduce the wild surge in speculative activity that we've seen in the last couple of years.
With that, ladies and gentlemen, we'll thank both guests and happy hunting to both of you, Sourav and Chakri. I'm sure the fine print will give us more stock ideas than what the speech has, and we hope that all your investors make supernormal money in 2024 as well.
Thank you very much.
Thank you.
With that, ladies and gentlemen, Sakshi, what a day it has been. From a low of 24,074, we have 24,472.
Correct.
So a 400-point rise, and for a very brief moment, the Nifty did turn green.
Oh, absolutely. And, we actually saw the gold stocks, Titan, rallying sharply. It's the top mover on the Nifty. ITC following suit, 6.5% higher for that one. Tata Consumer Products up 4.5%. Adani Ports, NTPC, of course, with that JV announcement on the thermal power announcements, that's propelling the stock higher. IT stocks for sure. HCL Technologies, Infosys, both up and about. Within the F&O space, Coforge also taking higher in trade. Dr. Reddy's, Eicher, Britannia, these are some of the other movers. So definitely it's the FMCG space that garnered all the attention today. 3% higher in trade. Consumer durables followed closely, 2%, 2.2% higher in trade. Media stocks, IT, pharma, auto index. That was the space that buzzed in action today. Within the F&O movers, it was Coforge, Torrent Pharmaceuticals, stocks like ITC, Titan, Tata Consumer Products, Torrent Pharma, MCX also rallying in trade, and also Adani Ports. On the losing side, however, in the F&O space, you have REC that declined by 3.6%, Indian Railways Catering, that's IRCTC, Vodafone Idea, Nalco, Godrej Properties, BEL as some of those laggards. Within the Nifty as well, we did see at least more than half of the Nifty stocks dragging in the red. 3.3% lower for Shriram Finance, L&T, Hindalco, Bajaj Finance, and oil and natural gas also down in the red. But within the broader markets again, we did see some moves coming in on several stocks within the pharma space, the agri space, construction space. Those were the stocks that were garnering attention, and of course the jewelry space. So Thangamile Jewelry ends 8.5% higher in trade today after that customs duty reduction on gold. Now you do see MTNL continuing to rally, almost 10% higher is where it is ending the day at. When we look at some other names, of course, jobs, that was the starting point of the budget, and you see TeamLease Services up by about 12.5% in trade. Indian Hue Pipes, that's up 12%, and several other stocks as well, Shailendra.
Yes, actually, the Indian Hume Pipe story is the fillip to housing. You need pipes to transport water from place X to inside homes, so that's the reason why it's working. But clear winners, ITC, no increase in syntax, and of course the fillip that you see coming into farmers, therefore tobacco will be benefited, and therefore ITC. We'll see this one scaling record highs fairly soon, and it's the top performing stock in the Nifty space. Titan, this was something that was hit by rising gold prices. Remember, Sakshi, the management was with us, and they had clearly mentioned that rising gold prices have hit. So a reduction in basic customs duty makes jewelry a little more affordable. I'm just wondering whether Sakshi will go directly from office to Titan's Tanishq store, or will that be for the weekend?
Well, it's going to be extremely expensive. The gold prices are still very high, and that price needs to reduce for me to go there and visit the jewelry stores. Senco Gold, also a new entrant, that's up 10% as well in trade. So a lot of analysts have been keeping a very keen eye on Senco Gold as an alternative to all the stocks that have been existing and rallying in the gold space up until thus far. But viewers, that's the screen for you. In front of you, we do have a flat Nifty close, 0.1% lower in trade, 24,476, a very sharp bounce back from the day's low. So the negative is digested on just the day, and the markets are abuzz with a lot of liquidity. Retail investors are looking at the long growth story of India, and that equity markets will be best reflective of the Indian economy's growth, and therefore the markets are unfazed with the higher taxes, which is definitely an indication of mature markets, retail investors really betting on the long-term story, Shailendra.
And Sakshi, another clear winner is, of course, the pharma space. Relatively mediocre valuations compared with the broader market have propelled money coming into such stocks. Torrent Pharma, 4% higher, 31.51. The large caps, whether it's Reddy's, Cipla or Sun Pharma, have also shown fairly smart gains, and of course AstraZeneca taking it away. The top gaining stock on NSE 500 today is from the pharma space. So all told, ladies and gentlemen, two major events are out from our life, which is the national elections and the national budget. Now there is some kind of sanity which should get into markets and market valuations. We may be looking at a time correction, if not at a price correction, because the price correction has been digested by the markets. 24,074 somewhere like 12:30 p.m. and we've closed at 24,476, an uptick of 400 points. With that, ladies and gentlemen, Sakshi and I will call it a day. But thank you for watching. I hope it was as interesting for you as it is for both of us. And from our team and our side, please do stick on to Business Today Television. There is lots in the pipeline.
And then the first timers will be put through that learning curve, and this will help them to acquire skills so that they become fully productive. This kind of a subsidy giving, one, you give the first one month's salary, two, you're also giving both for the employee and for the employer subsidy. So the applicable person for whom it is being given may even draw a wage up to 1 lakh rupees. But to the extent of 15,000 is what you're giving as a subsidy. The installments, as I said, for the first 1 month wage that you want to give will be done over 3 installments, direct into the first time employee's account. One compulsory measure that we are bringing in there is to make sure that the employee undergoes online financial literacy course before claiming the second installment from the government. So he may be a qualified engineer, he may be a diploma holder, he's a first time employee in a office, he becomes a first time employee and the employer also claims that he's been recruited. We try giving him the 15,000 rupees. He may have a salary of 1 lakh, but up to 15,000 rupees is what we are going to give. And in that, if you're giving 3 installments, the first installment will be given. But before he draws the